Good morning. Good morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Monday, the 30th. Tomorrow's Halloween. We got about 10 minutes to go for the opening bell. McDonald's reported. Good comps. Looks good. That's probably going to be in play today. McDonald's. Let's take a look at McDonald's real quick.
And I think taking the eye off of the ball of earnings, which by and large have been pretty good. And then I would probably
McDonald's. All right, so McDonald's in play.
the wall seems to have broken a bit on the Magnificent Seven, at least from a stock price standpoint. I would argue that their fundamentals are still quite strong, cash flow is quite strong.
It's up $6, 261. So we got this pivot right here at 262.56. McDonald's is trading $1 below this level, just shy of $1 below this level. That's probably going to look pretty good. McDonald's.
I like the ranking also. I think putting the Apple event in there probably is maybe an underappreciated one. Maybe just to get one out of the way that's not on the list before we come back to those, or at least not in the top two, which I also agree with, is that despite the seriousness of the humanitarian element of what's going on in the Middle East, it seems like the market right now is not really moving based on that. Maybe on the margin, but with crude oil still below 90 bucks and kind of stuck at 85, John, can we put that event kind of to the side as a major catalyst for markets?
Well, we wouldn't, that's for sure. I mean, our team here has
Good morning.
typically had a
Hmm.
goal for those black swan type of events, and have come to the realization that although we're really smart people are smart enough to know we don't know what the future holds. And that's how we think about gold within a portfolio. And we would continue to have that position and think that gold is attractive here, despite the rally for the year, despite where interest rates are, because there's way too much uncertainty. And to think that this situation in the Middle East is over is foolhardy just because oil prices have remained range bound. I think the market in the future, we talk a lot about the inverted yield curve in the bond market. Well, the oil market is inverted. Okay, prices of oil today are higher than where they are in the future, and that's the reason why I think you see oil prices.
Okay, so up 27. We're off the best levels. The pre-market session futures. We were trading up there earlier this morning at 41.70, right around 70, 41.69.
The energy super majors in particular have really caught religion in terms of deploying capital to shareholders.
41.84. That was Friday. Okay, so what was it? 3 o'clock. 3 o'clock candle. All right, so 3 o'clock is down there near 41.58. We're at 41.65. All right, so we'll see what the markets, how they start out. If we hold this level, 41.65 is a major resistance level. We're right at that level right now. Futures, S&P 500, 41.65 is resistance on the cash, 41.65 cash, not futures. Okay. McDonald's. We wanted to keep an eye on this. McDonald's pre-market. Okay, so a little fade right now. 262.50. Let's say 262.75. If McDonald's gets above 262.75, we could see a run there. Just watching level 2 and time and sales. It's moving, but it's not like really active. Got some pretty big bids coming in. 500,000 shares, 50,000 shares. So we're starting to get a little move on going into the opening bell. At the offer.
I can't speak to Apple particularly. We own shares of Apple.
All right, SoFi was also
Your $3 trillion market cap.
moving higher before. Let's see what SoFi, that's in play. Let me just write these down.
Earnings growth, but also where inflation and interest rates are. And if you're just saying, well, today's valuation relative to history, a stock trades at X times versus previous, we're in a new regime. Clearly, we're in a new regime where interest rates are going to be higher for longer. Now, will they stay where they are today? I don't think so. I would assume that 6 to 9 months from now, the economy is going to be significantly slower there than where it is today. And I think the bond market is doing some of the Fed's work here for it. And that in the future you will have lower interest rates, but they're clearly not going back to 2020, 2021 levels. They may not even go back to 2014, 15, 16 levels. So you will have a higher level of interest rates here. And how do valuations get recalibrated on higher inflation and presumably higher inflation compared to where we were? So when you look at the Magnificent Seven early stocks, their relative valuation has been significantly higher than where the stock market has traded historically and to where the rest of the world is. So how do you get multiple expansion? How do you get PE? How do you get the price to earnings multiple go higher if on some of these stocks that have outperformed, if they don't get it from earnings growth compared to where the rest of the stock market is? I mean, if you look at Apple in particular's earnings growth, if you exclude the amount of shares they have bought back over the past 5 or 6 years, Apple's organic revenue growth is not overwhelming to be trading at, call it 30 times earnings or wherever it is today.
Yeah, good point. And Isaiah, the segment, very logical and a really good framework, John. Thanks a lot for sharing it with us. Appreciate the thoughts.
Thanks for having me on.
As always, yeah. John Tree, portfolio manager, Tocco Asset Management. Really good stuff out there for John. Makes a lot of sense. And industry management, too, for what's been unfolding and where geopolitics are showing up. And right now, we've got an update, too, for us just after that conversation.
All right, just watching McDonald's going into the open. We got Amazon taking off. Amazon.
Also reached a tentative deal with the United Auto Workers. Got all the details we got for you right now. Maybe the stock waiting for some more as well. The insurance did take a bit higher here. On the right corner of the screen there. Not much talked about just yet. We go back to our opening bell. And a lot of stocks to get here. And a lot of tech talk mixed into it too.
Okay. Let's get ready for the opening bell. We got less than a minute. All right, as Woody's starting to move. Okay, Bitcoin is just below 35,000. We'll keep an eye on Bitcoin for potential breakout of last week's highs. That's a possible trade there. Bitcoin. Tesla's higher. Okay, let's get ready for the opening bell, folks. And we're open. Okay, Apple gapping up. Apple, Snowflake, all the FANG stocks are up. Shorts covering. Meta's going.
High took alert plus 800.
All right,
Extreme
VIX.
high took alert.
All right, IWM. Watch IWM. IWM's on the move. Okay, McDonald's, a little dip there, a little profit taking. Oh boy. S&P. Okay, S&P gapping up. Let's give it a few minutes. All right, IWM looking pretty good. Okay, IWM. Okay, IWM. It's still in a downtrend, so just keep in mind that you're trading some mean reversion here on IWM. You could see 166, that's the 9 EMA, and then the 21 day is at 169. Okay, so starting to see a little profit taking. All right, we got a gap up in all the FANG stocks. Many of them were lower last week.
So, in other words, maybe see if it holds a little bit here before jumping on. All right, let's bring in Caroline Woods. Let's talk some earnings. We already have some out this week.
Amazon.
We're going to hit two of them that on the surface seem very different. SoFi and McDonald's. But there might be a student loan working at McDonald's, Joe Tenure. I'm not going to make it, though, Caroline, because that wouldn't be very nice. And it's Monday. SoFi's up 10% right now. Let's start there.
Yeah, SoFi poised to be a big winner today, as you said, up about 10%.
SoFi up big.
Bottom line beat. SoFi also gave
Extreme high took alert.
pretty upbeat forecasts, and the resumption of student loan payments definitely helping to drive these earnings and the stock higher today. In terms of the actual numbers, posted a narrower than expected loss of 3 cents per share. The expectations were for a loss of 7 cents per share. Revenue, meanwhile, rose to $530.7 million. The expectation was for $516 million.
All right, we got a nice rally so far.
Student loan originations,
Okay, SPY looking pretty good.
$919 million, thanks, of course, to the resumption of student loan repayments. Personal loan originations jumped 38% from a year before to $3.9 billion.
S&P
Originations were up 64%.
4165 is resistance. We're just below that now on the S&P. Futures are already at 4171. Cash is at 4151. So we're $20, 20-point difference there. Really had a good time on Friday. Thank you for your support. My daughter really loves Duke. Her father likes Duke too. nice campus. All right, so just waiting. We're just continuing to blast higher here. Amazon on the move. Amazon.
So following the cash equity open first time this week, your stocks are extending their gains. Nasdaq's up about 1% now. S&P's up around 0.9%.
Now it's trading at $7.75, but an impressive move nonetheless.
Yeah, definitely. Hold its own here.
Okay, we got a nice bit of short covering. I would anticipate it's short covering and not like a new push to new highs just yet. Okay, so we had a lot of selling last week. We came right down to a put wall at 410, 4100 S&P 500. We held that level and bounced, so we could see 4165 on cash. S&P cash 4165. We're currently 4150. But I would anticipate this is just short covering. Let's see if we flag or give back some of this. Don't chase. Let's look for good setups. Okay, we want high relative volume. Stocks in play like SoFi. Let's keep an eye on SoFi. Let's see what that's looking like. SoFi. SoFi is up 13%. SoFi. All right, let me take a look at SoFi because I'm probably going to sell some covered calls on SoFi. Implied balls high, but let's see how much it's tapered off so far. Okay, the dollar 106, 10-year is fading from the morning high, and VIX is at the low at the moment. SoFi. Okay, SoFi. All right, 88% on its implied vol. SoFi, its historical is 67, so that more than likely is going to crush a bit more. So if you're thinking about SoFi, don't buy it right now. Wait for IB to crush a bit more. Okay, SoFi. Let me see. SoFi probably stays between $9 and $7. So that's a possible butterfly or condor potential.
Yeah, it's like when they have comps at up 9% around the globe, it doesn't seem like they need to be too worried about the weight loss drugs. But the market, I don't know, maybe it's got other ideas because it's not like
Yeah.
category don't have a reason to look appealing. The broad market just got hit. Tech got crushed on earnings.
Chinese stocks, KWeb higher. Okay, S&P, nice follow through. Pretty solid buying so far. It's 938. FANG stocks look okay.
Israel's ground incursion into Gaza appeared less extensive than some investors had feared. For oil hovered near $84 a barrel, while gold dropped below that $2,000 handle. The S&P bounced back from quote-unquote oversold levels. The gauge is still headed towards its third monthly slide, the longest losing streak since March 2020, however. But nonetheless, we're seeing a new executive order aimed at that AI safety and security. The order, according to the deputy chief of staff, is the strongest set of
Apple back to 170. Amazon at 131. Nvidia grinding along. Netflix higher, back above 402. Netflix looks pretty good. Google, Microsoft. Snowflake on the move. Snowflake does have days where we see $10, $15. All right, all the FANG stocks for now look pretty supportive. Meta, continuation.
High took alert plus 800.
Yeah, absolutely. The first I've seen, I mean, we know that they talked about it, they've had meetings, but this is
Meta back above its moving averages, looking good. Meta.
Again, it's like, look, I haven't seen a bill. Who knows how specific they're going to be? Obviously, there's been a lot of real limitations to trade between the U.S. and China, so it certainly seems possible. It's in the realm of possibility for sure that maybe this is an administration that would outright target specific products or companies. Just not sure if it's going to be the case at this point. It kind of feels like it might be a little early for that, but we'll see. I mean, if they are particularly calling out certain companies or certain products, then that could be interesting. But I just kind of have a feeling, it really is not based on much, but I just kind of have a feeling this is going to be like an introductory, setting the stage. Because, what could they do? Well, they can't like stop, Mark Zuckerberg from making his face into an avatar. You know what I mean? Like, what are they could block chip exports. But that seems like a chip thing that we've kind of already gone through.
Okay, Meta looks pretty good. I'm just looking at Meta now that it's moving back above the 50-day. Amazon. All right, I'm reluctant to jump in at this point. Looks like shorts covering. Remember, we had a pretty decent sell-off on some of these on Friday. NVIDIA.
Let's talk some notes and a few movers this morning in the tech world. Going to WDC for a sec. Let's talk about those chips. With earnings now, shares have had a
Netflix.
They came into the reporting period.
Okay, Amazon. Amazon on a buy.
Where they were a couple years ago, of course. Western Digital has not been a great performer. And then we saw
Amazon starting to fade. All right, give it till about 10 o'clock. I'm going to give it till 10. Let's see if we can't get a good entry on Amazon. I'd like to do something with Amazon. Okay, volume on Friday. Big surprise. I got this one wrong. I had some puts on Amazon. Those didn't work out. It's okay. I'm happy to see the market's moving higher. Okay, BITO continues to move higher. BITO. Coinbase is up to 43. Coinbase is on the move.
And revenue of 2.85 to 3.05 billion. I think what we're seeing, a big part of this reaction is the fact that they said Monday they intend to split their disk drive and flash memory business into two independent companies.
Okay, Merck. I had some covered calls on Merck. I'm going to take profits on those.
I know that they've been under pressure for quite a while from some investors to do that, including activist investors, Elliott Management. So the numbers, the numbers were good. I think the spinoff of business, which in some ways would have been a part of that Kyoto merger.
All right, so I have shares on Merck. Merck had a little spin lower on Friday. Someone, I forget who it was. Somebody, one of these firms downgraded Merck, their price target. Do you remember who that was? I didn't catch it. I do recall it was lower because of that. Look at this to get back up to 107 or so, back into this wick that we saw on Thursday. If we can manage that, I'll probably sell some more covered calls. So with the bounce and the covered calls, I'll be back to even here shortly. So I want to sell covered calls again on Merck.
Let's talk Cisco, Jeff. A couple notes out this morning. Both downgrades are going to hit real quick. Let's do Cisco first.
Sure. Raymond James downgraded Cisco to market perform from outperform without a price target. The analyst thinks that campus sales are declining, which makes about a third of the company's sales. They said in addition, Cisco's pending $28 billion stock acquisition makes 52 cents.
All right, so all of that activity at the open dissipating a bit. Let's see what else. Uber, nice gap up on Uber. Uber gapping up. Uber is up plus 3.15%.
Security side, that's what could help Cisco out here. We know their agile, secure and agile networks business has really been the strongest revenue driver for quite some time, making up about 70% of revenue. With this one deal, that end-to-end security side might start to pick up some of the slack.
Okay. Cisco coming off a bit here over the last couple weeks.
Coinbase is up near $3 now. Coinbase continuation. All right, so Bitcoin, we're trying to get back to the morning high. Right around 8:15, we hit a high. Coinbase, BTC.
Yeah, we got a report coming out soon, and they Baird moved them to 84 from $100 with a neutral down for outperform. They said multiple long-term positives are in this stock, but in its industry conversations, they suggest optimization headwinds.
All right, let me look at Raytheon. Raytheon, I took some calls on Raytheon on Thursday. No follow through, but look at the volume. Wow.
There's been growing concerns on that front. They expect it to remain an overhang for the company.
That's about 100 million shares trading hands in the past 4 trading days.
14% year to date, 12% over the last 2% over the last 12 months. Look at that last report. Not a terrible earnings report. They saw more, customers. They saw more customers with revenue above 100,000, but they did lower their outlook for the full year on the revenue side, and that's really what we saw that significant drop from.
All right, Amazon continuation after a little fade, a little profit taking at the highs.
Look, the outperforms, they're bullish, so it's not that they're bearish now, but that kind of frame of support for the stock from the sell side, kind of meaning $84 from 100. That's a pretty good cut, basically. So market kind of taking stride, only down about 0.7%. Thanks, Jeff.
Raytheon.
We're going to take a look at OnSemi in particular as a chip maker that was attached to the auto trade is breaking a little bit.
All right, S&P continuation. Okay, so that looks pretty good. So far, so good. S&P. Amazon continuation. Amazon breaking higher.
Understand the world through their lens and best support them. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network. Spotlight the biggest market trends on Schwab 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities.
All right, are we going to hold this? Looks like it so far. Bitcoin got a bit more to go to get back up to the highs. Apple, pretty nice so far, Apple.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends.
All right, SPY, S&P.
Schwab Network.
Okay, looks pretty good to 420. SPY 420, S&P 4165. 4165 is resistance. We're right just below that level right now. See what happens when we get there.
Pretty sudden change of fate for on this earnings, Kevin. What do you think's going on?
Very slim beat on both earnings and revenues for on in the third quarter. They are the second largest power chip maker in the world. As you know, Oliver, focused primarily on the automotive and the industrial market. The question really looking forward is how they're going to grow that revenue and their place within the overall AI race. I wouldn't count on semiconductor out. In fact, I think they're well positioned to withstand the upcoming economic slowdown that I'm forecasting and that the Federal Reserve is forecasting through the balance of 2024. They have a relatively low debt-to-asset ratio. They do have positive free cash flow on their balance sheet. Unfortunately, they don't pay a dividend, but they have a pretty attractive valuation. They're only trading at about 17.8 times forward earnings. So they did pull back a little bit today, but I wouldn't count on semiconductor.
All right, Amazon continuation. Amazon continues higher.
I feel like, especially because it's sort of an early part of that tech earnings, right? We've already got a lot of the big services companies and the banks, mega cap type stuff. But the real hardware, the real blood and guts of the system, just all the chip makers. So really what kind of Kevin mentioned,
Without a doubt, I believe the whole AI ecosystem is on notice right now, not just for the artificial intelligence players, but also for the semiconductors and the data centers as well. They all play a very critical role in the ongoing evolution of artificial intelligence in many areas that aren't profitable, with many companies yet don't have solid balance sheets. On Semiconductor, on the other hand, does have a relatively sound balance sheet, low debt on their balance sheet, and an attractive.
All right, we're waiting.
This is certainly something to look out for going forward in terms of difficulty with some of these semiconductor names.
Now we're starting to fade. Watch for flat VWAP. Let's see. Futures are pretty extended here, so I would think that we're going to see at least a little consolidation. FANG stocks getting a bid. We're 3-to-1 up volume, 2-to-1 on the Nasdaq, 2.6 on the Nasdaq, 3-to-1 on the NYSE, provided we don't fade. 4165 is a major level, so S&P getting close to that level right now.
I believe over time that their reach will expand just beyond those two areas, but I do think this may be specific just to those two areas, but we'll have to wait and see as other companies report.
What's some of the options, Tom? And I hang with this, Kevin. When you look at the response here, the drop obviously is extreme, right? Does that keep volatility pretty well bid in the stock then after earnings?
It does a little bit, not as probably a little bit more than a normal, earnings event where the stock maybe consolidates, maybe goes higher. We're seeing them still relatively firm. So I looked at a strategy that, hey, if you still want to own it, it's a pretty good spot to get in it at this point. But using the option market, still staying relatively conservative in case we start seeing more of a sell-off in the tech sector. That would probably hit on semi even more. So
Uber still pushing.
Where you're comfortable owning the shares, but you're giving yourself a nice cushion to the downside here in case the stock does continue to fall. We'll get some analyst calls over the next couple of days here, maybe some downgrades. Who knows? That might negatively affect the stock. So I looked out in the December 1st weekly series, so about 32 days till expiration, and just selling slightly out of the money put. I used the 70 strike put. You're collecting roughly about $3 credit on it, probably a little bit more because the stock has a further weekend here. But if you collect a credit of $3, that's the most you can make on this. Or if the stock continues, moves below $70, you can buy the shares at the break-even point, which is about $67. That's about 5% below the current share price in there, so you'd be buying it at a discount. Now, if the stock stays above that 70 strike at expiration over the next month, then you just get to keep that elevated option premium on this one, which is about $3, a little bit more because the stock has fallen a little bit. But this might be the way to play it, where you're giving yourself a little bit more duration. You're taking advantage of this down move to potentially purchase it. And if you don't get to purchase it, you just get to keep the credit that you collected.
Got it. All right. So the strike at 70 here, pretty close to where we are. So you're really taking advantage of the drop to kind of take the little bit of timing element to it in that
Right.
sense, right? Okay, selling the strike right below where we are. 70.86 down now. Couple cents more. All right, ugly day for on. Well, let's switch gears.
Okay, Merck continues higher. I'm going to sell some cover calls. Amazon's holding near the highs. Amazon.
Really interesting company in the same category as some of the big legacy giants too. They've been a little fast moving. The markets love them. They got earnings after the bell. What do you think we get here?
Yeah, a little different technology play, Oliver. As you know, Arista is a very widely recognized provider of cloud networking solutions, primarily to data centers across the country. Data centers, which once again are a critical component of the AI ecosystem. Arista, unfortunately, doesn't pay a dividend.
Nike pushing a bit higher. Nike's on the move.
They do have a very low debt to asset ratio, low debt on their balance sheet, but they have a high valuation from my perspective on a relative basis, trading at nearly.
All right, Nike with a gap and go. Nike. Gap and go, continuation, VWAP up and to the right. Volume looks pretty good so far. Let me just check RVol. Nike. Okay.
Interesting to look at the two because one is we kind of transition from pure hardware to the software implications in the cloud side. And you get a little bit of a higher valuation in general, right? The kind of category generally carries a higher valuation. But I mean, On got a lot cheaper today too. So this is seems like an earnings where ultimately the simplest way to describe it is we're just kind of testing the market's toleration for PEs of what mid to high 20s.
Exactly right, Oliver. And if you look going ahead at where I anticipate us to be at this point in time next year, when the economy is going to slow to the extent where the Fed will actually start considering cutting rates as opposed to raising interest rates, we've done the research at Smart Trust, and that research suggests during the 4 previous periods of rate declining cycles, the 3 best performing sectors are, not surprisingly, consumer staples, healthcare. But guess what the third one is? Information technology. And these types of companies that do have some debt on their balance sheet benefit from lower interest rates. And if in fact these pullbacks allow for more attractive entry points, knowing that over the next 2 to 3
Okay, Nike with a 2.1 RVol.
interest rates by up to 3%, well, that creates a very positive outlook for technology going forward.
It's a good reminder here that all this tech,
It's on a buy since pre-market. See if Nike continues here. Let me go take a look at Nike on the daily. I liked it last week, and then we had Friday. Thursday, Friday, this pulled back. Nike, now it's starting to bounce back above 100. So holding the 50-day. Little distribution on Wednesday, Thursday. All right, watching Nike for a move back to 104.
Their top 2 customers for Arista networks are Microsoft and Meta Platforms. Kind of offsetting here a little bit from last week, but it was based on CapEx spend that the investment that Meta Platforms makes.
All right, the markets are still not just taking off to the upside. IWM continues its fade.
Weekly cycle, so 32 days to expiration. Instead of selling a cash secured put, which is a naked put where you have to buy the shares, I wanted to stay a little bit more risk-defying on this neutral to bullish strategy. So looked at selling it on the money put vertical, taking advantage of the higher implied volatility, selling the 165 put, and then buying the 155 put, so $10 wide, neutral to bullish put vertical, collecting roughly about 250 credit, maybe a little bit more. Stock has come off the session highs. But if you collect 250 credit, that takes your break even all the way down to 162.50. That's about 8.5% below the current share price. That's that one standard deviation move that the option market's pricing is. But staying risk defined on this one in case we do get maybe a 2 or 3 standard deviation move to the downside. If the stock stays where it is, goes lower, but remains above 165 or goes higher, that's all profitability in this type of strategy.
Okay, so far we're not holding the highs. We know that 4165 cash, the cash, S&P cash 4165 is resistance.
Different approach, but kind of with this similar mindset of selling downside. Yeah.
All right, let me go take a look at a few things here for you. All right, so we had a nice sell-off last week. Nice in the sense that maybe there's some capitulation in there. We're below the March low. The number of stocks trading above their 50-day got down to 10%. 200-day down to 25%. Okay, this is near the last year October lows. We were at like 1%. 1% of stocks above their 50-day. And about 10% above the 200-day. All right, Amazon fading a bit already. Amazon. All right, so advanced decline, we want to see more buyers than sellers. So far, this looks pretty good. We didn't fall below minus 30 last week, which I anticipated we would see. Being I was remote, when I checked the chart on my cell phone, I was kind of surprised that the selling intensity wasn't as bad as I thought it was. So this looks supportive for bulls, but we're not following through yet. Watch Amazon. Amazon is at the 50-day. So you'd expect to see some profit taking. But this looks pretty good. It was starting to build. You had big volume on Friday. Over 125 million shares after earnings. All right, their stocks made it to the highs. Microsoft, Netflix. Meta, a bit extended now. New York FANG Index, let's take a look at that real quick. That'll tell us what to anticipate with the FANG stocks. All right, so this is back to looking like a descending channel. Okay. All right, RSI. Stochastics is set up perfectly. If we can get a trigger like we did right here at the end of September, we could get a nice little rally for a few days. That's what it looks like so far. RSI is improving. NASDAQ, only 15% of stocks are above their 50-day. All right, so not a bad way to start Monday. NVIDIA, grinding. Apple. I don't trust the market just yet. Don't trust it.
Volatility still remaining pretty big after last week's action, of course. A lot ahead this week, a lot ahead in the next hour of the show. We're going to be talking some more stock specifics. Apple's event coming up.
Netflix consolidating for the last few minutes at the high. Amazon fading. Meta looks the best. 15, 30, and 60 are green. Meta.
We're talking about logistics with the CFO of the company, CEO rather, of ArcBest, which is a pretty nice run over the past year. I got Ben with me in studio here. Host of Futures every morning for MTL here on the Schwab Network. A little bit of a beta here this morning, Ben. I don't want to get like too pumped up and spend too much time on it given what happened last week, but it's a good start to the week.
Yeah, considering the end of the week that we saw last week, Friday, amidst some of those concerns investors were expressing, and ahead of some of the focal points that we have this week. I think I would agree. This is definitely something the bulls can cheer on here today. They didn't want to see the selling from Friday continue, and for the most part, in the overnight session, however, global indices, which oftentimes set the tone for us here in the U.S., we saw Asia recover. Japan was lower. I saw Australia lower after some stronger than expected data there, but for the most part, we saw global indices which rallied overnight and kind of set the tone here for this.
All right, Amazon stair-stepping higher. Okay, just a little bit after 10 o'clock. Don't think it's going to get through the 50-day, but if it does, if Amazon gets through the 50-day, then we've got a nice area for a base, 134.50, 132.50, right in this $2 range right in here. So this could be a good follow through this week. They beat expectations.
So crude oil hanging out around 85, I would argue, now heading into week 4 of this situation, and to your point, ongoing and worsening, but still limited in terms of the broadening and some of these other major players, Iran being one of them. We recently saw crude prices top out around 95. They've come back off around 81, but here to the point here, kind of hanging out in this range, I think is supportive of at least not necessarily providing any further headwinds for stocks. They've got enough to deal with, right? With rates at these upper levels here. But if we were to see this situation worsen,
Snowflake bouncing.
Above that ultimately gets us above those highs that we saw last fall. And again, signals that the situation's changed and potentially that the environment in the Middle East is worsening. Ultimately, you would see that again if that
Netflix about to break out again. Netflix about to go.
I guess crudes, or maybe the market at large. I mean, I feel like downside stocks, a lot of that we can attribute to what's happening in bonds. Maybe some of this, kind of risk as well out there. That
NYMO is trying to cross the zero line. It's at minus 10. It was at minus 60 and change. We're right at the anchored VWAP to October 13th, 2022. Looking for this area to hold.
And Bitcoin too. Maybe these two things are related, maybe they're not. What are we looking for this week?
I think unrelated. You've got Bitcoin benefiting from the ETF story. You've got gold tying back to what we were just talking about in terms of the Middle East. We definitely saw a spike in reaction to gold, safe haven type, kind of flight to quality type move here. And you can see that was playing out over the last few weeks. Gold from 1820-ish all the way back up through this 2000 level. Now, starting to come off a little bit. You can see on the left side of your screen the big level. The bulls want to get this thing up above 2100. That longer term chart shows the significance of that upper extreme. But however, there's a pretty well-defined lower extreme here too. So I think
Amazon level 2 continues to see it building a bit.
In a short period of time, if things were worsening, but a market that's taking it all very much in stride, contained, relatively range bound. We've been talking about a lot of these products, how we're seeing a fair amount of intraday opportunity, but not a lot of follow through in terms of these longer term trends that are playing out here. So gold definitely benefiting from the tensions, and then you could also argue you see that playing out with the dollar, which has been holding up pretty well, also around 106. Okay.
Amazon looks like it wants to push again.
That would be very interesting if we could get back to a 52-week high. All right, nice, Ben. Thanks for the look, because we're trying to keep our ducks in order here, because, man, there's a lot, very much. And a lot of these things seem like they are connected, and to some extent they are, to some extent they are not. All right, let's bring Kevin Green. Let's talk some tech. Good morning, KG.
SoFi RVol is 6.5. So some profit taking. About 80 cents off the highs. SoFi looking for a follow through. Let's see, Amazon, Netflix, Meta, Nvidia.
nothing that's in person. It's very late, so we are not expecting any type of blockbuster news. But we may want to actually hear a little bit more from Apple later this week when they do report earnings. It's going to be a blockbuster event to say
Tesla.
it could actually be the determining factor on the broad market.
Apple. Tesla fading a bit. Okay, watch Bitcoin here. Bitcoin looks like it wants to break out.
Okay. The scary fast. I mean, it's a Halloween pun, right? Or,
Bitcoin at the high of the day. Amazon.
But also indicating the every check, right? I mean, they could probably have a better name for it. That's why we are believing that the every check is going to be.
Okay, NASDAQ 100. It's about 70% green at the moment, 30% red. Meta is number 1, followed by Charter Communications, Adobe, Amazon, and Airbnb. Let's take a look at Airbnb. That was something I wanted to do, but the markets, it pulled back. Airbnb. Okay, what about gold? What's gold look like? Gold miners, GDX. All right, taking a break. GLD. GLD inside day. Okay, what about the dollar? US dollar. Amazon fading. Dollar continues to be range bound. Brent crude oil.
this is what this event is about, right? This event is actually not so much like a.
Okay, on the watch list, we had a number of stocks that were, let me just see this real quick.
That's the big deal here.
Okay.
That can be validated, and these products do very well. It's not really about the revenue, the iPads and stuff.
Carvana turning off the low.
Financially, and they don't have to rely on other chip makers.
Amazon.
Exactly. This is going to be more of an expense story. It could be a revolutionary tail when it comes to the semiconductor space as a whole. But you are right. They're going to be able to control costs. They don't have to worry about really this repricing when it comes to chip manufacturers after a series or two when it comes to a particular product. So they're going to be able to control that in-house. One thing to kind of note that ramping this type of production up is going to be a challenge in the near term. We do expect
Crude oil. Let me just check. Let's see. DBO. Oil fund. All right, that's faded. BTU, the coal-related names, that faded. Interesting. Let's go to the watch list real quick. The quality of the names shown up on the watch list has deteriorated over the last couple of weeks due to earnings and some of these stocks getting knocked down. So a little bit more trepidation on my part. Light and tight, if you want to call it that, light and tight. Meaning I'm not taking a lot of risk on until I can see the markets reverse and give us a good bid. The number of stocks trading above their 50-day, that needs to improve. So I'm not just going to throw money at the markets and hope for the best. I'm looking for the best setup. Okay, so pre-market, Amazon has been in play. SoFi was in play. That faded. Bitcoin, that's in play. That looks like it's following through. Chipotle, a lot of comments about Chipotle and McDonald's. Decker's Outdoors continues. That's pretty strong. That's showing you institutions. Decker's.
below the 10-year average, and you're seeing net profit margins.
This stream is sponsored by TicketTick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at.
All right, deck continuation, but the volume is suspect. Deckers, suede footwear, men, women, kids. That was a nice beat.
This range that we were in for the longest time, 4,200 to 4,600 in the S&P, we've broken down for now. Now it's the question to see what the next step is. But I had to remind myself, last week we were only down 2%. It felt a lot heavier than that. And even after all this, we're still only 15% off the all-time forever high. So, I know a lot of the sentiment has gotten
Amazon fading a bit more. So if you like Amazon and this fades into lunch, I'd like it better if we hold this 130 area. So in other words, waiting. VIX is moving. VIX, keeping an eye on VIX. IWM also fading. We want to see IWM hold. VIX fading. All right, so that's good. Coming into the week, we had 16 bearish indicators. 16, 3 were neutral, and 1 was bullish. The 1 bullish was related to oversold conditions, but the bearish indicators have the edge for now. So really need to see an obvious reason to be putting money to work. Right now, I'm just sitting tight. Okay, let's look at a few other names that are on the watch list. STNG. Okay, that pulled back. All right, FRO continues. Frontline. Intel had a nice earnings, reporting earnings last week. That's still fading. So even the stocks that look good, they popped up and there's no follow through. So what is that telling me? It's telling me this was short covering. A good bit of this was short covering. Now it's just sitting here. Okay, Microsoft. That looks pretty good. It's got nice support. Look at all this buying right in this area, right around 330. Going into earnings, we popped up, we faded back. I would say today is day 2, considering the volume that we had on Friday. So we get a follow through in Microsoft to be interested there. Amazon fading a bit more.
Start making money. Right. To start making money. But for my objective here, I'm always looking for the longer something trades.
Let's go through these again. Airbnb. I'm looking at level 2 and time and sales. Not really getting a whole lot of flow. What I'm looking for on time and sales is for the bid and ask to be moving fast. All right, so this looks pretty good, actually. Microsoft got nice flow at the bid. 1,000 share increments, 2,500, 1,000 shares. $94, looking at 335.94, 77. Just watching level 2. I'd like to see things speed up a little bit and keep this bid moving higher. Nvidia.
Logistics services company, ArcBest, had a big rally on its earnings.
Google.
A big rally over the past year.
Google pulling back.
We've got the CEO joining us to talk about the business next. Definitely an interesting one. In the past 52 weeks, up 33%. A good chunk of that came on the heels of its report last week that the market liked.
All right, Bitcoin's at the high of the day. Yeah, good job, Novissimo.
Israeli PM Netanyahu says Hamas hostage video released on Monday is a cruel psychological propaganda.
You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means lots of opportunity and every community.
Yeah, SoFi with a fade.
The Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. Market on hold.
All right, VIX is turning. It had started turning right in the last 20 minutes or so. VIX started moving higher. I don't trust the market at the moment. After that selling that we saw on Thursday and Friday, NYMO's at minus 18. It was minus 10. Now it's minus 18. So there's a little bit more selling in there. One more time going through the FANG stocks. Netflix is holding at 405. Microsoft, I don't think there's any hurry. AVGO. Tesla continues to fade down to 202.92. Tesla. I don't like the market right here. Just sitting here. Had a nice run up on Meta, and that faded. That's $5 off the high. Meta. Looking for BNC pivot. Maybe we get a BNC pivot potentially. Meta.
Thanks for being here. Welcome to the Schwab Network.
It's great to be here with you this morning, Oliver.
Appreciate that. Thanks for being here because we're looking for some positive news in an earnings season that's been a little bit rough so far for a lot of investors. Your shares are up 30% over the past year, about 32% to be precise. What's the biggest thing you guys are most proud of from this last earnings?
Okay, let's look at Meta. Nike hanging in there. Nike. All right, so Meta. We had a nice run up in the morning. We got to 309 and change. Pull it back to 303, 304. So about 5.5 off the high.
Had a cyber attack that they were dealing with at the first part of October. And then very recently, Convoy, one of the digital freight brokers, a larger one, announced that they were closing their doors. So all of these disruptions put shippers in a bind as they try to find partners that can keep their freight moving. And so we are really well positioned to help because of the suite of logistics solutions that we have. We just brought some flexible capacity and answers that can really help customers find the best way to move their freight, and that helps them to quickly re-optimize their supply chains.
It sounds like there is a lot of shifts happening in the industry, especially when we went through a period where logistics supply chain was so in focus from COVID. Your company seems to have been on the leading front of addressing those inefficiencies, I guess, that we discovered in some ways. The shares are up more than 200% since COVID. So
since like this time at the bottom of the hour, we get the Dallas-Fed Manufacturing Business Index forecast minus 16 on the front, minus 18 top line.
I think that we kind of think generally as traders, logistics, all kind of in the same category.
Arm holdings, no follow through.
Typically that sets it apart.
Well, we are a company that helps keep the global supply chain moving. And the way that we do that is by bringing resources to bear for our customers. So we've already been talking a little bit about the less than truckload network that we have. You know, we have nearly 240 locations, and we service our customers through those. But we also have solutions that are full load, as well as ground expedite. And
U.S. crude futures fall $2 a barrel.
And logistics supply chains. And so whenever you bring all of that together, it really does fit the needs of customers. That's something that we're very proud of. Is how we listen to our customers, we see ourselves through their lens, and we really.
All right, Amazon, Meta.
Especially in times like we've been seeing. And you mentioned the pandemic. Our company was.
All right, Merck. Merck a little selling at the high. Inside day for now, Merck. I'm looking for Merck to get back to 105, 105.50, maybe 106 to sell some covered calls again. Markets are not giving us the follow through I was looking for. Or put it another way, resistance is holding right where we thought it might show up. Okay, so we're still in this downtrend. S&P still in this downtrend. 41.65. We didn't get quite that level. We didn't tag that level yet. We faded. We got a gravestone doji right now. So the bulls really need to come in and support the market. Otherwise, it looks like we're going to just fade lower. The JP Morgan long put position in their collar is right near price. Okay, so 40.55 is that long put. All right.
Decline. But recently, you know, and with the results that we had in the third quarter specifically, and as we look to the end of the year, some of these disruptive effects have really kind of changed that. And so we're seeing some demand uptick.
All right. So Friday's low, we're off for about 11% from the January high.
As well as, bringing on some new opportunities for our company. And again, just the positioning that we have and the flexible capacity has really been responsive.
Okay. Is there a focus on bottom line now, I guess, after a lot of that big growth?
50%, a 50% retracement of the October 13th, 2022 low up to the July high. 50% would bring us right to 40.50. That's right where JP Morgan has that long put, the middle of their collar.
Effectively manage your costs, your productivity improves, that provides the best service possible to them. And so that's one point that I would make. And then another is really the mix of our business. As Yellow went out of business, gave us the opportunity to add what we call core published customers, regular customers, and that business tends to be better for us, and it's more efficient. And so we were able to tap down to some extent some transactional business that we were doing in the asset-based network and really optimize the use of that LTL network. But I also want to point out that, you know, with our logistics capabilities, our managed capabilities, we were able to say yes and run that less than truckload business through our network of carrier partners and do that effectively as well. So lots of good things happening. And again, you know, some of those were cost focused, but that doesn't mean that we're not focused on growth because we see a lot of opportunity to grow.
All right. Drew, thanks for the details and look at the trajectory. We appreciate it.
Yes, thank you. It's great to be with you.
Absolutely. Likewise, Judy McReynolds, CEO.
All right, so at Friday's low, we were about 11%, 50% retracement, another 100 points lower, 80 points lower, whatever. Stochastics oversold, expecting a bounce, but not showing up yet. RSI is groveling in the gutter, no turn yet.
Sort of social media, sort of advertising, sort of kind of stuck and unsure what exactly they're supposed to do. Pinterest has been a fascinating
40, 50.
Stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
$4,100 was support on Friday. I'm not looking for a retest. Not looking forward to a retest.
My dad instilled in me always put people before be proud of offering a good product at fair price. I think he'd be extremely proud of me.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical.
Nothing to do.
Every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Slow morning. Friday when I was out at Duke. Again, thanks for your support and kind comments. My daughter had a great time. I had a good time.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere.
Friday morning looks like the markets were going to bounce, and then looked in the trading room a few times and disappointed to see the markets couldn't hold on and just dropped off end of day. We have about 6 or 7 distribution days so far in the last 2 weeks. 50% retracement. 41.65 resistance today. 41.15. And we just checked 41.15 and 41.25. Just looking for support here.
Let's start there. Okay. Let's go take a look chart. Kevin, set us up on the earnings. What are we looking for here for Pinterest?
Yeah, we are actually looking at an implied move right now of about 8.1%. So this can be a mover. The market is expecting revenues to come in at $700
S&P.
million. That would be up.
You can see this big symmetrical risk down here at 4,000. Puts and calls, major level, 4,000. 4,100, lots of puts there. We would anticipate that if we go down into that area, we'd be looking for puts to monetize. If it doesn't, that could be troublesome for the bulls. Not interested in taking on a whole lot of risk. Amazon looking pretty good, so these dips keep getting bought. All right, so stocks that some people well known were buying last week, like Stephanie Link. My guess is that this is Google, by the way. My guess is that we're going to continue to base in this area. I like the idea of starting a position shares of Google and selling cover calls, but not until this base looks a little bit more supportive. We had 3 days of selling above average. Stochastics oversold. MACD's ready. It's just a matter of when will this base confirm. Right now, we had sellers at the high of the day, came back down. So I'm just sitting here watching some of these stocks that I'd like to own into year end, anticipating that there will be a, I don't want to say rally, but a grind higher into year end. more bullish action. Google, Amazon bouncing a bit more, sitting right below the 50-day. Amazon. All right, let's go look at the New York FANG. Actually, before we do that, let's look at these Chinese stocks because many of them look pretty good. Gapping up today. Let's look at KWeb. KWeb grinding back towards the 200-day. What's Baba doing? Baba grinding, still in the descending channel. Baba, Baidu. Yeah, these yeah. JD.com. Yeah, not much going on here. Let's look at the FANG stocks. So far, this descending channel is working out okay, but we have resistance overhead. You can see the sellers right there. Amazon looking a little better.
Downward trend line here. The point to be watching would be a break above that trend line. That could be a bullish indicator, but for right now, we're still in
Adobe last week. All right, so a nice channel.
That would be the first hurdle to clear for some upside activity.
This might be something to sell if you don't mind getting. Well, no, I'd probably look at a bullish credit spread, bullish put credit spread, sell near the money puts, buy out of the money, about 5 points out of the money for protection. Looking for a move back towards the 50-day. I don't like the markets just yet.
Hey, this is the face you make when you break below your moving averages. It really is Halloween. Okay, there you go. All right, I like the chart though.
What's ARM Holdings doing? ARM. Okay, still in this descending channel. ARM Holdings still in a descending channel. Okay, we identified that potentially. Uber. In a descending channel. A lot of stocks look this way. Descending channels, they're below the 50-day. To be bullish, we really need to be above the 50-day. Uber, Bitcoin, and Bitcoin ETFs. Just a matter of time before that ETF gets approved, that spot Bitcoin ETF. Merck fading.
So this is going to be an expense story. They're going to have to talk about their inventory or their product launches moving forward here, how they can utilize technology for some of the other illnesses that are affecting everybody in the world at this point in time. And then last but not least, their valuation right now, their forward multiple is at 10.32. This is the lowest forward multiple.
Coinbase, flat VWAP, Coinbase. All right, let's see what's working. Verizon, Nike, Goldman Sachs. Wells Fargo looked pretty good on Friday at one point and then faded. Double bottom, looking for this to push higher. Wells Fargo. You got S&P 500, you have 90% of stocks are below the 50-day. So that tells you a lot right there that you should be taking it light and tight, few positions, watch your stops. Let's look at the sectors again. Sectors everything was below the 21-day and the 50-day, all the moving averages 21 and 50-day moving lower on all of the spider sectors. That needs to improve before we start thinking, putting together lots of longs. All right, here's SXLC, Communications, Meta in that group, Charter Communications, Charter.
We're trending down strongly. The trend is definitely.
Yeah, not a whole lot. Biotechs. Biotech still in a descending pattern. One of the first things I like to look for, if you're thinking about taking on risk, one of the first things I look for is, what does the 10 EMA say? Well, first off, we know the 10 EMA price is below the 10 EMA. So that's telling you risk off on biotechs. Biotechs are a risky asset as well. So that's telling you, in turn, that risk off in the markets makes sense. What about junk bonds? Junk bonds. These should be moving higher if you're bullish. We're just, at worst, it's bearish. At best, it's neutral, but it's not bullish. Biotech, IWM, that needs to be moving higher. This is not moving higher. That's telling you to be risk averse at the moment. Okay, this could all change. But for now, risk off. Still risk off. Risk off. IWM, IBB, junk.
The adjusted earnings per share estimate right now is at $4.72. That would be an increase of 19.5%. Some of the key areas, oil and gas is going to be a very huge boost for them as they continue to see demand, especially here in the United States with the Permian expansion. So it is actually expected to.
We'll get a bounce. We'll get a bounce at some point. Right now, though, risk off.
This is also $8 today. If the dollar goes lower, that also boosts the demand for capital and other industrials. So kind of look at the correlation in the long term to see if there's an opportunity here for a move back to the upside.
Okay. It seems like there's some potential fundamentally, and there's a lot of energy deals still going on. It seems like a lot of supply coming, so they're going to need some equipment. I get that. The chart, though, Rick, it's like it worsened really quickly. I think I just counted 9 straight red candles. Today we're up, though.
Yeah, I mean, it is a red candle, but we are up still. So it's always kind of weird when you get a stretch.
We're in a negative gamma state as well, which is telling you as well to be risk off. Stay risk off for now. Negative gamma. That's what why we had such a quick move lower on Friday, because dealers were selling to get the delta neutral. They had to sell futures.
Prices topped out there. It's also the site of where we have kind of this gulf and volume node, and then it starts to pick up again. This was an area that just stood out to me here, and I thought it was noteworthy that we were sitting below it. Moving averages trending down now. Even our long-term 250.
Okay, so you see how quickly profit taking hit. People are quick to take profits, and shorts are quick to jump in. Did we hold this? We've just filled the gap on IWM. The Qs, same thing, but not filling the gap. The diamonds. It's holding up pretty well. Only 30 stocks. The Dow Jones. Okay, most active. Apple. Fading. Intel. Microsoft. All right, we're fading again. Verizon. McDonald's had good comps. This is looking okay. So Some are still looking for a recession. Some believe we're in recession. What does well in recession? Well, for one, value stocks that pay dividends.
Rick Ducat, and a great look at the fundamentals from Mr. Kevin Durant. Coming up, talk about Meta. Shares still up, but the Nasdaq has definitely lost a good bit of its early buoyancy. We'll talk about the difference between this stock and the rest of the market, which is coming.
Okay, traditionally, bonds also work well in recessionary environments. Bonds, let's take a look at TLT. TLT still basing down here. Defensive stocks, like in the XLP sector, still basing. That's an area to look to. If you're concerned about recession, gold and silver, precious metals, inside day, but in a bullish trend. Real estate, believe it or not, is an alternative investment that many look to. Rental properties. That's why one of the reasons I'm watching Airbnb. Since real estate can be affected during a recession, certain types of real estate, like in this case, rental properties, can provide a steady stream of income. All right, so if you don't own rental properties, one way to play that is Airbnb, obviously. But it doesn't give me a reason to buy it just yet. So bonds is an area I'm very interested in. Just because Ackman covered his short doesn't mean that he is right. There's a lot of speculation on why he covered. For now, I'm watching TLT. Either it moves higher or it doesn't. If it continues to move lower, then we've got an answer. And the 10-year needs to back off. And that's holding on to 4.9%. So that's not giving us a warm and fuzzy feeling. US 10-year, okay, 4.9. Very reluctant to pull back. US 20-year, that's the opposite of TLT, of course. We need to see this pull back, 5.27%. And the US 30-year. All right, all of these yields are a bit higher. Okay, one more time. Let's go take a look at the watch list. There was a number of stocks in there from the commodity sector. Commodities look pretty good. Let me real quick. Let me just check out the Deutsche Bank Commodities Index. All right, that's hanging tough. Not much going on. Crude oil, maybe a fade. Okay, the VIX is fading. So if we can get the VIX to fade, maybe we'll get a bid in the markets. The dollar's rolling over. Crude oil pulling back to $83 a barrel. 83.14. $83 a barrel. Crude oil. VIX is fading. Just don't feel it yet, folks. Just don't feel it. You can get trapped here. Last thing you want to do is be taking a position just because you feel the need to trade without an edge. There's no edge here right now. All right, so we're at minus 10 earlier. NYMA was minus 10 at the open. Now it's minus 25. So we did back off. We're below anchored VWAP. Okay, Netflix catching a bid right now. Netflix. As you know, Netflix subscriber base grew. The company is increasing their subscription prices. If I look, let me take another look at Netflix. It is trading somewhat at a premium. So if you're thinking about Netflix as a position, maybe shares in Netflix, let me just look at Netflix. Earnings are projected to increase another 30% into 2024. So if it's something that, you can buy a few shares now and look for a break above last week's high, which was on Wednesday. That was around 418.84. So it looks like Netflix wants to go. Netflix, 2024. All right, here's Netflix. Let me just drop Netflix in here. All right, so relative strength to the market is growing. So that's a good sign. That's a plus. Growth rate is 38%. That's a big plus.
I think the recent trade has been sell on Friday, buy Monday when you come in, right after the move down on Friday. And you're right, that's not holding. I think part of that is the fact that yields started to rally again. They topped out around 4.9 on the 10-year. But also the Bank of Japan announcement with flexibility in terms of their yields pushing.
All right, let me just share this with you. Netflix prospects for follow through. There goes Netflix. Damn it, Janet. Netflix. What a January a call spread in January. All right, you definitely need to do a call spread on Netflix if you're interested. Januaries are pretty rich. So buying a 40 delta, that's 420. Let's see what that goes for. Okay, buy the maybe December for 20. That is a 45 delta and sell the 410. That's net. You would collect $483. I'm sorry, I got this backwards. I'm not looking for a credit spread. All right, it's $398 per contract for a spread. Looks like it's going to keep going.
There's a slight divergence between earnings per share and revenue, right? Companies are raising prices and cutting costs, and that's helping with earnings per share, but revenues are struggling at these levels. So the outlook for revenue is meaningfully. It's a unique.
All right, so credit spread on Netflix looks pretty good if you don't want to buy shares. If you want to play Netflix, but you don't want to do either of that, a call spread for a debit, you can also consider Granite shares. On Netflix. I imagine that's probably NFLL. NFLL. Let's see. No. Let's see, global. There's no hurry to do anything. I'm just doing a little bit of analysis. Okay. Market's chopping around.
Part of it has to do with the fact that the market's on a 3-month slide, and you're just not getting that push from the earnings cycle that I think a lot of people are hoping for. Even go back to Google earnings last week; they were pretty decent, and the stock got hit pretty hard off that. So it's just interesting because you got to remember there's a lot of technology in the markets, right? And if you're not getting that, what you hope for, the markets just aren't waiting for an excuse to sell right now, kind of given everything else that's going on, whether that's geopolitical risk, whether that's continued rise in the bond yields. That's
still risk off. Amazon's trying to bounce. Flagging for now around VWAP.
Those small cap companies and their refinance risk, the moves upwards in yields continue to put pressure on those small caps. The mega caps aren't as sensitive to that because of their cash balances. But when you look at the rest of the breadth out there, whether it's the Russell, whether it's the S&P or the NASDAQ, that breadth isn't.
All right, let's see what that looks like. NASDAQ disruptors, these are moving lower. Netflix, just keeping an eye on Netflix for now. A nice volume on a little breakout. VWAP up and to the right. Netflix, I don't have any news on Netflix, so there's no catalyst. At a minimum, you need a catalyst, okay? All right, so if you're going to take a trade, make sure you have a catalyst. You're not just trading it because you think it's a bullish or a bearish trade. And watch your R-ball.
Designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to a brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
Netflix building a higher low at the moment.
App and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgins. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Netflix building a higher low. Looking for that higher high. All right, Netflix.
Welcome to Schwab Network. Daily live exclusive content tailored.
All right, so looking pretty good here. Netflix at the moment. Hanging out above the 50-day. Volume building, but certainly well below what we saw last week, Wednesday, Thursday, Friday. No catalysts that I can see on Netflix today, but we know last week the company reported an increase in subscriber growth, and they're increasing their subscription prices. So those two are adding to the bottom line. And we've got companies, and we've got earnings growing. Netflix.
Available anytime, anywhere, on any device for free. Schwab Network, empowering every investor and trader every market day.
traders in the Treasury options market are loading up on bearish hedges in anticipation the US officials will unveil plans for bigger bond and note sales at Wednesday's quarterly refunding announcement. Demand is rising Monday for protection against rising US government bond yields, with one standout trade costing an eye-popping $15 million in premiums so far.
So let's talk about that. Our disruptor today is Elfrey Harris after U.S. contractor just got upgraded over at Raymond James. And our panel will break down McDonald's quarterly numbers in today's.
All right, so Netflix looks good. Daily looks good. RSI is rising. Stochastics, the only caveat is Stochastics is already embedded after that earnings and the gap up last week, week before. But it does look good for follow through. So if you don't mind scaling in, that's what I would be doing. I currently don't have shares in Netflix. I want to get into Netflix. If I were going to buy 1,000 shares of Netflix, I'd scale in maybe 50 shares, 100 shares today. Look for that to follow through. If we do close near the high of the day, maybe against that 100 shares, maybe I can sell a covered call out in January, a couple of months out. And then if we continue higher, I'll probably add to it. I'd double up my position, maybe 200 shares of Netflix. And then I'd probably sell another covered call at a little bit higher price. And let's say by the end of the week, Netflix is above 420. If that were to happen, I'd be interested in adding maybe another 100 shares. I don't know if that doubled my position, but 300 shares. And then, anticipate selling a little bit more cover calls exposure. So scaling in 100 shares at a time, 50 shares, 100 shares at a time. If you're interested, you could also do some of those discounted ETFs. I haven't been able to find one for Netflix yet.
Environment at this point, so that's going to be a concern moving forward. Stock's only up about 9% so far this year. It's hitting 6.
Let's see. I think Direxion might have one. Let me just do a search real quick. If you know, just throw it in the trading room. Let's see. Netflix. Nvidia Bull. No, they don't have anything on Netflix. So Netflix continuation or Netflix following through.
So there's a lot of concerns on this one. The CEO's currently giving some more comments on the conference call to investors. But yeah, not a bad headline numbers out of this company. But then you start looking at their guidance, and it kind of reflects the overall weakness. Now, this stock, this chip stock, is basically in the industrial sectors, right? Competes with Texas Instruments and some others in this space. But definitely have some concerns moving forward for this company, and the stock's reflecting that.
Okay, thank you for that. And also, I wanted to get your attention over to the UAW. You have GM in the UAW reaching a tentative labor deal to end the strike. You have some news with the Stellantis in Canada as well. What are you watching there when it comes to all of this?
Well, it's not surprising you're seeing some weakness in some of these stocks. Everybody thinks that, hey, if you get a tentative deal that GM just announced about an hour and a half ago, that this is going to help the companies. But you have to start looking at the cost that the nearly 6-week strike has caused a lot of these firms. You're talking billions of dollars at this point. They've reached that tentative agreement. They've used the deal that Ford and Stellantis have in place, 25% wage increases over the next 4.5 years. Wages are going to be more than $40 an hour, including this increase of 68%.
All right, S&P, what are you going to do?
$48 an hour. That's similar to the Stellantis and Ford deals. And this is
We're just chopping around. S&P. All right, flat VWAP. Now we're back to VWAP. If we don't get rejected here and move back up to the top of the range, just looks like a doji for now. I've got mixed signals on the FANGs. We're right at the 105. 105 is flat. And we're trading 1.5 up volume for both the NYSE and the NASDAQ. So that's telling you all you need to know. Still risk off to neutral. Blocks. There's a few blocks came through, but nothing really major. Sectors, pretty much all of them oversold last week. Let's see who the standouts are at the moment. Okay, communications, biotechs, transports. That's a good sign, transports. Let's take a look at transports. IYT, that one had sold off a bit. IYT. All right, so this might be the pain trade, if you will. IYT. Pain trade in the sense that you've got people capitulating at the lows. Is this where you want to buy? I think maybe so. Maybe put credit spread. Transports. Yeah, these all look the same. What does Old Dominion Freight look like? Old Dominion Freight. Okay, holding above the 200-day. And CSX, Rails, NSC, Norfolk Southern. Yeah. I don't know. The markets just don't look that great. Communications are moving higher. Netflix is part of that group. Netflix continues higher. You also have Meta in that group. Communications, Meta, holding, Charter, communications. A little bit of a reversal there. I don't know. Just don't feel it yet. S&P. Back to VWAP. Tick cumulative is trying to turn. We've over the last few days, we had attempts to get more of a bullish trend. We're still in a bearish trend. Coinbase up 3% on the day. Trying to push a bit higher. Coinbase. Bitcoin doing a pretty good job. Bitcoin is doing a pretty good job of holding on. VWAP up and to the right. A daily on Bitcoin on the right. Here's Bitcoin daily. Trying to get above, if it gets above 35,000, it would require more money coming in to push that higher. Remember, we still have potential catalysts on the horizon with Bitcoin. JP Morgan anticipating that the BlackRock spot Bitcoin ETF will get approved before the end of the year. That will mean money flowing in. You also have a number of other. Fidelity has one. BlackRock has one. You got Grayscale. Beat the SEC, basically. The court said that the SEC's issue with Grayscale's ETF, changing it to a spot Bitcoin ETF, that the case was frivolous, so they approved it. So Grayscale won that. It's just a matter of when this thing finally kicks in. Coinbase also should benefit greatly. Coinbase is showing signs of a potential break higher back into the range on the daily. So you can see we've been in range. Need to get above 83, 80, really 90 on the upside. That's going to take some work, but intraday it looks pretty good. Coinbase, if you're trading it intraday, needs to break out. BITO ETF. What are the miners doing, like Riot? Riot, not much to look at. Now, something like Riot, you could sell butterflies, credits for credit, okay? So taking 2 of the 10s, selling 1 of the 11s and 1 of the 9s for a credit. I'm not sure what can you get for that. Let's see, butterfly on. I don't usually talk about options, more complex options, because there's only, I don't know, I assume there's only a handful or two of people in the trading room that understand what I'm talking about or feel comfortable, aside from just a put or a call or a spread. Butterflies can make you some consistent money. Let's see what it looks like on Riot. Probably not that great, I would think. Riot, RIOT, or iron condors or iron butterflies. All right, Riot. I like to see a stock. If I'm going to sell a butterfly, if I'm going to take a butterfly for credit, I want price to be in a sideways range where I can see that probably won't make it above 12 and probably won't drop below 9. So let's see what that looks like. Riot. Butterfly, where are you? Let me check the IB. Netflix continues to grind higher, looking really nice.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalidi, 2 p.m. Eastern on Schwab Network.
A fresh take on the hottest trends in the market, from every click to every tick.
All right, so if you did a butterfly, let's say the next week's 10 call, selling to open those twice as many as the put and calls that you're selling. Let's just say, for example, 4. If you sell 4 of those, your max gain is $132. Your max loss is $68. Let me see what that looks like. So it needs to stay, price needs to stay between 9 and 11. So let me see what the 8 looks like. Nine and 11. 9, 11. Yeah, that's probably okay. Needs to stay between 9 and 11. Let's see if you do just one, what that looks like. Okay, market's still fading. So for one, you can make 66. Your max loss is 34. So it's 2 for 1. 2 to 1 on a butterfly. Looking at Riot, what does Mara look like? Mara probably is very similar, right? Mara. It's been mining lately. So 7 and 12. Let's see what Mara looks like. Mara. So Mara, very similar. Price needs to stay between 8 and 10. Max gain $67 per one butterfly. So you're selling 2 to open. You're buying a call above and below. And you are looking for a price to stay between. You just capture that premium. It's a technique to take money out of the markets, especially if you have a small account. You're protected. You know exactly what your max loss is, and the broker doesn't require a lot of capital. As insurance. All right, so Mara, just watching I'm just, bored. Market's not going anywhere. So butterflies are a good way to make money if you have a small account. What I would suggest, if you don't understand butterflies, there's a number of really good videos out there I've seen over the years, some better than others. I think this one guy, I forget what his name is. Let me just check real quick. If you're interested in butterflies, it's a good way to grow a small account. Let's say you have $1,000 or $5,000, and you want to grow your account methodically. This is one way to do it with butterflies. Basically, you're a butterfly call. You're basically selling at the money calls. You're selling twice as many. So with Mara, I would sell, like, say, 2 of the 9s for 60 cents. I would buy 1 of the 8 below and 1 of the 10 above. And look to make twice that, 2 to 1, if it stays between 8 and 10. And if you sell this Friday, do you think Mara's going to take off to the upside and just blast higher? In that case, maybe you want to, adjust that. But for now, that's an inexpensive way to grow an account, a small account, methodically. Let's see, where is this guy? Let me see what his name is. Where are you? Invest with Henry. Okay. Invest with Henry. He is, I believe he's based in New York. No, Philadelphia. I think he's in Philadelphia. He manages his portfolio right around a $2 million portfolio. And he has lots of good free videos. Let's see. Invest with Henry. Yeah.
That took out 132, so kind of losing that working assumption that we were forming value at higher and higher levels. Another step back shows after recently invalidating a downtrend with this up move kind of rolling over here right now. So stalling out around 140, a key area. still holding up above 112, but just not a lot of conviction one way or the other. A lot of intraday opportunity if you're looking for that shorter time frame type movement, but not a lot of conviction or follow through in terms of those longer term trends that we look for.
Yeah. All right. So that's the whole thing. When you look to the longer term trends and you want that follow through, the sort of where is it? But there's no doubt that people still look to Google as a growth opportunity. They look at it for AI. Big picture, last thought here, Jessica.
No, that's the beauty of covered calls. It's right at 135, very close to that resistance point that's been pointed out. It's a great way to just get additional premium while selecting a target price and reduce your overall risk exposure.
All right. Next up.
All right, markets are just sitting here bouncing around. You could also do those if you have bigger accounts. You can also do that on the S&P. Actually, Seth over at SMB is good. Market's not going anywhere, so I'm not in a big hurry to put money to work at the moment. Netflix. Okay. Building higher lows. So we need to get above this high over here from Friday, 410. Looks good on the daily, Netflix. There's no need to chase Netflix. There's no hurry. Does look like it's going to continue to move higher. The catalysts, increased subscription prices, more subscribers, and the growth rate in earnings are all supportive of higher prices for Netflix. Still on a buy, just sitting here sideways.
Well, as I look at shares of SPOT, Nicole, very much range bound right now, and I think that's a bit of a disappointment when you consider the longer term trend, which has been a downside. The bulls were looking
All right, VIX spiking up, S&P, no follow through yet.
after earnings, and unfortunately, as you can see, as we look at the reaction that we saw to the news last week, while we spiked up to 174, follow through has just been non-existent. We're kind of still just stuck in this range that we've been in. You got a pretty well-defined upper extreme 173. Got a lower extreme established here around 145, we'll call it. But again, not a lot of follow through after the initial move. So let's take a step back, right? I would say when in doubt, zoom out. And as we do that, you're going to see, well, one thing that I mentioned here is that recent move up to 174 fell short of a key area that the bulls were looking for around 182. And then you've got a recent low around 132. So even in this bigger picture, kind of just range bound type price activity where you failed to take out this key high recently. So again, somewhat limited in terms of ability to see continued follow through after an earnings event in a trend up. You'd expect the bulls to be able to get some momentum and some continuation of the pattern that we have been seeing. Maybe the reason is, well, take a look, because the longer term trend has been to the downside. And this also speaks to the significance, again, of this 180, we'll call it, area, because that's an area where we failed. If you remember, when we rallied back in the beginning of 2022, rolled back over into the lows around 69. So one could argue just kind of in this wider range, but still in a bit of a downtrend. That has me a bit concerned because we're now double top.
It's 11:30 a.m. Eastern Time. The US sells $75 billion in 3-month bills, prior high yield of 5.31%, and a prior bid cover of 2.85. And the US sells $68 billion in 6-month bills, prior high yield of 5.325%, and a prior bid cover of 2.7.
Strong third quarter earnings, maintain their buy ratings. JP Morgan has an overweight on Spotify, raises its target to 205, and this is trading at 160. On board with the higher potential here for this name. Jessica, I'm going to move on and get here to Amazon. Unless you wanted to add anything on Spotify, please do so, but then get to Amazon.
Absolutely. If there's a key theme with the trades that I have this week, they're not trades, they're longer term, and they are bullish to neutral, which means I'm just being cognizant of the moves that could happen within the market and adding to my longer term portfolio. That relates to everything. But to Amazon, again, buying opportunity, 93% buy rating from 60 analysts. They had their last deal day earlier this month. That formed 50% better than it did last year for their third parties. And that's due to the logistics that we talked about in the restructuring with local. And now that's showing up in results. When we see restructuring and there is a shift in expectations in revenue and we see it show up in results, that's really great. And Christmas season is coming. They're not going to be a recipient of those bigger theft issues that we are hearing from Target and other big retailers. So the way that I'm positioning this once more is utilizing the cash secure quick, same expiration, for this one, I'm bringing in a premium of 703, and that represents a 5.5% discount to its current price around 127.74. But think about that from a yield perspective, that's 5.5% that I'm going to get throughout December 15th. So in terms of premium, that's also a good way to consider the way that I'm structuring these trades today.
Right. Okay. And these are, as you said, more of the long-term bullish to neutral. You're aware of what the market, could be bringing us. Amazon, your thoughts, Ben, on the charts, please.
Well, it makes a lot of sense because this is kind of a mix of the two other names that we've looked at, and I have to default to Jessica on this one because when I opened up the charts here, I didn't really see anything that was providing anything really definitive in terms of structure. We can take a look at some of the recent price activity, and I'll show you what my eye was drawn to. Very well-defined downtrend that we had been seeing going back to when shares were up around 146, recently down to 117. That was a continuation of this move. You can actually see how we established a new area of balance at lower level, but look what happened. We didn't spend a lot of time down there around this 120 level, and we actually rallied right back up, and now we're taking out 129. So we could be starting to establish something very bullish here if we can continue to see momentum here, reject this lower level, take out 129, and it could be off to the races here. The unfortunate thing for the bulls is that you can see there's been some headwinds to some of these big tech names, and again, if you remember, shares topped down around 146. Now, the thing that had me a little bit disappointed about that move is it failed to take out the end of July, beginning of August highs that we saw with any conviction. We rolled back over, back through 138. We always say opens up the door for a retest of the lower extreme of the range that we had been in. That also took out that key area 131, and you can see how since we've kind of just been balancing, we call around 128. But definitely not what intermediate time frame. We're talking about a 4-hour period.
All right, so Netflix hanging out between 400 and what is the 100 day? 400 and 415. So this is what, day 8? This is day 8. So looking for Netflix to follow through. Netflix. All right. Chop, chop, chop. We often complain about markets not moving. This is precisely the kind of environment where if you were, I know Brother Bill can relate to this because Brother Bill likes to trade butterflies and condors and stuff like that. Whenever you get a flat VWAP, I always say, there's no trade just in general because VWAP is flat. However, when you got a flat VWAP, taking a butterfly or an iron condor on 0-day options that expire today, selling to say 460 or 470 and buying the 475, selling the 430 put, buying the 25 put for protection. That's an iron condor. You're looking for price to stay between. When you got a flat VWAP, that's a pretty good odds that they'll stay between on a doji day. Now there is the probability that this could break out, potential for this to break out, in which case you'd have to roll one of those legs higher or lower. But generally speaking, when a position is when a stock is flat, doesn't go anywhere, like Netflix, for example, on a daily, a butterfly or an iron condor, 420 and say 390 or something like that, where prices stay below, stay in between. You know what your maximum loss is. Your broker, most platforms will tell you is most you can lose, and usually it's only like for each iron condor you take, say on SPY, the max you can lose is like $100. If it moves outside the upper or the lower bands that you put the trade on for. So it's definitely a trade that's good for range bound action, butterflies and condors. So last Friday or last Thursday, I was telling you that I was looking for the markets to give us a potential for selling some bull put credit spreads, where we're looking for the markets to move higher. You sell a near the money put, you buy out of the money put, and you're looking to collect the premium and close it if the markets continue to move higher. Close it by the end of the day or end of the week, depending on your strategy. Right now, I'm just watching for the markets to do something. New York, the NASDAQ 100 is mostly green, still green, but yet we're not following through. We're about 70% green, 30% red. Chips, many of the chips are lower today. Software, communications, Adobe is higher. Adobe, VWAP up into the right. Yeah, Scott, I'm interested, but I'd only be interested if buyers showed up. And, in mass right now, this just looks like it's going to continue lower. I'm looking at this 152 area, 164 area that this could pull back to potentially. Let's go back to, this is where the rally started on Tesla. Let me just get a chart. I've already marked up Tesla. So this is what I would do with Tesla, or what I'm thinking about on Tesla. I am paying attention. I just haven't done anything on Tesla yet. All right, so here's Tesla. And going back to where we originally bought Tesla, that was using Grover's scripts. We had an extended or an oversold condition. Pessimism was rampant on Tesla. It got down to 101.81. Let me just fix something here. Okay, let me just fix something. Okay, that's good. All right, so you can see that risk reward zone. I have not marked this chart up since we first looked at this back on January 23rd, January of 2023. All right, so we put this box in. We said if we broke out, that would be a signal. We got the signal. Now I want to look for a Fibonacci. Okay, so here is that level. All right, so we got it. We're hanging in there. We're not selling off. S&P is not selling off. Let me just adjust this real quick. 299.29.
So it's a very chip related event. Eve before Halloween, my birthday today, and they're going to be having
299.
tonight. Not a big market mover for Apple. There's a lot
I can't get it exactly on there, but that's good enough. Let's see. 101.81. 101.81. So bear with me a second. Just want to mark this chart up so we have something to talk about.
You know, so this is more of a chip event. I mean, how do you think the iPhone 15 has been received?
Not great. And we have these surrounding issues.
Okay, I can't get it to
right now that need to be sorted out. We want an
fix to this exactly.
Apple later this week. But the iPhone 15
All right, let me move this over so I can see it better.
as of the last quarter. Now the 15 was supposed to drive sales. We'll see what happens.
Okay, that's good. All right, so we're right at 50%. Now, Scott, let's say this holds this area right in here. Looks things are starting to line up right in this area. Got a 50% retracement. RSI oversold.
There's a lot of expectation for Apple to have some catalyst for investors to get interested again.
Yeah, understood. And then we think about, I mean, I see the MacBook Pro may have an updated M3 chip. Also the wearables. That always seems to be a good holiday gift to the wearables, right?
Sure.
Oh, what time is it? All right, almost noon. All right, so good thing is that stochastics is set up. So we need MACD to turn. That'll be a function of price, of course. You know that. MACD is based on price action. So is stochastic. All right, so
Since China's government pretty much outlawed the use of iPhones for government use, the question is, what happens next? Is this extend to consumers? How deep does this go in terms of China and its consumer users? Because
okay, so stochastics oversold. We're looking for that to turn. Note ATR is moving higher, so the ranges are increasing. 50% retracement. There's a possibility we get down to 618. Okay, so support in this area.
Yeah, that's right. Earnings later on this week, and the expectation is that, you know, they've been really tight-lipped about guidance, but are they hitting sales? Is the 15 on trajectory to hit the kind of targets that investors and analysts want to see? That's a big.
So a very good possibility, Scott, that we will see a bounce in Tesla. Now, if today produced a hammer, I still wouldn't be, maybe I'd scale in. If we had a hammer by the end of today, I would look for a bullish candle tomorrow to confirm. And then knowing that my first overhead resistance would be the 200-day right there. See the 200-day, that dotted gold line? That's right around 220. So hammer today, look for about a $10 move to the upside. Then we need to see a follow through and get through the 9, 21, and 50 days. So a lot of things need to happen for Tesla. Unfortunate for the bulls. But we could be close. I would definitely be more interested if Tesla bounced and the markets bounced at the same time. So put in a hammer maybe. You got support over here. Stochastics oversold. RSI oversold. MACD needs to turn and volume needs to pick up. So there's a lot of things that need to fall into place. But these are kind of stocks that if you have accumulated cash in the last, I don't know, the last 16 weeks since that July pivot high, a lot of stocks have pulled back. If you've been collecting cash since that July high. All right, so you got 12 to 14 weeks here. In a previous area where we found support and resistance, we took off to the upside. We broke out above 4,200. We're below 4,200 now, and 41.65 resistance, 41.50 for now. And still in a downtrend. The risk is still high that we could move lower. So I wouldn't be doing much except maybe just scanning through stocks that you think might work.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me always put people before themselves. Be proud of offering a good product at a fair price. I think he'd be extremely proud.
Binge watch the market with the Schwab.
All right, Bitcoin
24 hours a day, 7 days a week at Schwab.
hanging out. After a week, 2 weeks of bullish action, we've got Bitcoin hanging out right below 35,000, which is constructive because we want to see this bid action, if you will, overbought, consolidate up here at the highs rather than pull back into last week's action. So Bitcoin looking okay. Bitcoin. Okay, Bitcoin. Okay, Bitcoin. Okay, so Bitcoin on the weekly, 2 weeks in a row. Now we're consolidating. So we're right below the initial targets that we put in when we determined that the low was in, and then we started to see higher highs and higher lows. We consolidated from April into October. September was that last pivot low right there. Those 2 weekly candles canceled each other out, and we started to see a more bullish look to it. That's where we started to think about getting long in our Coinbase account in Bitcoin directly. I don't like the altcoins. If I'm going to trade Bitcoin for a trend, in this case, a bullish trend, I'm going to trade Bitcoin directly. So Coinbase, you can buy, increments of Bitcoin if you think it's going to be moving higher like I do. I buy it for my kids, $100 at a shot. And as long as it continues to build like this is looking pretty good. So the targets were achieved with Fibonacci's, and we're right at that area right now. So 50% would be 42.5. A lot of people are looking at that area. That's a previous area where we lost it, right in this area here, back in 2022. This is where Sam Bankman-Fried started to get into trouble because he didn't get the bounce. I think right in here on this bullish bounce, he was doing something there with the other company. I forget the name of the company, but when the markets reversed, that's when he started having issues. Tesla's still drifting lower.
Two sides have agreed to hold consultations on maritime affairs and arms control.
Oh, nice. Yeah, McDonald's definitely. Yeah.
Slightly from 326 last year, but they did beat sales, and those sales were higher by about 15% on a year-over-year basis. And they did denote that their
McDonald's had good comps. No surprise that that's doing well. Acceleration. Okay, Adobe. Let's see what McDonald's looks like. McDonald's. Okay, look how McDonald's is pull away from VWAP. Yeah, look out McDonald's.
But I suggest that defense spending is probably something that's not going to be shied away from coming up in the next fiscal year.
McDonald's pulling away from bullish VWAP.
Interesting enough, I mean, the stock is down 30 or so % over the last year. When you actually look at the earnings profile of the business, their earnings relative to its 5-year average from a net income basis is down about 15%. But at the same time, it's already trading around a 28% discount to its 5-year average. So this
Okay, so you've got historical volatility and IB pretty close together now. Intraday R-vol. McDonald's intraday R-vol is 4 times.
Yeah, so when we look at the stock, Nicole, obviously it's still to the downside. Even on a weekly basis, it's been trending lower. So we're not going to catch the bottom here or try to guess if it's the bottom of the stock. It certainly could be, but what we can do is still rich in the
Okay, so nice look to McDonald's.
We're going to sell the 170 cash secured put, and altogether, really, this sold for about $5 a share for $500 a contract. So the stock really doesn't have to do anything. It can go higher, that's fine. It can stay where it's at, but it also can fall all the way to 165 where your asset break even. That's where your break even level is. Selling a $5 premium, you're basically harvesting close to 3% yield coming out of expiration in 47 days.
Thank you for that. George Phillips, great to see you. Really appreciate it. Thank you for coming today. Coming up next, capital allocation to ground as we are watching McDonald's on the rise. Really positive comments and details we talked about line here for the third quarter. Our panel will weigh in. We'll take a look here. Equities next.
I remember when I first started and we would experience turbulence. I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hincks. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I work up to Schwab. I love to help people understand the world through their lens.
Yeah, Amazon looking good.
You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support secure your financial future. That means a lot for my community and for every community.
McDonald's with a nice break higher. We could see 270 probably. Looking good here.
Nicole. Listen, we've owned this stock for a long time, largely based on the management team and the dividend policy. But I think there's three things to focus on with McDonald's: it was dividend, digital, and discipline. And if you look at this company from their dividend-paying culture, they state that they raise the dividend based on what they think long-term sustainable earnings power is. So this is second year of 10% increases. From a digital standpoint, they've really been hitting it hard. They have 90% of their sales in China is digital. Their loyalty program is 52 million customers, and that has driven sales and margins and fits into our theme, which is both the companies that are embracing the digital revolution and then the suppliers of those picks and shovels. So we like it. A lot more growth than Starbucks.
All right, so looking pretty good. Looking for a follow through on McDonald's. Nice bounce. Strong quarter.
Despite higher prices, I like seeing same-store global sales rising 8.8% in the quarter. You mentioned a bright spot in Germany. There was the 10th quarter of double-digit sales growth there. I think that investors should really be looking at the digital sales, which amounted to $9 billion across McDonald's 6 biggest markets. That represents 40% of total sales. And McDonald's says that digital sales drive scale and loyalty. The other thing is menu innovation. The company continues to innovate with the menu. The McCrispy sandwich launched in 2022 is now a $1 billion brand.
So at this point, it sounds like you're both positive about this one. Nancy, I know you said you've owned this for some time. You like the there. How about the threat of the obesity drugs that is taking a toll, perhaps, on unhealthy foods or packaged goods? Where do you see that thing? Is that a McDonald's story or the packaged goods story or a story at all?
Well, so Nicole, we are not concerned about that. We are not hearing from the company management other than stated by Walmart that they were seeing lower food sales. We haven't heard any of our companies use that as any kind of an excuse for slowing sales. And I think it's also important to just focus on the fact that we have had this before. We had the Fed sort of revolution in the 90s, and those guys were ultimately taken off the market. So I think, the story is
All right, we're approaching 12 o'clock. McDonald's still going here. McDonald's looking good. Mickey D's on the move.
You don't need to get the double meals, and like in Germany, they're trying smaller
Well, I think that McDonald's has a huge brand name, customer loyalty, a massive base of stores. I'm actually cautious on McDonald's here because I did note in the call that CEO Chris Kempczynski said that the macroeconomic environment is unfolding in line with our expectations for the year. And it can't be ignored that the company management has been cautious this year. They've been expecting a recession, I think maybe since fourth quarter of last year. And I think the pricing is an issue because McDonald's tends to cater to a customer that is looking for value. And that Darien, Connecticut headline, I saw that for an $18 combo meal. I think in Times Square, that same meal is probably somewhere between $13 and $14. But the question is, how long or how sustainable are price increases? But at some point, you get
Looking for McDonald's to continue this ramp higher, looking good.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. In seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
All right, looking good. Markets continue.
Welcome to Schwab Network. Daily live exclusive content tailored to investors. Broadcasting 24/7 from our studios in Chicago and from the heart of Wall Street, the New York Stock Exchange. Up to the minute market insights, example trades, and stock-specific analysis featuring the smartest minds in the business. No politics, no noise. Analysis ahead of the biggest events for the economy. From bell to bell and beyond. Watch live and on demand. 24/7, 7 days a week. SchwabNetwork.com. And on all your favorite streaming services. Available anytime, anywhere, on any device or screen. Schwab Network. Empower every investment, including every market flow. It's time to look forward.
Find the next trend.
From every click to every tip.
There's no fear of missing out on the next transaction.
Available anytime, anywhere, on any device. For free. Empower your portfolio with the Schwab Network. P-Bounce Coffee, I'm Dennis Warren. Join us for next night investing.
1 p.m. Eastern. Only Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device or Schwab Network.
discussions and option strategies in Caterpillar, which pulled back about 11% so far this month in earnings. And the list of reports, which has risen 25% so far this year, is which is up 27% in 2023 and reports earnings after the close. Now, 2.5 hours into the trading day, stocks are higher as traders brace for a big week filled with Federal Reserve rate decision, job reports, and Apple earnings. The moves come after the S&P 500 joined the NASDAQ and Russell.
All right, McDonald's continues to ramp higher. Doing well.
This stream is sponsored by To The Tick. Get free daily poke points, Fibonacci, and market profile levels by signing up at tothetick.com.
McDonald's still ramping higher.
NASDAQ 100 up 0.9%. The Russell 2000 small caps up just over 0.25%. Help me break down this market action. Let's bring in my co-host Kevin Hicks. Kevin, it's all going to be about data, earnings this week, correction territory for 3 of the 4 major indices. We're getting freight today, but the sentiment is still negative, I think, at this point. It's interesting.
All right, let's go and see what these guys have to talk about. Weiss.
I've seen some bad news, but I don't believe it's going to be a sustainable rally. My playbook is that maybe it bounce a little bit here, but overall the direction will be lower because the S&P is going to be up over 2% in terms of earnings this year after being down for a year, successive quarters. So maybe that gives you some ballast to the market.
I bring up Apple because the Nasdaq's riding a 3-week losing streak.
Right. But look what happened last week, right? You had Microsoft, which I think is much more important because that incorporates AI. Apple's not really involved in AI right now. They will be. That includes AWS with data centers or with cloud and Google. So Google didn't really sidetrack it. The market went to the more important companies, in my view, Meta and Microsoft. And Meta had an amazing recovery, because people realized, hey, she's giving macro commentary, not micro commentary in stock.
So I'm with Joe that I think it's treasury bills that in particular are needing to be funded. If I look at earnings, just where we are right now, 1 month into the third quarter earnings season, the estimates are that we're going to be 3% higher than at the beginning of the reporting season in terms of third quarter earnings. So earnings are coming in better than expected. And the estimates for next year are hanging in there at a 12% growth rate. Now, Steve and I may dispute about whether that's realistic or not, but let me just continue here for a second. The decline this past month in the stock market is pretty pronounced, whether it's the NASDAQ or S&P 500 is down 4% on the month. That's pretty pronounced. And I have to ask myself, why is it? I think this is really a delayed reaction to the debt ceiling negotiation. I think this is the fourth quarter of 2011, again, where the Treasury is restocking its general account. At the same time, the deficit means that there is a flow of funds out of the stock market into buying these T-bills. We know the Fed's not buying them.
McDonald's continues to please. It's ramping higher.
Is that the economy to me is really quite strong, and I go to the labor market as the exhibit number 1 through 5 to support that case. That's going to promote disposable income as inflation continues to come down.
I'm glad you didn't go to the TSA numbers anymore. At least you're going to the labor market for a change. And now we move the labor market up to 1 through 5. Please continue.
Well, we do have a ongoing drama, you and I. I take feedback. I incorporate it. By the way, the TSA statistics are through the roof.
Yeah, but whatever. Keep going.
Okay.
You were on a roll. Don't go backwards.
All right. Well, don't interrupt me. Anyway, look, I understand the situation. We're in a correction. When we're in a correction, it's easy to focus on the bad news about things going on in terms of conflicts. I get it, but this is an economy.
All right, McDonald's.
Profits are growing and look set to continue to grow with the decline in the stock market.
Most sectors are green today. NASDAQ still mostly green. Get about 30% red, 25% red, 70 to 75% green. Charter, Adobe, Amazon, Netflix, Airbnb, the top 5.
He says the following: of the fact that the S&P is now down more more than 10% from its July 31st peak for the year. Quote, not likely to regain what has been lost since then over the rest of the year, as we had expected in August and September. We still think that a Santa Claus rally is possible, but between now and Thanksgiving, it's easier to see downside than upside for the stock market. Now, he talks about jitters in the bond market. He talks about what's happening in the Middle East. He talks about risk off being obviously evident in the Russell 2000. Think about that. This from Ed Yardeni.
I know.
Ed Yardeni. Who's next? Tom Lee?
Very thoughtful.
All right, so Bitcoin.
A couple of weeks ago, and I'll tell you the most salient point he made is productivity is increasing. Now,
Hanging out. Okay, US 10-year.
but as we talk about wage increases, and we'll get the labor
Okay, that's just hanging out near 4.89. It's still pretty elevated.
the wage increases that increase the quality of life. If productivity is going up to make sure that inflation isn't created by those wage increases. Guess what? We've got a productivity report this week. I think it's Thursday. I don't think it's as important as, Joe, what you were saying about Treasury announcements of funding, but I am definitely, as is Ed, watching those productivity numbers.
Do we need to throw the...
Thank you, John.
He sounds, oh, yes, it's possible we could get a Santa Claus rally, but that's way off of the, market's sort of primed for a run into the end of the year. Now says it's unlikely to recoup what's been lost from the future till now.
Recouping what we lost from July might be somewhat difficult.
So you were looking for a year-end rally too?
Yeah, I do think we have the potential to have a year-end rally, middle November, Thanksgiving-ish into December. Let's remember, NVIDIA will report as in the few days preceding Thanksgiving. That potentially could be a positive catalyst.
All right, S&P.
Probably will be buying back their stock.
The 10-year yield moving sideways. So is S&P just chopping around.
That's reflected in positioning as well. So I think you get it, but Scott, I don't think you're going to get. I don't think it's kind of like the Jet Giant game yesterday. The Jets eked out a win, but it was kind of an ugly game, and the Jets barely won. I think that's the market.
So we're going to get then more punts to play off that. We'll get more punts than anything else. We're not going to be able to get much offense going. We'll just go a bunch of 3 and outs. We may go sideways. Maybe we'll get a little bit of a bump. Maybe we get a little pullback. Is that the kind of market we're in for? By the way, Mike Wilson, big shock, says the chances of a fourth quarter rally have fallen considerably, though, while Piper Sandler said, don't stop believing, 48.25 to stick with that.
Yeah, I don't know how we get to 48.25. Look,
well, you get it by going up 17%. That's
right,
not,
which I don't see. Look, I don't think it's out of the question if Jim's target is a year. But the question is from what level and what has to happen. So we'll be done with the Fed this week.
Okay, S&P just chopping around.
They don't. I don't see them really
What's been pretty successful, I just done some back testing. These 0-day options, trading iron condors, look at where support and resistance is noted in the gamma channel, and then sell outside those numbers. Sell puts and calls, buy puts and calls, iron condor. You guys know what I'm talking about. That's been pretty good for 0-day, especially on these flat VWAP days.
They have work to do at home.
Collect premium with defined risk.
So I don't think you look at one data point like productivity, which is a historical number. I think you have to look at trends. And the trends are that the consumer's weakening, delinquencies are moving up, the consumers have depleted their savings, and that just doesn't bode well. And the extended lag between what interest rates are doing, should be doing, and what they've done. So that, to me, makes your bear case. However, seasonally, and it's not so easy because we only trade on seasonality, and it was so predictable. Everybody makes money, right? But I think seasonality, you could rally off lows, but I don't think lows against.
How, Jimmy, can you and White so vehemently on the state of the consumer, which you keep making the case is super strong, and Weiss keeps making the case that the consumer's not?
Well, it's not me making the case. It's not me making the case. It's the banks that have come out. It's retailers that have come out. Okay, it's data that comes out from the Fed on the trends. So is the consumer strong right now? Yeah, in pockets, but even the high end
LVMH, they're showing disappointing numbers, right? Collectibles, watches, they've come down the pricing. So it's not me making the case. Do you like the way I threw my voice there? You asked me, and that was pretty good.
Well, I said you guys.
Okay. Well, anyway, look, it's not. Let me be clear, and this is why I haven't really been jabby with you and punching with you a lot, because you're not saying things that are wrong, right? I mean, we see what's going on with credit card delinquencies. Hang on, subprime auto loans and all those sort of things. They have to be taken into context, and context is given by guys like Brian Moynihan, CEO of Bank of America, who looks at credit card delinquencies on the earnings report a few weeks ago and said they are normalizing. They were below normal for quite some time with stimulus. Now, your point.
All right, we're starting to push back up to the top of the range. That's the most I'm anticipating. 4165 is resistance, S&P. Get above that, that would be noteworthy.
I got news for you. Subprime autos are a very small part of the overall auto loan environment.
If you're so bullish on the economy, why are you selling Home Depot? Which is a new move for you.
Yeah, because, well, first off, I trimmed it a few months ago. I don't know if you remember. So it's become kind of a tag-end position, and I'm looking at it and I'm saying, do I really need this very small position in Home Depot, or are there other opportunities out there that I will be buying? So this is not. I'm not really negative on Home Depot for the long run, but with mortgage rates at 8%, I really can't see the housing market getting off of its back anytime soon. And I just think that's going to pressure Home Depot to show any meaningful share price gains for the next year or so. Long-term, great stock. I just don't need to have a small piece there. It raises some funds that I can do some interesting things with. So I'm not negative on the stock market by selling it. I'm not negative on the consumer, Scott. I might actually put that into something like that small position of Nike that I bought or some other consumer-oriented names.
We'd be remiss if we didn't touch on General Motors, which has, strikes apparently this deal with the UAW. Stock is
This stream is sponsored by TickStrike.
A big loser.
TickStrike allows you to actually hear order flow futures.
If you do
forex,
the
and stock
analysis,
instruments.
which stock
Get a
analysts
free trial at
you come out
TickStrike.com.
with a number of what this
McDonald's still pushing higher.
it's probably around $7 billion. Now, I don't know if Adam Jonas or someone.
All right, I'm going to take a couple-minute break, folks. I'm going to refresh my coffee, and I'll be right back.
Right? This is on a company that has around $150 billion of revenue. So over the next 4 years, do we think that the pricing on the cars is going to go up a little bit to cover some of that? You bet. But with the stock trading at 4.5 times earnings, that's implying one of two things. Either they think that people who are selling this stock at this price think that the labor cost is going to be more than that $7 billion, or Scott and everybody watching, what I think the issue here is the slowing EV demand in America. Just at a time that GM and Ford are putting a lot of money into building out EV plants, and there's some worry that this cyclical slowdown could be part of something bigger, to which I say, if you look at the profitability of the internal combustion engine business at GM, it's enormous. And it is more than funding whatever these losses are perceived to be going forward in the EV business.
Are you running out of patience with this? Forget the company and the balance sheet, the stock.
Yes, I am. I mean, how could I not? How could I answer that question as I'm not running out of patience? But I'm not selling the stock, and let me just tell you why. We went through this last week. This company has a lot of cash on the balance sheet, and it generates a lot of free cash flow. They are buying back shares with that free cash flow in meaningful size, shrinking the share count at the last report 5% year over year. So what this means in terms of patience, Scott, it's driving me nuts. And I think about it a lot on the weekends. But what they are doing is they are concentrating my ownership of that business, which, as I said, is very profitable. So I have to be patient and let it continue and let that share count dwindle where I'm a more concentrated shareholder.
Now, I know you can't say anything specific to the rebalance that you have coming up, but I just want to remind our viewers, since we talk about the Joe T all the time, that you do have a rebalance in the next few days to figure out exactly what you're going to be doing and the types of stocks you think are going to be leading from here forward. You take us through the thought process before you actually reveal on the air in the days ahead of what you did.
So I think the way you have to think about it is you have to understand, and I think, Steve, you know this well, long only strategies are going to go through periods of underperformance. And it's very clear to me that that's, in fact, what's going on with the strategy right now. It's in a period of underperformance. Why? Because it's equally weighted, and because it moved at the end of the year out of the mega caps. It got back in quickly enough, but without question, the underperformance is present. So then you ask yourself, how long do you think the underperformance can actually be there in the strategy? And you look for signals
in which you could see the underperformance begin to mean revert, and now you go through the period of outperformance. And the conditions for me, as I see them, are not in place right now. So I'm basically saying that I think the strategy is going to continue to underperform. The strategy is going to continue to underperform until the reality of a 10-year treasury at 4.9%, when it should not be there, reverses. Safe haven demand off geopolitics, not affecting the treasury market. Looking the Federal Reserve being basically frozen, not affecting the treasury market. So the underperformance is present. I think the underperformance continues. I also think less is more. I think less is more in terms of turnover when you're going through that type of period. And obviously, the first priority is to ensure that if you have losing positions, you neutralize those positions. That's kind of the way I'm looking at it.
But are you also saying that higher for longer is bad for your strategy?
Yes, because in a higher for longer strategy, we have two factors: quality and momentum. Which one gets prioritized?
I heard that before.
But quality gets prioritized, and momentum it basically vanishes in a marketplace. And where's the momentum right now? Can you find momentum in equities anywhere right now? We had it in the Magnificent Seven, which are, the Magnificent Five at this point. Tesla looks like it's bleeding below 200. It's down 20% on the month. There's really no momentum in the marketplace right now.
That's why.
So remember, it's momentum oriented. It is momentum based, and momentum and quality combined together. It's a difficult environment.
Well, that's why I go back to the idea of don't sleep on Apple this week and its importance to the market, because of the way the Nasdaq's been down, because of the way some of the stocks within the Magnificent Seven didn't react that well to their earnings. Even Microsoft, right? I mean, Microsoft didn't, pop massively on the back of what was
Here's a nice
it was a good report.
I really struggle to find somebody who's very optimistic on this quarter. I really struggle. I mean, everybody's out there saying like, hey, China phone sales, declining net income, that sort of stuff. I mean, there's a lot of negativity about
Morgan
Apple.
Stanley reiterated they're overweight today, by the way, and they're looking for a weak outlook for the holiday quarter, even as they say that.
And because sentiment matters. And really, Joe, that's what I heard you just saying. And I actually take a lot of comfort from the negativity of my frenemy right next to me and the negativity of the market overall. Sentiment is horrible right now. That is the condition from which rallies grow. They don't grow from effusive optimism and everything.
It's so much sentiment as it is conditions. Think about the difference.
Sentiment is a condition.
But it is the overall conditions in the market are unfavorable, right? You would say business conditions in totality right now, unfavorable. Conditions as it relates towards investing in individual stocks, going idiosyncratic, going bottoms up. Everyone in the network says this is a stock picker's market. Really? This is a stock picker's market? I don't think so.
Weiss bought more Alphabet, right? He bought more Alphabet.
You think this is a stock picker's market?
I think it's a stock picker's market more than any other market. Yes, absolutely.
I'm with Steve.
Without doubt.
I'm with Steve.
Look, you
trimmed your Qs short and you bought more Alphabet.
Yeah.
So you obviously think if there's going to be any momentum in the market, speaking back to momentum, it's going to be in the mega caps.
I do. I don't think there's an appetite for auto stocks.
But then how do you minimize the importance of Apple in the same breath?
Well, not all mega stocks or mega caps are created equal. They're not. They're different fundamentals. Ergo, it's a stock picker's market. Otherwise, I would just, buy the Qs. But the idea of being short the Qs is that I believe, as every active manager should believe, they can pick the stocks that will outperform the indices, right? So the Qs I put on to partially express a view of where I think the market's going to go, but also to hedge against my exposures. So my two large exposures are United Health's my largest, but away from that, Microsoft, Meta, and then Microsoft, and they're pretty much now equal. So I think they will outperform. Meta is just compellingly cheap at this price, and Microsoft is, as I've repeatedly said ad nauseum, it's the one play in II. So that's why I like those. I just don't see GM being attractive even at this level. As a matter of fact,
I see Home Depot being more attractive at a 17 PE versus historically being valued much higher.
That's my YC. Got to argue
So,
with
so
me about
that'll
something.
be on my list. You know, the
Gotta argue with me
margins.
about something.
The problem with CapEx, highly intensive CapEx companies like a GM, is that the margin's very variable. So you can't count the earnings there. Now, it's unrealistic. I mean, if anybody's leased a car, bought a car, the price to finance and to lease has moved up double, in some cases triple. So how do you get by that, right? It's going to eventually fade off.
Yeah.
Last word, Jimmy.
Listen, that may be why the stock trades with a market cap of roughly 40 billion, with 13 billion of net cash on the automotive operational side. And again, generated 5 billion of free cash flow last quarter. Now, if you dig into that, okay, there were some working capital adjustments, I'll grant you. There's cash flow generation in size here. To your point, the risk here is that I'm getting the cycle wrong. That's the risk in the GM call. And that maybe the recession starts this quarter and all those auto sales are going away. That's the risk.
No, I would almost throw that back to you and say that the risk
Wang Yi
is that
says China
you're
welcomes
getting the
French
cycle
investment.
right, and it doesn't matter for the stock because the stock
I
hasn't
get
done
you.
because the stock hasn't done anything, no matter the cycle.
I totally get you. So I submit to you that what you're saying is more of a trader's mentality than a long-term investor who is a long-term investor and sees that share count going down, down, down in meaningful size, and it's concentrating the growing earnings power for me and my clients who hold those
The
shares.
best play in autos, I own Tesla puts, that stock's going to 150. I've been called for break 200, broke it today. To me, that's the best play.
All right, let's take a quick break. When we come back, we'll do our calls of the day, including a downgrade for one big tech stock ahead of its earnings report. And later, Trade School, a look inside one of the most closely followed mutual funds. It's beating the broader market this year. It is an iconic name in that business. We'll get inside it coming up. Halftime's back in 2 minutes.
All righty. Still chopping around. McDonald's at the high of the day. Ouch. Apple flat. A lot of flat stocks with flat VWAP. Tesla at the lows. There was a big put seller. There was a big put seller in Tesla. 2,000 of the January 2026. 180 puts for $39. 2,000 of them. $7.8 million in put premium.
We begin it with Cisco downgraded the market performed from outperform Jimmy at Ray J. Reports November 15, stocks up like 8 or 9% on the year. What do you think about Cisco here?
I like Cisco very much. This is a very short-term call by the analyst, and he acknowledges that. If you're in Cisco, I've never said, hey, this is going to be a great quarter or this is going to be a lousy quarter. Cisco is the ultimate long-term hold. It performs like the S&P 500 over long periods, but without anywhere near the drama. If you put that Splunk acquisition in there, you're going to see some earnings growth pick up here in the coming years. I think you're going to get even better than the S&P 500 with, again, pretty low drama. Dividend yield around 3%, 12 times earnings. I don't know if the analyst is right about the coming quarter, but I just don't think that's material to the outlook for the stock in the long run.
So, Joe, Chevron has been, I don't know, just kind of ugly, right? I mean, year to date, it's down 20-some-odd%, was down big the other day.
Just saw an interesting chart by JC Parents. Let me just check this out.
They say the response is overdone.
Yeah, that looks pretty good. I like what he's showing here. What is that? That's what is it, a weekly? No, it's a daily. Okay. So, yeah, this is a pretty good idea here. JC Parents. I don't know if you know who he is, but he's pretty decent. All right, so look at, I guess you look at the channel from a different perspective. Let's check this out. I think this is a pretty good analysis. Just visually, just stuck out what he's trying to say here. All right, so yeah, that's pretty cool. I see what he's looking at here. Okay, so basically what JC Parents is looking at is, all right, look at the depth here, the depth of the pullback. Let me turn that color to red. Okay, so look at the distance here. That looks pretty cool. All right, so here is one. Here's two. All right, so from this trend line, here's three. Are we there yet? We're pretty extended when you look at it. Okay. He's taking a different peek there. Well, the idea JC Parents is sharing with the stream makes sense. Are we looking for a bounce? Probably. Probably a good area to start looking for a bounce. Let me move this over here. I like it. I like the idea of what he's sharing. Hold on one second. Bad number. All right, so you got these pullbacks. Conversely, you can look at the moves to the upside. All right, so moves to the upside from the lower trend line. Okay, these extensions. We hit the lower trend line, we'll rally back up. Hit the lower trend line, and you rally back up. I like the idea, though, of off of the trend line, the drops were close to a nice bounce. All right, so if that works out into the seasonally strongest months of the year, looking something like this, I like it. I like what he's saying here. All right, so makes sense. So looking for a bounce. The opposite of what a lot of people are thinking. Many people are thinking, oh, gosh, more downside fear rather than looking for the setup. The setup looks pretty good. 50% retracement is right there.
Looting broke out after the storm as food, water, and gasoline became scarce. The Mexican military is now assisting, and the president of Mexico says most of his cabinet is either there or on their way. Category 5 Hurricane Otis killed 48 people. 6 people are still missing. Nearly 900,000 don't have
Thank you, Captain. Thanks.
the gag order in Donald Trump's federal election interference.
So looking at what JC Parents is thinking here, you know, you got these pullbacks from the upper trend line. Okay. You got a pullback from the upper trend line. You see that? All right. These pullbacks from the upper trend line, back to the upper trend line, back down to the lower trend line. Now what do we have? The odds are, given this area of support here in this zone right along in this area, the odds are that we're going to bounce, which I would tend to agree with. I think most people are on the same page. I know some of you took calls. So right in the middle of all this price action, right in here, okay, right in the middle of all this price action, we're coming right down to this area. Do we bounce? Well, if you look at what JC Parents posted on Twitter, it makes a lot of sense. And he's looking for an inverted head and shoulders. So the next run up should get us back near, say, 4,200, 4,300, 4,300, 4,350. And then looking for a higher low or an inverted head and shoulders. Okay, stochastics oversold. That certainly supports the idea of a bounce right now. Okay, so you see what I'm looking at? Okay, look at this right here. See stochastics? Okay, look at over here. Stochastics lined up and fired. Stochastics lined up and fired. You see that? Price action turned up. Stochastics fired above 20. Okay, we're about ready to do it again. Is it sometime soon? Probably. Stochastics will fire. MACD will turn. I'll wash out some more people first and then turn back up. I think the odds are very good. And I like what JC Parents shared on Twitter. Makes a lot of sense. Okay. So that's what we're looking for right now. That's what we're looking for. All right, let me just do this way and tone it down a bit. Okay. And right now we're close to it. Looks good. Looking really good. I like what I'm seeing here. Okay, I'm going to just mark this up a little bit more. And okay.
We're back on halftime with Bob Pisani now with today's ETF Edge. Hey, Bob, a special guest with you, too.
Indeed, Scotty. Stock prices are trending down, bond yields are trending up, stocks are entering their seasonally strongest period of the year, but many investors seem happy to clip 5% yields on Treasury bonds. Leave the stock market alone. What's the investment outlook for the rest of the year into 2024? Here's my guest, Rick Reeder, Chief Investment Officer of Global Fixed Income at BlackRock. But you really are the head of the.
I hope he talks about Bitcoin.
Determine strategy for the company. There's one topic, everybody's mind, direction of interest rates. Will rates be higher or lower by the end of this year or into early 2024?
So, first of all, it's a big geopolitical dynamic that's been driving or moving around the flight to quality and moving interest rates. Let's assume, for the time being, God willing, that is stable.
Listen, the Treasury's got to issue an awful lot of debt into the system. So my sense is, if you take the short end of the yield curve, I think the Fed, when you hear from Chair Powell this week, I think the Fed is largely done for they get another hike in. I think short end interest rates have done most of the work. Could the long end of the curve move a bit higher from here because of all the issuance that's coming? Potentially, but I don't think we're going very far from these yield levels. I think we've seen the big rate move already.
You run the global asset allocation team. So active bond ETFs, they're having a moment. You launched this new active, you're running this thing. So it's your big baby right here. It's the BlackRock's Flexible Income ETF. You launched it in May. It's got 160 million assets under management. Two things stick out about this. Number one, this is very unusual. We've got a lot of international stuff here, a lot of Brazilian, Mexican bonds here, some high yield stuff. Emphasis on shorter term as well. What's the emphasis on international? Is this where you can get better yield now and outperform treasuries?
So, by the way, our emerging market exposure is pretty small. Mexico and Brazil are sort of the apex, so the best quality of EM. It's only about 5% of the portfolio total in EM. We're using a lot of European investment grade credit, European high yield, because of U.S. dollar investors benefit quite a bit from, because there's a cross-currency base, because you can actually get more yield for being a dollar investor. So you can get, for really high-quality short-end investment grade credit, you can get 6.5% to 7%. Same thing, high yield, you can get close to 10 for Europe. So we are using some Europe, and pretty unusual point in time that as a U.S. dollar investor, you get that sort of yield. So it's like the strong dollar is really helping when you go out and buy these. And by the way, talking about good quality credits, European investment grade credit, 2-year, 3-year paper, you get almost 6.5%. I've been doing this a long time. Think about negative rates in Europe. You now get 6.5% for high quality assets in Europe. 2 and 3 years. You're not taking a lot of long-term interest rate risk, so that's pretty darn attractive.
Yeah, I want to talk more about it on ETF Edge, but what about the broader picture? All those equity investors out there sitting on the sidelines, clipping 5% treasury bond yields, huge competition for the stock market. I'm the stocks guy here. I hear every day from investors, they don't want to be in stocks. What would entice them to come back to equities, or is it a lot of this money just permanently?
When we get to highs, that's when they're going to come back to it. That's when they'll come back to it.
Secondly, the U.S. Treasury is issuing. We're getting supply of $400 billion a week of Treasury bills. I mean, the numbers are immense. The ability to get 5.5%. They're going to print bills this week at 5.5%. Pretty darn attractive. I don't think that it means you can't own equities. If you go into next year and you say, "Gosh, what can I do in my bond portfolio?" You mentioned
all right.
We're yielding 7.4% with a lot of high quality assets. That is a competitive asset to equities. That being said, I think equities will do their job next year. Can you still throw off 8 to 10, maybe a bit more in equities? I don't think if you take 7 stocks out, the multiples on equities aren't that high. If you take the earnings yield of equities, they're still pretty attractive relative to Treasury bills. Yes, that is there is money that's going to stay in Treasury bills. I still think equities will do their job.
Earnings yields 5.5%. So it's serious competition. I'm going to bring my colleagues. Scott's got a question there. Scotty.
Hey, Rick, Bob, thank you very much. I just had a question for you based on what you just said. $400 billion a week in issuance, and everybody is focused on it, as you said at the outset. I'm wondering, does any part of you worry about the Fed losing control of rates at any point as a result of the issuance that's coming on the market?
Actually, it was Brian Shannon.
We're going to learn about it, and hopefully inflation is moderating. We think
My bad.
that's right. You're going to get it next year. You'll get it in the high 2s. Labor conditions, you're building some slack. It'll be interesting to see the JOLTS report this week and the payroll report. Listen, if you continue to have strength, and then the Treasury's got to put that much issuance. By the way, if you take coupon supply like you had last week, we got almost $600 billion last week. The numbers are staggering. Will the Fed lose control of it? My sense is not. But listen, I mean, we got I think everybody who's in the investment community today is hoping that the growth will be moderate. And by the way, that's what we're anticipating next year, and that inflation is moderating alongside of it. But that is the key, because if that's not the case and the Fed's got to keep going and we've got to issue that much, yeah, you can have rates move higher. Again, not our base case, though.
But a lot of people are saying this recent increase in rates has done the Fed's work for it, essentially. Is that correct?
That is correct. I mean, so, you think about what happened. Most companies borrow, not like it used to be. They don't borrow off the front end of the yield curve generally. They borrow out the curve. Mortgages borrow out.
Okay, we're still chopping around VWAP. Still chopping around VWAP. Okay. McDonald's fading from the high.
That was going to get to 2.5, 2 3/4 over the next couple of years. They've moved back 160, 170 basis points. That's done an awful lot of work for the Fed. I think Chair Powell
will reference that this week. And it's a big deal that they don't have to keep going if the markets have done it for them. Thank you, Rick. We're just getting started, folks. We've got much more on the new world of bond investing with Rick Reeder coming up on ETF Edge. That's 1:10 p.m. Eastern Time. Rick will be talking more about the outlook for rates, the economy, stocks and bonds, and much more on his actively managed bond ETF. He's running this one himself, etfedge.cnbc.com. Scott, back to you.
All right, Bob, good stuff. Appreciate that very much, Bob Pisani. Up next, we'll look inside Fidelity's iconic Magellan Fund, including the tech stock that is not in its top 10 holdings. We're back on the half right after this.
Yeah, Scott, I buy it directly through my Coinbase account. You can buy Coinbase in small denominations. You don't need to buy a coin at 35K. You can buy $100 increments and you get credit for it. All right. McDonald's fading a bit at the moment. McDonald's fading 262. Remember, 262.75 is what we needed to move above on McDonald's to look for the follow through. Right now, long-legged doji, we hit the high right around 262.50. 262 looks like the high. 262, and we pull back, but this does look bullish. Can we get a follow through? RSI is rising. Volume well above average. The numbers, the comps look good. Earnings look good. MACD, stochastics rising. So this all looks good for McDonald's. If we can see the follow through. Here's McDonald's. Now currently fading from the high of the day. So I'll give you a B and C pivot. Potential for a B and C pivot. Right now, we're just seeing a fade in the S&P. Coinbase pulling back. It's $1 off of the noon high there. Coinbase, Bitcoin pulling back too. All right, so Adobe, Mara.
Jeans ever worn.
All right, we're back. We're getting a look today inside one of the most iconic mutual funds, certainly actively managed ones. The Fidelity Magellan Fund might not be what it was at its peak, $100 billion in assets in the year 2000 to around $28 billion today, but it is still one of the most closely followed funds, returning 13% the past year, outperforming the 9.9% return of its benchmark, the S&P 500. Its managers, Jeff Vinnick, Peter Lynch, among the legendary ones over the years. Guys, I looked at this today and I was like, I thought it was interesting. Top holdings as of the end of September, because that's where the most recent filing gets to. All mega cap tech, Microsoft, Amazon, Nvidia, Alphabet, Meta, no Apple. That jumped out to me. No Tesla.
That's a big, not having that holding is important.
So they've counted Visa, MasterCard, Costco, UNH, typically in their top 10. But first, no Apple, no Tesla. What do you think?
Great. They are fantastic. And first of all, the way that they're owning, I'll call them the Magnificent Five in this fund, is they're owning them market cap weighted. So I think Microsoft stands currently at about 8%
of their overall assets. So they're not equally weighted. They've positioned accordingly. They don't have Apple, which is only up 30% relative to some of the outperformers this year, and they don't hold Tesla, and that is critically to their advantage. Along with, I love that they own Visa, MasterCard.
Low tickler -800.
Worked well to your point.
Carvana
Those are both stocks that you could have picked. Recent
pulling back. All right.
Amazon, Boston Scientific, they bought Intuit. You own Intuit, don't you? So that's there, and then exited Weiss Analog Devices, Rockwell Automation, Young Brands, and Humana. You have Humana, don't you?
Yes, I do.
Yeah.
Groupon pushing a bit higher. Groupon.
The fund is so huge, right? It's monstrous. So in order to avoid being just regarded as an index fund, and so why would you invest in the jump and just copy the index? They've got to make some outside bets, both long, Joe's point, for sure.
Well,
So
you're paying for these legendary people to actively manage it.
Exactly.
Manage it like Will Danoff does with the Contra Fund.
Right. So it is important from this perspective that don't have that. I disagree on the importance of Tesla. I think it's obviously helped their form some having it, but I don't think
I'm happy to disagree. I'm not arguing with you, but the fact that they don't have it.
Making a point.
Right.
They don't have it, which is added to their
It's less important, I think that was important. So look,
Humana.
It lines up. So Humana, look, I like Humana. I mean, it's got some volatility to it over the last year. It depends where you buy it, right? Point of entry. So I have to have bought it well, added to it better, and I still like it. UNH, and they pretty much perform in line. I think UNH is a slightly better company, more diverse, but I'm pretty good.
Okay, just hugging VWAP back and forth.
I see stock picking. I like what I see. They face the conundrum that every active manager faces this year of what do you do with the FANG stocks? What do you do with mega cap tech? And they've made choices. Those choices have worked out.
You own them and you own them big.
Well, no, not over the last 3 months. You don't. I mean, just to the point we were making. Tesla's off 33%.
No. But I mean, the Magellan Fund strikes me as more of like a large ship. You're not going to turn it multiple times.
Let me ask this earnestly. 28 billion. Now maybe I'll ask you, Steve, who's in a huge. That doesn't strike me as huge. And granted, it was 100 billion 20 years ago or whatever it was.
I'll take it in huge. It's huge. It's huge, meaning that they only buy a certain market cap level stock.
Wait, really? I mean, we're talking about Microsoft with a $2.5 trillion market cap. I mean, okay. Look, I'm not putting. We're not. Let me be
The
clear.
largest position is Microsoft, but it does say something to me that their top 5 holdings are all mega cap tech.
They're choosing stocks. And this is my point. They're choosing stocks wisely. They had to be in large cap tech. If you want to have 28 billion, which by the way, I'm not sneezing at that. Don't anybody get that wrong. But if you want to maintain that much money, you better be where the puck is going. And this year it has been large cap tech. But they're doing the smart thing and missing some obvious fails here. And Tesla is the top of the list.
What difference does it make how much money they are managing? Don't you always want to be where the puck is allegedly going?
It's a good question, and yes, you do. And the reason I brought it up is because if it were as big as it was back in the day, it might actually be defining by its actions where the puck is going. That's not the case right now.
What time is it? Almost 1 o'clock.
Mike Santoli, he has plenty to say. He's next to the sit
Palantir, pulling back a bit. Palantir. All right, moving back up towards VWAP. So I'm going to have a flat VWAP day. Good day for butterflies and that sort of thing when price action's not moving much. Identified a couple of candidates for that earlier. Marathon Digital, Riot more so. Riot, sideways range, Palantir, sideways range. Potential support here 14 or resistance at 18. Okay. Let's take a look at what is still in play today. Starting off the day, we had Verizon, that slipped a little bit. Verizon is up 3%. Nike, looking for a bounce in Nike to continue. McDonald's, of course, that was a pre-market mover. Catalyst, earnings, comps, all looking good for McDonald's going forward. So McDonald's, we're looking for this to continue higher. McDonald's, we're looking for this to continue higher. Volume, well above average. Looking for this to follow through, head towards the 50-day. Higher lows, higher highs.
We are back. Our senior markets commentator, Mike Santoli, sitting next to me. As you see, I read something you said earlier, which I guess could be described as the churn zone of where we are. And when are we going to get out of this churn zone?
Yeah, this churn zone dating back to the spring. I think we're lucky if we hang here for a little while before maybe gathering up some potential energy. Today, all we're really seeing is an unwind of the late Friday, let's get shaken out of risk because the weekend's coming. We've seen it. We talked about it at the time. Last 3 Fridays, you get a little bit of a big spike. You have stocks backing off, especially smaller stocks late in the day. We're in that kind of zone, that phase where we're anticipating something else to happen geopolitically. And also, you don't want to hold overnight because it feels like it's treacherous state. So we got the unwind oil down. But it's only that.
Just feels like the markets are not going to go anywhere.
Everyone knows the market has gotten pretty oversold.
Could be worse. We could be selling off further. I do like what Brian Shannon shared. I like the idea of what he's saying. It's just visualizing what could happen, not what will happen. It's not a guarantee. But what we're looking for is for price action when it gets this far away from that upper trend line to bounce, pulls back from the upper trend line, gets to the lower trend line now. We got 2 points of reference. Now we have a third point. Gets to the lower trend line, look for a bounce. We're at the lower trend line now. Do we get a bounce? That's what we're looking for. What would help the bulls? An oversold condition where we see stochastics turn. Okay. Looks good. All right, that looks good. Looking really good there. All right, so oh boy.
Athletics.com.
Okay, S&P is just sitting here, flat VWAP, going nowhere. Stochastic RSI is oversold again. Looking for a bounce. But so is everyone else. I gotta make something for lunch here shortly. Coming into the 1 o'clock hour.
Leading to a little bit of relief every Monday morning. But the question is, it doesn't always last very long. This is a massive week for the markets. How about this? 1,326 names, 162 S&P, 29 NASDAQ, 4 Dow Jones, a Fed meeting, but Tom, the most important thing this week might not be any of those. It might be this Treasury refunding announcement that's going to happen Wednesday morning. And the more you read about this, the more you read what it is and how important suddenly supply for bonds is on the market, this could be a massive move in bonds. When they lay out how much money they're going to need for the next 2 quarters, that could be a little bit of an eye-opening, sobering experience for at least the bond market.
Yeah, definitely. Supply, I mean, bonds have been falling, yields have been rising, the 10-year just below 5%. So, yeah, I think one of those overlooked aspects of what's coming out as far as data that might move markets.
Because suddenly out of nowhere, bond supply matters, right? Because you don't have the Fed buying anymore.
Right.
You have foreign governments not buying as much as they were.
Right.
And then you've got a massive supply of needs for the U.S. government. And something's got to give there in a way. Maybe some part of it already has. We'll see when those needs come out. But
Big Apple event tonight.
Could make
Big
for
questions
interesting
about the
Wednesday
stock.
morning.
Morgan
Ahead
Stanley's
of
Eric
Jordan
Jordan will be with me on
we'll
closing bell, 3 o'clock Eastern. Edgar Denny, too, to expand on what he thinks is going to happen.
All right, SPY. S&P just sitting here. What's McDonald's doing? McDonald's looks like a B pivot. Here's A at the high, 1210. Pull back B. Now we need to see a B pivot.
WW Granger. Good stuff. Dow's good for 345. Walk you through the final hour. Closing bell, the exchange is down.
Thank you very much, Scott, and welcome to the exchange. I'm Kelly Evans, and here's what's ahead. Fresh signs that the economy is slowing, regardless of the stock market rally we're seeing today. And hedge fund manager Kyle Bass says things are about to slow down a whole lot more from here.
What is Amazon doing? Amazon, it's hanging out at the highs, so a nice gap up. Amazon has the distinction of being caught between the 50-day, 9 and 21-day, just chopping around between 130 and 132-ish. So if we break above that, the only way we're going to break above is if institutions continue buying. What they did on Friday sure gave us the idea that they liked what they heard with earnings. So MACD and stochastics both firing. So this is a pretty good setup. If you were going to take 1,000 shares, the way I look at this is that, there's still a possibility that this gets rejected and turns into a descending pattern. Okay, so that's a possibility that we need to consider. So is this going to do something like this?
still up north of 0.5% there. And by the way, a level to watch
and pull back down, or is it going to break out to the upside? Well, right now, RSI is showing strength of trend. Stochastics is giving us the best condition coming off of an oversold condition. MACD has crossed, and volume is pretty decent. All right, so here's what I'm looking at on Amazon. You got the 50-day right there. For this to make a move above that channel, volume needs to pick up. Stochastics and RSI and MACD all need to continue higher. This all looks pretty good. Okay, so it looks pretty good for now. So if I was going to take a position after today or intraday on this ABCD pattern, I'd be scaling in. I wouldn't take 1,000 shares. I'd scale in. I'd take 100 shares and sell some covered calls. If we get back up to the highs, I'd probably sell some covered calls. If we move above 132.50 up to 135, then I would probably add to my position, decide whether or not to sell more covered calls or to roll calls up. But I'd be looking at a bullish follow through. We could get rejected right here, so just be aware of it. So how would I do that? I would probably wait until tomorrow. I'd probably wait until tomorrow. That way we'll get the confirmation that we need. Either we get rejected, similar to the idea of what happened on Merck on Thursday. Looked like this was going to break out, got rejected, sold some cover calls on Thursday, bought them back this morning. Now I'm looking for this to bounce again to sell more cover calls. So Merck needs to bounce back up to 107 for me to sell, 106, 107 to sell more cover calls. I'd probably sell what we sold this morning. Or bought back, I should say.
Reports in its industry survey that a net of just 27% of respondents are raising prices now. That's down from 45% of the prior survey, the lowest level we've seen since January 2021. For the
Uber turning. Okay, Amazon.
Inflation falling next year by a full percentage point. All of this has the market convinced the Fed ain't going anywhere anytime soon. 0% probability for a hike this week in the futures market, 24% by December, and a still low 33%.
So we got the Fed on Wednesday. 0% chance they're going to raise rates. All right, so that's the case. US 10-year. US 10-year, we want to see that grinding lower, not hanging out at the highs. US 10-year hanging out near the highs. 5.04%, I think, was the high over a week ago. We hit 5.04 or 5.05, something like that. We had a previous pullback the beginning of October. We need this to roll over. Maybe a head and shoulders top would be nice. A neckline around 4.5%. But this needs to pull back. Wednesday, we'll get the verdict. We get the FOMC. VIX continues to fade. We've been seeing VIX run up into the weekend and then fade as the over the weekend news fails to create any issues. We see VIX fade. So that's what's happening right now. That's supportive of a market to move higher. Right now, we're just sideways, though. So it's a really difficult trade right here to do on the S&P unless you're doing butterflies or iron condors on a 0-day, and you're just looking for price to stay in between 41.30 and 41.65.
We expanded our balance sheets. Fed, we created 40% more broad money in the U.S. and exported that not only to U.S. consumers but to the rest of the world. So I think we've had about 20% inflation in the last 2.5, 3 years. So when we think about what the real nominal, those are two different things. And that kind of inflation, as you just saw in the prior report, talking about McDonald's, moving up because they're able to move price.
Yeah.
But the fact that wages haven't moved with the price level is something that we're going to be battling now. We're going to see wages continuing to move higher, as we see in the auto worker strike and the UPS strike and the others, versus we're trying to catch up where the price level is. So I think that's the real problem the administration has and the Fed has right now.
And that certainly spells profit margin squeeze for earnings. So if I if I said which would you rather, stocks or bonds right now, you can only pick one. Would you? I mean, which one is it?
Well, I mean, if it's right now and not for the next 10 years, I'd surely pick bonds. I mean, if you look at the U.S. curve, whether you're on the front end or the back end of the curve, you're all right around 5%, plus or minus 20 basis points. And, look, if you move the price level 45% in a couple of years, can you get a print that's a year-over-year print that's down? If you moved it from, let's say it was at 100 pre-pandemic, now it's at 145.
S&P flat.
If you get a 143 print, I sure hope so. And that's when the Fed and the team will victory lap and say, we got inflation under control. But the new price level is still 143, and we're going to move higher now. We're going to look for 2% inflation, right? That's the insidious nature of inflation and the Fed and the Treasury. So, this year we're going to run a 7.5% of GDP deficit. Another way of saying we have $6 trillion of expenditures. We're only going to bring in $4 trillion. I mean, our politicians have lost their mind.
No, but
we've never run a deficit like that. That's a non-wartime deficit of full employment. So
you're absolutely right. We've never run a deficit outside of an emergency that is that large, and there's no real prospect for bringing it down. That's what makes the question about bonds so interesting. I didn't specify if you buy treasuries versus corporates.
Uber.
There are still plenty of people who think the
Okay, let's one more time. Let's go take a look.
In other words, as bad as the projections look, that the bigger force is
At what's working on the Dow Jones. All right, the usual suspects that were here this morning. Caterpillar at the lows. CRM, Salesforce. Salesforce might get something going. Okay, Salesforce, in order for me to be interested, I would scale in, but we need to get above the 50-day. 921.50. Everything is overhead resistance. Stochastic SARS reversing, MACD turning, RSI turning. So this might work out. CRM. Okay. S&P. Western Digital. Nice gap up, but faded. What I'm looking for are stocks that don't fade too much. You can see the wick on the ABV. Tough to trade that one. Charter Communications. We know that the communications sector, XLC, is in play. NKTX. Double bottom. Good setup. Stop below 200. Market access holdings. Verizon. Looks like it wants to break above this. Verizon looks pretty good. It's a relatively inexpensive stock. It looks like it's consolidating right underneath 200-day. If it gets above the 200-day, that could be starting a trend higher. What does the weekly look like? Weekly? Okay, so weekly passes the checklist. The 10 EMA weekly and the daily look good. Okay, just need to see the follow through now. So those two time frames confirming. Let's see what Ichimoku looks like. It's probably below, right? Ichimoku. This is a trend following system. Oh, we're above Kumo. Cool. And we got a Kumo twist. So that looks pretty good. Chiku, the green line right there. I don't know if you can see that, the green line. This follows price 26 periods behind price. And whenever you get a follow through, you're looking for Chiku to be above Kumo and above price action. So this confirms everything else we're seeing. Kumo twist. MACD's following through. Now we're just looking for the break higher. RSI is rising. Consolidation. Move above the 200-day. This will be good for a swing. Now that earnings are out of the way. Let me just check earnings real quick. Earnings.
capped at 150 with the DOJ intervening. I think Japan's between a rock and a hard place.
They beat by 5 cents.
And I think playing with the front end is like driving a truck full of nitroglycerin, down a bumpy road. I think it's very, very, very good.
So Verizon beat by 5 cents. They reported last Tuesday. They beat by 5 cents. Okay, that looks good. Dividend 66 cents. Momentum, TTM momentum is more bullish. Okay, so Verizon looks pretty good too. Verizon looks pretty good. McDonald's. Okay, McDonald's. I know we've already talked about this a bit. It's got to get above the 10 EMA. So if you are thinking longer term for McDonald's, you need to get above the 10 EMA. That's going to take maybe this week and a couple more weeks for this 10 EMA to turn. You can see the last time we dropped below the 10 EMA over here in September, October last year. It took us a week to get above and a second week before we just took off to the upside. So the numbers look good. The comps look good. So there's a good possibility that we get above the 10 EMA this week. That would be confirming as well.
Maybe 110 billion. I think we're on 65 billion this year, and most of that is going to our defense industrial sector to build the energetics that we need to build. We have a $6 trillion federal budget. Again, I'm not saying 100 billion to drop in the bucket, but as a percentage of our expenditures, it's almost nothing to help Ukraine fight off the madman Putin, to help Israel defeat the terrorist forces of Hamas, and probably soon to Taiwan to help fight the madman Xi Jinping himself.
Well, I'd like to see maybe Mr. Johnson, a debate going.
Okay, so rather than fight the trend, we're watching the trend right now. The trend is down, and we need to see some confirming price action. Not yet. We're just sitting down here below 4150. 4165 is today's immediate overhead resistance. We didn't get there. We got close. 4163, I believe. So we're looking for stochastics to fire like it did the previous 2 times in August and the beginning of October. If this does fire, we'll look for a move back up to that upper trend line or the 50-day, which is cruising lower.
He's showing his true colors. Where else are you going to put your money? You're going to put your money in the BRICS, run by China, Russia, and a group of, the Rhodes Gallery of countries and currencies. No one's going to put their money there. So I think we have to steer.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
No, I think that's well said at a time when, as you mentioned, it's not quite as popular as it once was. Kyle, thanks for joining us, and buy stocks for the long run. I love that as a coda to all the concerns that we're discussing. I totally take your point. Kyle, really appreciate it. Thank you for your time today. Kyle Bass with Heyman Capital. On that note, let's take a closer look now at the impact that the economy, the Fed, even these geopolitical events are having on the energy space, because that big combination is a major threat to the continued availability of affordable energy. Brian Sullivan has been following that story for us.
We start this with quiz, Kelly.
Bring it on.
All right, so Indian Point Nuclear Plant, upstate New York, taken offline a couple of years ago. How many natural gas, wind turbines offshore, and solar panels?
101 counterparties taking $1.38 trillion of data reverse recorporation.
How many kind of big producing
plants? Yeah, the giant offshore wind turbines that Pippa was showing our audience offshore.
100?
240, 5 million solar panels, and 3 natural gas plants to replace 1 large nuclear. This is not some promotion for nuclear.
And was nuclear was that plant taken offline because of issues, or just
it was old. Yeah. Ran for 60 years, but they broke a lot of records about continuous operation.
and this is not some pro-nuclear piece. What we're talking about here is what Steve Leishman always showed, which is interest rates. Because what the audience needs to understand is we can take off certain amounts of power. That's fine. Like Indian Point, coal, get rid of it, right? Clean the air up. But you need to replace the power with something. Over the last 40 years, demand for power, electricity in the United States, Kelly, has doubled. It's doubled from 1980 to now. And with data centers and AI, what do we think is going to happen? So since the Fed began raising rates, a lot of promise about new energy, right? Solar, wind, batteries. Since the Fed began raising rates on March 17, 2022, Solar Edge down 75%, Sunrun, Siemens Energy, which needs a bailout in Germany, Ørsted, the biggest offshore wind, down 61%, oil and gas is up. The point is this. Here's the real worry. If we're taking off power, will the Federal Reserve and higher rates crush the new energy revolution? I mean, that's a huge question.
And to what extent is the state willing to step in and continue to subsidize it? Because in the low cost of capital era, exactly, they were often eager and willing to do so. I even look at the election results across Europe and look at the Greens and some of the results that they've had relative to other parties, and you wonder if voters are saying and realizing it's not that these aren't important priorities, but that we can't afford to just subsidize going a direction that undermines our ability to just have a reasonable standard of living.
Well, you might know a guy that's been in Europe a couple of times the last few years talking about this. And, listen, Germany's in dire straits, and they've been saved, ironically, by mild weather. They had kind of a cooler industrial summer, not the south of Europe, but in the industrial parts of Europe, and a fairly mild winter. They've got enough gas to last this year. Back to the United States, so my point is this. You said the states. Okay, so New Jersey recently gave Ørsted $2 billion in tax credits that were supposed to go to consumers. New York State just said we're not going to pass rate increases on two big offshore wind plants called Sunrise and what's the other one called? There we go, Beacon. And those are about 1.6 million homes. So if you're taking, because they don't want to pass that cost on to consumers. Rhode Island in these fights as well, Massachusetts with Vineyard Wind. It's not a knock on wind power or solar, whatever, but the point is this to anybody out there listening or watching, hopefully some politicians. If you are going to take power offline, if you're going to shut down coal, shut down natural gas, shut down nuclear, you better have something to replace it with. And the idea is we're going to replace it with these offshore wind farms. Fine. 1.6 million homes for Indian Point, 1.6 million in new offshore wind. But now that may not get built because of higher interest rates, continued labor and materials inflation, and the reluctance to pass along extremely higher costs to a consumer. So if we have a really cold winter this year or a really hot summer next year, and we don't have the power to make it up because we've been warned by these grid operators, Kelly, that it is possible we're going to have power shortages. Somebody's got to build new power plants.
Right.
I don't care if they're hamsters on a wheel, windmills, solar, Mars, whatever.
Cold, you look at the way that people have jumped up to kind of restart some of those plants again across Europe or even here, and that tells you the desperation level that we could see.
Indian Point was replaced by 3 natural gas plants, significantly increasing the use of fossil fuels in New York State. I don't think that was the goal.
Absolutely. Brian, thank you for bringing that to us. We'll see you later. Our Brian Sullivan. Let's get to Apple now. The tech giant gearing up for its Scary Fast event tonight at 8 p.m. Eastern. It's expected to unveil a new lineup of Macs, plus its next generation silicon chip, the M3. Apple shares are up into that keynote presentation. They're obviously coming off a tough stretch. But the unusual timing of the event has caught the eye of investors and analysts alike, including our next guest, who says the scheduling is very odd ahead of their Q4 results. Joining us is Needham senior analyst Laura Martin. Good to see you again, Laura. Welcome. A primetime tech show. I'm not sure I've seen one of these before.
I'm very scared. I mean, this is Halloween a day early. I'm very scared about this event, Kelly.
So what do you think it's all about? Have they hurried it out? Are they trying to do something? What is this really all about?
Futures now falling $3
Well,
in
I
session.
think, good question. They just announced with Nike a big sustainability push, and so maybe part of it is that. But also, I think they really need a refresh on the Mac. And so we're hoping they get a laptop with their new silicon MP3 silicon chip. And so I think they're just trying to tie it in with Halloween because it's the day before Halloween. So they decided to do it 8 at night your time.
So no news catalyst for this recent breakdown in WTI oil. Let's keep an eye on the wires nonetheless.
Do you think they can, despite all of the concern at Agita, do you think they can come out and dazzle folks and kind of reignite the next move up in the shares?
Yeah, I think we're a little above the street on these the MacBook Pro laptops, and I think that probably they're going to have a weak quarter on that. That's my read of why they're doing it today, 3 days before they do earnings, is they're going to have a very weak sort of tablet sales. And in order to allay that, they're front running that by this dazzling new show about what's going to come out, and so people sort of overlook a weak number from the laptop number when they report on Thursday. That's my read on the weird timing here.
All right. Anything else you'd say? I want to ask you about Disney, but what else are you going to be listening for this evening's event for Apple, and even or as we start to turn our attention towards earnings?
Yeah, I'm really listening for anything that has to do with China demand. You know, we're seeing channel checks saying that Chinese demand for the iPhone 15 is down 6% year over year. And as you know, the government in China, sort of getting even with America for threatening to kick out TikTok, is saying Apple devices cannot be used in government buildings. So that geopolitical tension could really, China's 20% of Apple's unit sales. So anything having to do with China and the weakness in China, I'll be really listening carefully for.
All right, and that kind of loops over whatever we may hear this evening. On Disney, Laura, we do have this report that Ike Perlmutter is backing Nelson Peltz in his campaign there. What do you make of that?
So no surprise, right? Because he backed him last time too, and they both are sort of almost, I'm going to call it enemies.
I'm here with you. I'm just having lunch. Make sure you take lunch. Push away. Give your brain some time to reassess the markets. Taking regular breaks during the day is always very helpful. Get a fresh look at the markets. All right, I'm here with you. I'm just eating lunch. I'm off the mic. I'm just watching the markets.
Bringing that into proportion, or would you rather see some splashy moves on the content front that kind of make people feel better about the investment spend?
The issue with the revenue line is it's out of his control. We've got strikes. He just pushed off 2 big movies for a whole year because he thinks he can't market without actors, promoting them. So they're pushing off the content, which is going to hurt their revenue in the near term. So no, he can't really. I mean, it's harder for him to affect the revenue line with cord cutting and with the strikes having to do with movie releases. So he's got to cut costs, and that's like the only thing that Bob Iger can control over here at Disney. And I think this bid by Nelson Peltz, along with Perlmutter, is going to force him to do that, which I think is great for shareholders.
Yeah, again, may send a chill down the company's spine. Maybe the only way to boost the stock price at this point. Laura, thanks for joining us today. We appreciate it. Good to see you again.
Nice to see you, Kelly.
Laura Martin with Needham. Coming up, one stock that's jumping today, XPO surging 14% after a big earnings beat. The CEO joins us fresh off the call with how they're navigating this very difficult freight environment. Plus a special commercial real estate edition of Earnings Exchange. We heard from Empire State Realty CEO last week after their positive results. What about the rest of the space? Morgan Stanley's head of CRE will join us next with what to expect. And as we head to break, let's get a quick check on markets as the Dow is taking a leg higher, up 435 points or 1.3%. The outperformer, look at the gap between the blue chips, the big caps in the Dow, and the Russell 2000 small caps. Only up 0.1% today. The S&P, the NASDAQ right in the middle. The 10-year still at 490. We're back after this.
This is The Exchange on CNBC.
Note VIX is dropping. VIX is dropping. That should be bullish.
High took alert plus 800.
All right, let me put my salad down for a second.
Welcome back to the exchange. Shares of the trucking firm XPO are on track for their best day since April after an earnings beat on the top and on the bottom line. The company's less than truckload or LTL business seeing a boost from the bankruptcy of rival trucking firm Yellow, which had accounted for about 10% of that market. The XPO is up 150% since spinning off its RXO brokerage unit about a year ago. What is the state of freight now for the fourth quarter and beyond? Joining us now, our in-house freight expert, Brian Holland, along with XPO CEO Mario Herrick. Welcome to both of you. First of all, I really appreciate you guys being here. And it's a lot of important things happening today. Your earnings, the nice stock move. And so you said, Frank, the 1 year anniversary of him taking over. How are you able to execute during this extremely challenging freight environment? Is it just market share gains from the struggles of some competitors?
We had a great quarter in the third quarter, and the team executed really well. So we've been improving our efficiency over time, so we were able to handle
Excuse me.
higher prices, and importantly, record service quality. And we're excited about that for our customers as well.
So Mario,
High took alert plus 800.
a year ago I talked to you when you took over as CEO of this company, became a pure play LTL company.
Okay, looking pretty good here. Looking pretty good, folks.
Pricing up 6.4%, tonnage up over 3%. We call it volume here just to simplify for the audience. What was the catalyst for those gains?
Well, starting first with pricing, the catalyst for these gains has been our improving service product. We exited the third quarter with a company record in service quality for our customers. And when we invest in service, our customers are willing to pay a premium for that, and we've seen an acceleration in price associated with it. On the volume side, a lot of that went through the Yellow as a bankruptcy or ceasing operations in the third quarter, where we saw they were 10% of the industry capacity, and all that freight had to go somewhere, and we were able to take on more of that freight for our customers.
So you were able to benefit from the closure of Yellow. We want to talk about your customers for a minute. You have some blue chip customers, Ford, Dow, General.
Nice trade, Cayman.
Were you able to gain other customers? What kind of customers did you gain?
Yeah, so we gained thousands of
Extreme high took alert.
a year, and a lot of these were driven by the service improvements I just mentioned. Now, a lot of them were smaller customers. A lot of them were mom-and-pop shops, and we call them local accounts in our business, and then we were able to onboard thousands of new customers through the course of the year and grow volume in that segment of business.
So you talk about these mom-and-pop shops. Is that a higher margin business? Because today they actually made an announcement. It kind of flew under the radar. It's part of why the stock's up. We believe by 2027 we're going to improve margin by 6%. We call it operating ratio. It's an efficiency metric. Lower is better in this case. You believe you have 6% of improvement in the next couple of years. How are you going to get that out?
Well, Frank, first we say at least 6%, because our goal is to actually get to a higher number, and we want to get our operating ratio to 7% over time. Now, we're going to make that happen predominantly through three main levers. One is about continuing to improve our pricing or yield over time, driven by service improvements. The second one is making sure that we lean into higher margin business and local accounts.
Extreme high took alert.
And the third area is around cost efficiency. Look here in the third quarter, we increased our shipment by 10% on a year-on-year basis, yet our labor, our headcount was roughly flat on a year-on-year basis. And all of that is proprietary technology improving our efficiency as we go along.
It's fascinating to look at the performance of RXO versus XPO since the spinoff. I mean, RXO has been basically flat. You guys are 150% over the past year. I'm not sure that's what people would have expected at the time, because RXO is supposed to be kind of like the tech, whatever you want to call it, piece of this. But can you talk about macro conditions? What is happening to the economy right now?
But RXO is a fantastic company, but a lot of it is a cycle. They own a different cycle than the macro industry. But from a macro perspective, we usually survey our customers on a regular basis, on a quarterly basis. And what we're hearing is that things are soft,
but they
Israel's national army says Israel will not agree to a cessation of fighting with Hamas over the October 7th attack.
So ISM manufacturing index started from the third quarter. In September it was roughly 49, which is still inflationary, but getting better. So one of the questions I want to ask you some news today. There's a private truck company called Jag Cooper. I personally haven't heard of it. Maybe you have. They're making a bid to buy Yellow's assets. As we mentioned, Yellow was about 10%.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at tickstrike.com.
We can just keep an eye on this and giving evidence for less comments.
But also it could be in the hands of carriers at price at a higher level. So we will see a dynamic of a rising tide when it comes to pricing associated with that. But we'll see what sits in us as it
It'll be interesting to watch for sure. Well, thank you both so much. We really appreciate our Frank Homebull and CEO Mario Parr. Thanks for coming in.
All right, we ran into resistance. Maybe peel some off here. If we do follow through, if we get above 41.65, that would be noteworthy, folks. So maybe take some off.
And haven't we already had so many of them? Kate, for now, thank you very much. Our Kate Ruby reporting in Manhattan. Let's get a quick check on markets. They continue to move higher to session highs nearly with the Dow 482. The high was 519. And again, it is the outperformer with a 1.5% gain. The S&P up 1%, the NASDAQ just shy of that. Over to Tyler Matheson for our CNBC News Update. Tyler?
Kelly, thank you very much. Israel's military says it has freed a hostage. The IDF reports that the soldier was released overnight during a ground operation and has been medically checked. He's doing well and has been reunited with her family. The private was taken hostage by Hamas during the October 7th attack. Senior defense officials said that U.S. targets in Iraq and Syria have been attacked at least 23 times in the last 2 weeks. At least 4 of the attacks happened after the U.S. launched retaliatory strikes on Iranian-linked targets in Syria last week. U.S. military is buying Japanese seafood in bulk to offset the impact of China's ban on the food. That's according to a Reuters report. China issued a ban after Tokyo started releasing treated water from its Fukushima nuclear plant into the sea. The U.S. purchase included about a metric ton of scallops. These purchases will feed soldiers and will be sold in shops and restaurants on U.S. bases. Back to you, Kelly.
All right, Tyler, thank you. We'll see you soon. Coming up, Vornado and Simon Property Group are on deck with results after the bell. We have the numbers and the narratives to know ahead of those prints next in earnings exchange. Don't go anywhere.
Salisbury, Caroline Woods, senior market correspondent here on the network. Talk a little bit of McDonald's, a little bit of fast food. Getting pretty big jump here today, but this stock, Caroline, falling, pretty precipitously from those all-time highs we saw about 3 months ago. What was your takeaway from the report today?
Hey there, Tom. Yes, McDonald's getting a nice bump today after beating on both the top and bottom line. Shares up more than 2% right now, but still negative year to date. Inching closer to the unchanged line, but still down about 0.7% on the year. Those GLP-1 weight loss drugs really weighing on sentiment, especially over the past 3 months. Not seeing those reflected in the actual numbers, though, in terms of McDonald's results, are really being
a little bit rockier last year, but all things considered, a pretty flat year, which would have been outperforming the market. This year, though, and this last quarter leading into this, in particular, was kind of uncharacteristically volatile for McDonald's. Yeah, and you can see that in terms of some of the price activity. It's come under pressure. Let's put the chart back up again. How we're holding below the 50, holding below the 200-day moving average. That's what stands out to me most notable. I think it's a pretty good representation of the broader market, but we have to come off the double bottom in place recently this month, right around the 235. It looks like covering some, as I mentioned here, still kind of in this range, but you can see the energy associated with the move lower that we saw at the end of September, beginning of October. Again, now it's 245, recently pulling back to the lows that we saw earlier this year, back in January. So we rose through the year, but one thing I'm noticing is volatility is somewhat limited. Again, the real acceleration of the downside is starting to reverse a bit here potentially. So we'll keep an eye. The one on the 50-day moving average, maybe get back above 267, which, again, as you can see, kind of coincides with the middle of the range we established last January, back in January and February. And then even above that, you've got the 200-day moving average, which is around 278. But this is a stock that's coming under pressure. If we double top here and roll back over, obviously the recent lows here. One thing I really think has caught us high, it's kind of limited in terms of distribution to the upside, but more a reflection of this kind of long-term trend of the downside that we've seen. Again, looking at move from 300 here to 240.
One thing that I don't even know that we commented on, but this was quietly really volatile today. It was a good roller coaster ride intraday. It jumps on the announcement, it falls on the call, and then steadily climbs back here intraday. 263.70 the intraday high. We'll see if we can get back there. But I did have a trade illustration with what we talked about in mind. No earnings on the calendar for a quarter from now, absent any surprise kind of early releases. I looked at a trade that goes out to December monthlies, Ben. So December 15th is the expiration date. You're simply buying a call vertical. One in the money, one out of the money. Buying the 260, selling the 265 for 250 debit. Pay $250 in risk to make $250 in max profit. 260, 250 would be the break even. You find that by taking that 250 debit and adding it to the long 260 call. Of course, that gives you 262.5. So we have sort of loose guidelines when it comes to debit spreads. Those, of course, typically are equal risk to reward. We have that with this trade illustration as price. And then the break even kind of in the wheelhouse of the current share price. Now, granted, it's about 70 cents higher, but given the nature of course, interest rates, and of course, the fact that we have 46 calendar days to expiration, I would say 70 cents is in the ballpark of to that break even, the current share price, kind of in that range. This isn't entirely out of the money. So looking for some upside in McDonald's to continue that post earnings, the stock of $6. Still nothing in terms of the overall market that I can find. I'll check again during the break and we'll update if we find it. But right now, S&P is at 41.50. We're taking a short break. When we get back, it's time for another earnings preview. We'll look at Pinterest, one of my favorite names to talk about. We're back.
Young lady who was in her 30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was her, they were able to help her. The clients don't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes. A morning trade live on Schwab Network.
weekdays at 9 a.m. No politics, no noise. Bell to Bell and beyond. Available anytime, anywhere, on any device. Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of the big streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network. Available anytime. Connection Investing. On this topic, joined by Ben Lincolnstein, time to discuss Pinterest ahead of its quarterly earnings release. All these days, quarterly earnings releases, earnings season, of course. But Ben, I said it before, that's one of my favorite names to talk about in this space because of how clear the path to monetization is for its users. You go on this to look for ideas. It makes a lot of sense to embed advertisements when you have literally users going on here looking for things to buy. It's not the same when you go on Facebook or Snapchat and you're trying to see what your friends did over the weekend. So it's a very different company than some of its peers, but naturally lumped into that social media world. A name that is slated to announce its earnings after the close here today. Nice little move here, though. Intraday bet up 1.6%. Up about 1.5% here, Alex, is really late results this afternoon. But looking at a stock that's been mostly range bound, for the most part sideways, breaking down recently below the 250-day moving average. So much like some of its peers, the other social media names Alex mentioned here, struggling as of recent year and reflection of the broader market. Let's bring Caroline Woods joining us this afternoon for a look at a couple, preview the earnings cap. We take a look at the earnings preview in terms of what we're expecting this afternoon here at Caroline.
Hey there, Ben. Great to see you. I was so curious to ask Jenny if she was on, if she got her costume idea, her Taylor Swift costume idea on Pinterest when I saw that I was covering this, because she made a really impressive homemade costume. But good to see you too, Ben. So anyway, shares up 1.5%, as you said, ahead of earnings after the bell. But it's a stock that has been under pressure this month, down about 8%, 8.5% in October leading into this report. Pinterest, as Alex made reference to, relies heavily on advertising sales, and so we'll see how they're mitigating any pressures on that front. We did hear, we kind of clumped Pinterest into the social media category like Meta, say, and we did hear from Meta CFO that ad sales have softened lately because of the conflict in Israel. So, it'll be interesting to see what Pinterest has to say in terms of any sort of commentary on that front. But in terms of the actual numbers that we're looking for, adjusted EPS of 21 cents on revenue of $743.34 million. Just to put that in perspective, Pinterest reported revenue of $685 million last year, so should see a pretty nice uptick in quarterly revenue. Global monthly active users is another key metric for Pinterest. Those jumped 8% in Q2 to 465 million, so that's kind of the number to watch when they report for Q3. Anything above that would represent growth. And then average revenue per user, ARPU, will be another key metric, especially outside of the U.S. and Canada, because we know that they are so focused on international expansion. The Amazon partnership is also going to be in focus. They display Amazon-sponsored product ads to make it easier to shop. So, Alex, I'm sure you've noticed those as you're browsing through Pinterest. And then, of course, costs and expenses. We know that Pinterest has been in cost-cutting mode, although in Q2 they did see costs and expenses go up by 11% to $781 million during the second quarter. So Pinterest in general has had a pretty rough year. I mean, could be worse, right?
I think investors are hoping for that. It's finally fallen about 20% off its highs, but Caroline, to your point, I think that's the issue with Pinterest is you got to get someone like me on there. I have no desire to be on Pinterest. I love to talk about it. I think the business makes a ton of sense, but it's got a user growth problem, unlike its peers that seemingly just keep finding them. Billions and billions in the meta world are on this, yet they keep finding user growth. The ads make sense here. Just how do you get more users on the platform? Any final thoughts on Pinterest before we say goodbye?
Well, I always like to take a look at the analyst breakdown heading into this report, and I will say that several analysts, at least three, Stifel, Citi, and D.A. Davidson, recently have upgraded shares to buy heading into this report, so turning more bullish as they approach quarterly results. Stifel is particularly bullish because of the international monetization opportunities, saying we think there is still plenty of room for growth outside the domestic market, pointing out that last year, Pinterest expanded its ad offerings to Argentina and Chile, but 40 to 45% of user base is still in countries where the platform doesn't contain ads. So definitely see some opportunities there. There are 34 analysts that cover the stock. 18 have a buy rating, so a little more than 50%. Median price target is $33, so that represents more than 30% upside from current levels. So analysts not all neutral to bullish on this name, and getting a little more bullish. So we'll see what the reaction is after Pinterest reports tonight.
I'll be looking for it. Caroline Woods, appreciate it. Team Mark's correspondent for the Schwab Network with the preview on Pinterest. Then we're not going to take a short break. We get back. Take a look at, for under 30, look at the online personal finance and banking company SoFi with George Tillis. We'll be right back.
I was born on the south side of Chicago. And it's been a long road, but now I'm working. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial needs. That means a lot.
All right, so here we are, 4163, 4164. We get above 4165 and volume picks up. If we can follow through, that would be significant. That would be a change. Grover talking about cycles turning. I see the same on NIMO.
Biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only the Schwab Network.
All right, we got a big buyer of Amazon. 150,000 February 115 calls for $21. An adjustment of the 120s, November 120s. Amazon.
George, we talk SoFi and we take a look at this one. This is a company that seems like it could be poised for a bounce back with student loans and things resuming, but not the greatest performance here today as the stock lags 1.5%.
Well, yeah, I mean it's down after it traded higher initially based on the report of earnings on Monday.
High tickler plus 800.
If you look at the boost the company received from the breakdown of the Biden administration's plans to cancel some student debt and also repayments, it had that move going back to, looks like May, all the way up until the most recent correction that we've been in. And I think the overall, macro-centric conditions and problems we're facing from interest rates and, total loans actually falling have been still weighing on the stock, irrespective of the beat on earnings. Now, they came in and they actually produced a loss of 3 cents, which was better than the 7 cents loss of estimate. And of course, a lot better than the 9 cents last year, but nonetheless, they're still losing money.
All right, the 140 strike for Amazon is a 40 delta. Those are going for $5.40. There's 2,500 of those traded so far. 40,000 in open interest. Amazon looks like it wants to break out.
The estimates were 7 cents loss. They came in with 3 cent loss last year. They had a 9 cent loss. So my point is anytime you're floating around that break even, you're going to start in a stock. If you're investing it or trading it, that's very volatile. Now that's great for traders. It may not necessarily be good for investors who are looking for a longer term holds.
George, you mentioned sales being robust here. I guess I'm wondering, is this a reflection of a stock, a market in general that's been coming to grips with this higher for longer environment? Obviously a major factor when you're talking about a name like this.
So I think it's a combination, actually. I think if you just look at SoFi, it hasn't been profitable. And I went back and looked prior to its public listing in 2020. It was profitable in 2017 at $149 million. Now, every single year since then, including the last 4 quarters, it's been losing money. It lost around $236 million last year. But at the same time, you go back to 2017, the total shares available in the free float were around 37 million. It's increased by 25 times that, 936 million shares outstanding. So the company's been
All right, there goes the S&P taking off to the upside.
But the elements behind now, what are they buying? They bought Galileo, which is a digital payment services company. They're expanding aggressively as a company SoFi now into brokerage services, insurance services, and digital banking, all of which were really good back in 2020 and 2021, but from an industry standpoint have fallen. Just look at PayPal, for instance, or Square. I'm just giving you a couple of examples. So you add that to the macro-centric components of, interest rate compression, total volume of loans probably falling. That's also weighing on the share. So looking at it from a weekly basis, around $8.30. That was a level it established back in January of this year, but also late August of last year. If it breaks above that might demonstrate a trend reversal. But keep in mind, when you're losing money in this environment, there's no tolerance for it. And that's why you look. Initially, if you look at a 5-minute chart or an intraday chart, you'll see a big run up early and a sell-off because really, at the end of the day, profitability matters in this market environment.
Big thing for this, the big question mark is what will happen in a credit downturn. We're yet to test the waters for SoFi in a downward credit spiral. So we'll see. Knock on wood, that doesn't happen anytime soon. But one we'll find out when it does. George Taylor.
All right, Amazon looking very nice. S&P just above resistance. Now we got 4175 coming into view. Resistance.
155 in the Nasdaq. We're talking about the Russell clinging on to gains up over 0.5% now. I didn't see anything, but one can't deny that this is a really impressive rally here on this Monday afternoon. Yeah, I'd have to agree, especially considering the close, the end of the week we saw last week, Alex. But I just want to point out here, as I look at the broader market here and where we are relative to the 50 to 200-day moving average, is still holding below both of those. You're talking about sell-side activity off the highs that we saw this summer up around 4,600, recently taking out 4,200. That was the lower extreme of the range that we've been in. So this is not what the bulls wanted to see. Yes, we're pulling back here some today, but still in this longer-term trend down off those highs from earlier this summer. We'll keep our eye on it. That's going to do it for Ben and myself. Coming up next, we got the watch list. Have a great rest of your day.
My dad was a hard worker. Used to do side jobs, installing windows, charging something like $100 a window. Other guys were charging $400-500. You just didn't want to do that. I was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
I'm Nicole Petalese, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Yeah, good idea. I like what you guys are doing.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. Peace out, coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Only on Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week.
Okay, let's take a look at Amazon because this is really, really looking good with that big order. That big order.
U.S. State Department says Hamas is making a number of demands before it will allow American citizens to leave Gaza.
All right, so there we are at 125. That's a good support area between 125 and 127. Nice, nice, nice. The key, though, if we can stay above 50 today, that would be a big deal. Okay, so we had a nice bounce there.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalese. It's 2 p.m. Eastern Time, coming to you live from the New York Stock Exchange. Thanks for being with us. Here's what's coming up on today's show. Our panel is looking closely at onsemi after its shares plunged more than 18% after that earnings report. We'll also examine why one guest thinks Verizon may have a 20% upside potential in the coming months.
All right, looking good. So far, so good. All right. All right. All right. So this is a big deal. One of William O'Neill's, the late William O'Neill's observations was look for that day 2 follow through. All right, this is a big deal, okay? And there's so many things going on. All right, so 4165 is still resistance. Okay, just looking at Amazon, I was just marking up a chart here. We got RSI moving back above 50. That's telling you the strength of this trend is improving. You've got a day 2 follow through. I'd like to see more volume by the end of the day, but a day 2 follow through pushing us back above the 50-day. MACD and stochastics have fired, all looking really, really good. So keep that in mind on Amazon, looking good.
consumer savings is dropping, consumer debt is increasing. They've been flush with cash because of everything that went on with COVID and all the stimulus that went on, but that's starting to dwindle. And the concern that I have, though, is that the stock market is this wild animal that we feel and consumers feel like has been temporarily tamed. And I believe that a lot of consumers might be getting a false sense of security from what the Federal Reserve has done. The Federal Reserve has kind of told us that they're going to keep the stock market from crashing. When that happened in COVID, they lowered rates, they did tons of things.
All right.
And I think that the average consumer might be feeling a false sense of security, thinking that the Federal Reserve is going to bail them out. Well, we have to remember that
I got a nice follow through. I'd like to see us close above 41.60. 41.65, 41.70 would be even better.
But they might not always be able to. So we just have to be careful. I am concerned, at this point.
Yeah, what's interesting is I saw a report that Goldman Sachs saw inflation actually coming down a little bit in the next year or so. And so at this point, there were a few reasons why the Fed shouldn't actually hike one more time. There was talk that inflation is going to break. But to your point, debt on the rise, there's savings and things like that. Maybe we should work on that.
Yeah, absolutely. It has come down. It peaked at 9.1%, I think, over a year ago. And now, in fact, it's down in the 4% range. I don't know the exact number, but the Federal Reserve wants it at 2%. So it's still a lot higher than where the Federal Reserve is indicating that they want it. So there's still some work to do. But inflation is a lagging indicator. It's something that takes some time to catch up. So I think not raising rates absolutely is the right thing to do. That's what it looks like they're going to do in the next meeting. Not raise rates, the market is betting. And I think that
I'm so congested. I don't know why. Sorry, I keep clearing my ear, my throat in your ear.
labor market is softening. So you have these factors that are showing some cracks. And the economy and economic growth is probably going to slow down. That's what they want. I don't think raising interest rates is, I think that holding interest rates is the right thing to do. I don't think they need to raise interest rates more from here.
And I'll add that both sides also
All right, looking for the markets to continue this. Very nice. Very, very nice.
I guess the bright spots are that the Federal Reserve right now has bullets in its gun. They're, with the Fed Reserve rate well above 5%, if we do start to have some problems in the future, they do have the ability to lower interest rates. And that could be good for the fixed income market. And that could be a bright spot in this whole thing. For the last couple of years, it's not been a bright spot. It's been one of the worst performing parts of the economic environment for years. I think it's but for the first time in decades, 40 or 50 years, you can actually buy fixed income, lock in higher yields, and use it as a potential capital appreciation play. So I think that could be a bright spot in this whole thing as well, too. Federal Reserve lowers rates, it's going to be good for fixed income. At this stage, no matter what phase of life you're in, I think you should have some fixed income in your portfolio.
Right, understood. Let's talk more about portfolio. Are your clients, what are they telling you?
Well, I know people that are retired or close to retirement. And retirees need protection and they need income. So we focus on fixed income here at Providence Financial. And I believe that the future, the next decade, whether you have income depends on whether or not your portfolio is satisfactory to you or not. In history, there are long periods of time, decades or decades and a half, where the market is just flat. A lot of crashes and recoveries but wash each other out. And those are always followed by good decades. Well, the this last decade, the market's up 15% plus. The previous decade, the market was flat for 13 years. And a lot of people think the next decade is going to be flat.
All right, what is, I see people talking about Disney all day today. Disney. Yeah, it's just hanging out down here. Disney's one that you could do, probably do a butterfly on. Or an iron condor. I'd like to see it get, if it got up to 82, I'd probably be interested in iron condor, where you would sell maybe the 80, buy the 78, and you'd sell perhaps the 86 and buy the 88 for a credit with a max loss defined. Let me see what that looks like. Disney. Let's see what Disney looks like. For November. November. Let's say the monthly. November 17th. Okay, so a iron condor on that. All right, so for every iron condor that you take, your max loss is $30, but your maximum proceeds $70. So it's more than 2 to 1, and you need prices to stay. Let me widen this out a little bit. Let's see, sell to open. The 79 put, buy the 78 put, and 82 call, and buy the 84. Probably a butterfly is better. Butterfly on this. Yeah, this is a pretty good trade. Let's see. Can Disney get above 82? Let's see. 82 call. And the 79.
The relief that comes over people once they know they've got a guide to help
80.
I definitely
No.
feel privileged to be in that position.
81.
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange, Trading 360, only on Schwab Network. No politics, no noise, from bell to bell and beyond. Available anytime.
Let me go out one strike and see what that does. 79 and 83. That's 2 for 1. That's 2 to 1. All right, looking at the 83 call to buy, the 81 call to sell 2 times, and the 79 buy to open. That total trade is $64 per iron condor, 136 potential max game if we stay between these levels. All right, Disney has earnings, right? Disney. That's what everybody's talking about, Disney. Yeah, Disney has earnings, so I'll see what Disney does in the next few days, but it is moving sideways. If you're thinking about butterflies, this is what I'd be looking for. Disney. Okay, looking at Disney. If you're thinking about butterflies, you'd be looking for price action to stay inside of a range. Okay. By the time we get to earnings, it could be right here at 82. The problem is that we're so close to earnings. But generally, for a butterfly, you want to see this pattern. You want to see sideways. And if we get back to 82, that'd be a perfect setup, provided, say, earnings were already out of the way and we're in this range, not going anywhere. A butterfly would be good here. You sell 2 of the at the money calls and you buy 1 call overhead and 1 call below for a call butterfly. Looking for price to stay inside of here. And you just capture the premium and you wait for it to expire. Anyway, I'm just talking. Okay, Amazon, though. Amazon giving us a really nice all right, S&P at the highs, no follow through. Okay, 41.65 is a level today, 41.65. We're just above that now. Just below it right now. So if we can close above 41.65, we can start building what we looked at before, that daily chart where we see stochastics about to fire on the daily. Let me show you what I'm talking about. Okay, so all right, here we are. Here we are on the daily. Okay, so we're starting to reverse here. Okay, and what's stochastics doing? Stochastics hasn't fired yet. It's close, but the last 2 times this fired, these vertical lines line up, and you can see what happened thereafter. So that's what we're looking for. RSI will start to move, and we'll look for stochastics to fire. Not going to fire today. It'll probably be middle of the week, end of the week. So that's what we're looking for. So if that were to happen, we'd be looking for a continuation in this. We want to see a move above 41.65. So these things start to add up. 41.65. Support resistance.
I think we're in a good place right now in the market. I know a lot is going on right now, and investor sentiment is a little bit down here, but I'm very bullish, and I still think that the market's going to be quite a bit higher here.
So far, what it looks like is they took out some stops overhead. Anyone who has calls at the money and we start to drift lower, they're going to take some profits off. We get above 41.65. Anyone who has puts in the money are going to take those off.
Ridiculously cheap right here. I've been saying it for a while. Last week it had the biggest day it had in 15 years. It rallied about 9%. It looks like things are turning around there. Their cash flow looks better. They have a very low valuation right now with a dividend yield of 7.7%. It looks like we could see, in my opinion, a 20% upside in the next 6 months.
Right. Ooh, I mean, yeah, and you're right. I mean, it did have the earnings and had this big leg up. I mean, when we look at month to date, it's still see the upside potential. This we're on it for $34 right now. Where do you think it's headed?
Okay, Bitcoin did pull back a bit, so no follow through yet. Significant would be Bitcoin above 35,000 and change. That could happen this week. Watch S&P. If S&P can close above 41.65, that would be a big deal. Then we could start to build for 41.75 and 4,200.
we go into the Christmas season here. They're working on direct sales, consumers to be more profitable. And, I think with the holiday season around the corner and Nike taking a hit so far this year, 50% off its all-time high, I wouldn't be surprised if we saw a big rally in Nike.
All right, VIX just rolled over. VIX rolling over.
Obviously there's always competition out there, and some of the other brands are doing well as well. But Nike is the leader, and
Oh boy.
and they're the ones that are really buying shoes, and I think they're going to do very, very well as things pick up overseas, and as we get out of this whole coronavirus.
What's Amazon doing? Amazon. All right. Consolidating at the highs, making higher highs, higher lows. Let's see if we can get a higher high out of this. A little profit taking. You can see the volume starting to come in. Volume starting to come in here. Okay. So we just went on a buy from 131 up to 132.60, 132.70. So you made $1.50 more or less off of VWAP. Note the volume. When we came back to VWAP for new members, note the volume when we came back to VWAP. Once it picked up, that first candle is your signal. The second is the confirmation. We followed through. So that went from 131 up to 132, about $1.25 right there. For options, that's a good scalp. Or for shares, that's a good scalp. Now we're watching for a little bit of profit taking here. Volume starting to pick up again on the sell side. All right, so not a bad day. All right, Nike turning. Nike's got a nice turn. All right, Amazon and what's McDonald's doing? McDonald's in play earlier. Okay, hanging out. That's pretty good. That's pretty good. We're above VWAP. McDonald's, of course, having a good day. McDonald's, let's see, Mickey D's. So they had good comps, noted good comps in their earnings. And price action looking pretty nice now. This technically would be a hanging man. Some people would call this potentially a hammer. If we get to the top of the candle, that would be even better. But a hanging man is inside of price action. A hammer would be at the bottom at a reversal. Here's a hammer over here on the left. You see that hammer over there? Okay. That's not what we're seeing. We're seeing price action, a hammer or a hanging man inside of price action. So this is still bullish. 9 and 21. Note the 9 and 21 both have hooked up. You can see the red line and the dotted blue line. Both of them are inclined and pointing higher. Price is above. We need to get above 262.56. Above 262.70 would confirm that we should see, not will, but should see a follow through and at least a test of the 50-day. That's $5 above this pivot. So if we do make it through 262, say 60, 262.75 tomorrow, or even today for that matter, that would forecast a potential move to 267.50, $5. Now RSI is moving through 50. So what does that tell you? It tells you the strength of this trend is improving, not fading. There's no divergence here. There is a positive correlation and stochastics with MACD turning up. So this is good. This is good. Now we just need to see the follow through. Volume after earnings. Now, like Amazon, we want to see that second day follow through. So if we have above average volume today, tomorrow we'll automatically be looking for that second day setup that William O'Neill talks about in his books, plural. All right, so we're looking for the second day follow through. That'll look like Amazon, okay, which is looking really good. Here's Amazon. Okay, here's the second day. Okay, here's earnings. Friday. Today's the follow through. Above average volume. Now we want to see this volume climb in the next hour and a half. Maybe we get to 60 million. That would be great. Stochastics and MACD both firing. If you're looking for the best setup that you can possibly get, you want to have MACD and stochastic firing. They're both firing along with RSI. RSI through 50 telling you strength of trend is improving, not diverging or fading. So this looks really good. We get above 134.50, 134.60 tomorrow. That'll be the nail in the coffin for the bears. That'll be confirmation that institutions continue to like what they heard from Amazon management. And all the proof we'll need for a follow through back up to potentially 52-week highs at 145.86. Amazon. So Amazon, compare that to McDonald's, and that's what we're looking for. Okay, we want to see McDonald's follow through and do the same thing. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday the 30th. Tomorrow's Halloween. Ooh. It's 2:30 on the East Coast, the best coast, the coast with the most. You guys know I love the West Coast. Love the scenery. Love the ocean. Love the mountains. Just not happy about other things, certain other things. Love the West Coast. All right, so McDonald's another good candidate. All right, so coming into today, we were looking at McDonald's and Amazon. Amazon's another one. Okay, Amazon. All right, we want to see that follow through on Amazon. Okay, cool. All right.
NYMEX natural gas December futures settle at $3.35. NYMEX WTI crude December.
All right, let's look at Nike. Nike.
Down $3.23 or 3.78%.
Nike stochastics hasn't turned yet. MACD's flat. It would be helpful if we did see a follow through. RSI showing the strength of this trend on the bounce, the 3-candle reversal, looking for a push towards the recent pivot, 105.65. If we can get that, Nike will probably follow through. Nike on the Dow Jones, number 2 on the Dow Jones, okay, up 3.67%. Verizon. Okay, Verizon earlier, I told you Verizon. All right, Verizon's finally breaking out. Verizon.
New topics to talk about, new techniques, new optimizations, many more exciting things to discuss.
Yeah, it's interesting you talked about it because
Okay, so we got a Darvis box on. Technically, I think, Bill, you like to see a little bit longer, price action, but this looks pretty good. This is starting to break out of this box. Okay, Darvis box. Okay. Okay, Verizon, that's been pretty strong. Volume, though, I'd like to see volume pick up a little bit. It's tapering off, so by the end of the day, it'd be nice to see more volume on the breakout. Okay, so the volume is tapered off. Look at the volume over here when it tapered off. Had a nice follow through, but it petered out a couple of days later. So look at the 200-day as potential resistance on Verizon if you have it. I know some of you mentioned it last week, so I'm pretty confident some of you have Verizon positions. Do want to see McDonald's follow through. Okay, I'd like to see McDonald's close in the upper half of the daily range, preferably at the high of the day would be great. Okay, I like the sound of that. I like the sound of bullish money flow. We got bullish money flow. You hear that woodpecker in the background? That's bullish money flow. Okay, looking like the S&P is going to break higher. Boom, 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 boom. All right, so I hope you guys are having a good day.
After that, MongoDB from a database perspective, one of our top picks in the generative AI space.
Okay, looks like we're going to try to break out here. Okay, looks like we're going to break out, folks. S&P trying to break out.
High took alert plus 800.
All right, we're about to close above 41.65, hopefully. All right, this is working pretty well. Okay, trying to break out S&P. McDonald's going with. Okay, S&P looks good. Looking for the breakout. We need to close above 41.65, folks. 41.65 going once. Going twice. Sold to the man with the island name, Cayman. All right, looks good. Amazon.
Services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern, Schwab Network.
High took alert plus 800. Extreme high took alert.
All right, time and sales on Amazon is picking up speed. It's telling you there's a lot of trades going on as we push higher. There goes the S&P breaking out.
ECB then realizes the ECB's track record in fixing some issues at banks has, in some cases, been disappointingly low.
Okay, nice breakout. S&P. Oh, all righty. There we go. There we go. All right, watch for that volume. Note stochastic RSI is turning up as well.
Extreme high took alert.
All right, what's NVIDIA doing? NVIDIA. Okay, NVIDIA still got a lot of work to do. Amazon looks good though. Amazon, nice follow through. Day 2 follow through.
Show you what the selling we've seen here. This most recent rally again off that low from Friday puts us just a small blip on the radar in terms of some of the selling we've seen throughout the month of October, taking out those lows from September. It's still holding below them as we speak. We've also below the 50, below the 200-day moving average. I want to point to the tech-heavy NASDAQ, which is the only one before that's been able to hold above this longer dated here. So keeping a close eye on that. But we're also watching the VIX, which has been on the move here, Nicole. And here you can see inching its way up above 20 beginning of the week at that, stubbornly elevated level here. It's come off a bit here this morning as the indices are rallying back here today about what you'd expect to see. But let's keep an eye on the VIX, geopolitical tensions, a lot of unease heading into earnings. Again, comments from the Fed this week, as well as some non-farm payrolls data, some jobs numbers throughout the week. A lot to focus on for investors and traders.
Yeah, it's interesting because as we're watching crude at 82.60,
Yeah, I think as we head into week 4, still kind of on the edge, but price activity has been relatively contained considering the volatile environment we're dealing with in the Middle East. And again, it does seem like it's been kind of the theme. So taking a look at some of the recent price activity we've seen off the highs, this was back in the end of September, if you remember, around 95, back down to around 81. We can see how we've been within that range since. Now, it's kind of working our way towards the lower extreme, but we've tested this area a few times and it's found support. So I wanted to show you where we are relative to the bigger picture here, to move up that leg into that run up to that $95 level, because crude prices had already been trending higher. Again, amidst some of that stronger than expected data that we've been seeing here in the U.S., we also saw the dollar weakening a bit here.
All right, we got a nice follow through in the S&P. Shorts covering. It's not just taking out stops.
Started to impact some of those and raise some of those demand concerns. Impact that run up. Taking a look at the relative to 50-day moving average, you can see just kind of teetering around that level. I mentioned still relatively contained. Here you can see that kind of hanging out in that range again. 95.
Okay, nice follow through. All right, Frano, you guys must have done very well on that S&P. Very nice. Okay. All right, folks, you're doing really well in the trading room, I'm noticing. Good job. Okay, good job. All right, seeing some Amazon blocks. Amazon blocks.
Service restaurant space, both fast casual and quick service restaurants. And largely, we started to see some trade down, particularly among that lower income consumer. McDonald's talked about pressure on the household income consumer under 45,000 a day, and we've seen that too. We've seen them start to diversify more dollar stores, more value grocery. So we see some pressure across the restaurant space, but we see two names like McDonald's and Chipotle that are outperforming and do it in different ways. And McDonald's has really done a good job with some of those more specialized promotions, the famous orders and things like that, as well as some of the things in the digital marketing front that don't some job on the front end, really helping to drive visitation on performance, still slightly down in the year, but I'm going to
132.50.
Started delivering more suburban locations pretty early on in the pandemic. I think that's really helping play out the kind of that consumers where they move towards. It's a strategy we've seen like groups of province sweeping at the same time. So the idea of the big locations, more suburban locales, I think it's going to happen now. So not the same path, but two deals.
All right, looking really good, folks. Hope you guys are having a good day.
They can. I mean, certainly we've seen other players starting to real good. Two larger players in the category, McDonald's, a lot of times they have scale advantages to move into these locations. They're going to get the first offer and some of the leases for these locations, things like that. And they've got the scale to give up a little bit in terms of profitability if they need be. Certainly, we haven't seen it with Chipotle, but we have started seeing McDonald's.
Keep in mind, Biden is currently speaking on AI. The live video to watch this is on the feed if anyone's interested.
Share among McDonald's competitors, and as a result, we're starting to see that because they kept prices in check better, McDonald's is winning out on the value side too. Although I think it's more innovation.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at tickstrike.com.
They're actually trading down from kind of the higher end restaurants and kind of QSR and fast casual. I've seen a lot of evidence for that. We've seen evidence of other channels as well. We're seeing as well.
Wow. Do you see that? I guess you guys already know that. Leonard Williams is going to the Seahawks, Giants. Wow.
Yeah, it's interesting. Cava's been fascinating just because Mediterranean concept is really never being national comments.
Hi, took alert plus 800.
All right, nice move on. Nice move. Good job.
So I think there's some issue to that. I think that it's really kind of making a name for itself, and it's appealing to the masses here, and not just kind of the younger population. Done well to kind of the 30-something crowd as well too. So pretty interesting to watch. We're seeing a lot of similar trends, and I think really narrow the gap from the rest of the category and now actually exceeding on that basis.
I saw something about Cheesecake Factory. You know, you look at Instagram and TikTok and forget it. They were saying it's not a good place for first date, and they had backlash. I mean, I would go. I'm perfectly married for many, many years, but I would go on a first date to Cheesecake Factory. Are there any on the other side of the coin that you're somewhat worried about because they can't seem to get it right for whatever reason?
Yeah, there are some names out
Nice way to finish up the day. We got about an hour and 12 minutes to go. Good job. I hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is 2:48 on the East Coast, the best coast. It's Monday the 30th. Tomorrow's Halloween. Looking forward to it.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime.
Amazon looking good.
Any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All right, so we're having a nice day. Markets, look at the volume coming in. Look at the volume coming in on S&P. Note the volume on the live screen here. We're starting to see volume picking up as we push a bit higher up against resistance, 41.75, 41.75 cash, resistance. Next level, 41.75. If we get above 41.75, maybe we make it to 4,200. Not today, but tomorrow. Looking pretty good. Looking pretty good.
One of the big issues is the thought about what a semiconductor is and who is deploying it. It's all in one very small focus
At
right
3
now,
p.m. Eastern
and that
Time,
would
get
be
the
the
Treasury
whole
quarterly borrowing
generative
requirements.
AI space.
For more
And
information
if you're
on this,
not
it
in there,
includes
you
estimates
might
on the
get
amount
caught
of
like
money that the
uncovered.
US government needs to borrow in a given fiscal quarter to fund its operations and meet its financial obligations, preceding the quarterly refunding announcement on Wednesday.
Says, right, with respect to some of the semis, but not every company was based solely on AI, William, and I know you had to lower your price target, but do you still see some upside on semi? What does it bring to the table in a good way?
We certainly do, Nicole. So I think you hit the nail on the head that the main story of this quarter is really guidance for the fourth quarter and even for the start of 2024 that missed our expectations, definitely missed the market's expectations, and that's why you're seeing the stock down so much today. But onsemi is bringing a lot of value to the table. So when we're talking about onsemi, we're talking about power chips. So these aren't the ones that are going into the sexy AI applications right now, but they are going into electric vehicles, renewable energy applications, and we think there's a lot to get excited about there too. When you put this in a long-term concept, we're not overly worried about it being environment. But after again, because of long-term growth opportunity in electric vehicles, renewable energy, and emerging technologies like silicon carbide.
So that was it. I mean, renewables, the electric vehicles, and more, and that will help this company with margin expansion. So Kim, what do you think? I mean, do you think this is a buy when this name? I mean, William was just talking about this thing going to over $90. It's sitting at $66 today. And is this a name that you like, or do you like other names?
I do prefer other names, and there are some warning signs, I guess, about EV adoption. I don't think it's because of the auto strike.
Okay, Amazon looking good. At the high of the day, low profit taking wouldn't be surprising. We're right below 41.75 resistance. I don't anticipate the markets are just going to keep going without some profit taking.
At 3 p.m. Eastern Time, get the Treasury quarterly borrowing requirements.
We think it's a terrific company fundamentally, and we've seen the valuation come back down over the past couple of months. So that's another one alongside. Suddenly, we're also suspecting that we're in a time for that now right now.
This is nearly a $600 stock at 11 on the it's down at 406 now. So I see what you're saying when you say you like it. You're not saying it's sold off, but more so that you see the opportunity. Where do you think this stock can be headed, William?
Well, so for the monolithic power, our fair value estimate on it is $535 a share. So, similar to what you said, the stock we've seen that price go above our fair value estimate before, and we haven't liked it, but it's really always like fundamentally from a company standpoint with a high economic growth rating on it, and now the Fed's just looks good, so that's why we're talking about it.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from the studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week. SchwabNetwork.com.
And on all your favorite streaming services.
1 minute remaining.
Available anytime, anywhere.
On any device for free.
Schwab Network. Empower every investment through
Every company.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci and market profile levels by signing up at tothetick.com.
Schwab Network. Available soon.
All right, Amazon, a little profit taking off the highs. We are about 20 cents off the highs right now. Tesla dragging its feet. Was a big buyer of Tesla option, or seller of Tesla options earlier. Apple looking for a break above 171, potentially above 172. All right, S&P is acting very bullish.
US Treasury expects to borrow $816 billion in January-March period, assuming end March cash balance of $750 billion. US Treasury says fourth quarter borrowing estimate assumes end December cash balance of about $750 billion.
Some big tech names. A few particular stocks are carrying the pack, but Dow's also mixed through. We got a little bit of participation kind of broadening out after obviously it was a rough week.
All right, watching VIX did bounce a little bit, a little jumpy, trading at 1978.
Also been breaking down for an entire year now, and is meaningfully lower by about 10% in the last 52 weeks. And so the breakdown in the NASDAQ, our big leader last week, is not a good sign. I think that the dots are going to be connected across indexes long term. Let's look at some of the action today. Generally, VIX is kind of coming off a little bit after we made that push to the 20s. Basically, the high of the year for volatility. After we broke the downside, so
quarterly borrowing requirements report on the feed for those interested.
COVID and then the post-COVID period too, because we had volatility in the market in the bear market, we had volatility when the market was in a regional bull market. But when VIX broke down through 20, it was a pretty big event, and we went all the way through into the low teens, got into some very low VIX levels this year, and so 20 is kind of back on the high end for that more recent regime, since people started calling it the fresh bull market. That kind of put in the low, basically. If you really think about it, it was around essentially the late summer that everyone started celebrating the bull market being renewed without any record highs, and then lo and behold, VIX starts creeping up, stocks start slipping, and here we
US
are.
dollar index slightly extends losses after the release of the borrowing estimate, last down 0.47%, 106.08.
That's a conversation that's going to be more a midweek discussion. As far as bonds go, yeah, you're getting a little bit of rise in the 10-year yield today, but we'll be watching the dollar, we'll be watching bonds more closely around the Fed decision, as well as big Treasury announcement too. as we're going to get funding plan for all that deficit spending. As far as stocks go, earnings are the focus right now. I've got a couple interesting names tonight, but still seeing the way markets are prioritizing what matters right now and who's winning and who's losing. It's been a story of dispersion and intra-sector variance. Take a look at the comms sector. Today you've got Charter, you got Verizon actually doing decently after both those stocks dropped on earnings. But it's really Meta that has been holding it together. And I do think this is somewhat symbolic that this is the giant of the mega caps that's actually doing the best in terms of just holding on to its range.
All right, looking for S&P to continue. This really nice price action here. All right, 41.75. If we get above that, geez, you know, that's more than I anticipated. Okay, Amazon.
What are they doing? They're not really prioritizing growth at any cost by any means. In fact, it's all been about efficiency, shoring up profits, and demonstrating a mature financial balance with the growth that it seems the market is really prioritizing. And so I do think that's important. Watch Meta. It seems like so far it's the winner of the earnings
Biden
season.
says we still need Congress to pass the bipartisan AI legislation.
No Apple until next week. That's going to be a big one. Until then, watch the chip makers. SMH's ETF I've got up here. We did break through an important support line on the all-important semiconductor chart, but we're kind of clinging to it right now. We're going to talk about onsemi and Western Digital, which are going opposite directions today and are two of the biggest moves in the market. So there's a little bit of kind of break-even tug-of-war happening in the session, leaving the semiconductor group a little changed on the day. But at least it's still hanging tight to that 140 area. That was a really important gap up, previous support. Let's see if this group can hang on there until Apple next week. On the periphery, a few other things gotta be aware of here this week. Crude oil. I think the move is getting here really interesting as we're down 4%. There seems to be a lot more discussion about the geopolitical risk than what is relevant to the market right now, frankly. Because crude oil and gold are basically the two ways to think about how markets are responding to the Middle East crisis and geopolitics in general. One could argue that maybe gold is catching some of that geopolitics bid. It's hard to get too extended with the impact of this event. When WTI crude is at 82
Biden
bucks.
says I'm
It's now
meeting
down
with
a
Schumer
couple
and the
dollars.
bipartisan
This
AI
is the
group
initial
tomorrow.
attack on Israel. So I'm not sure that it is quite commensurate with the level of conversation many market participants are assigning to that subject at this point, regardless of its humanitarian significance.
Okay, we're just stuck at the high of the day. Could be worse.
I'm talking generally about stocks today. But the dollar remains range bound. It's another weak session for the dollar. Dollar's just having trouble hanging on to the high end of the range. It's a very interesting situation heading into the big plan for deficit spending that we're going to get some details on later this week. Right now, we're continuing that conversation. We talked a lot about that.
Hope everyone's having a good day today.
But let's talk some stocks here because the action today is very stock specific. It's earnings by earnings. It's story by story. It seems like we're kind of like on hold for the macro until the events later this week. I just dropped my
Big data coming later this week. And until then, you're right. This is all about earnings. And look at some of the ones you mentioned in your presentation on semiconductor down. I want to get the number right. 20% on, year two, fiscal year 23 revenue decline, 0.5% year over year. They beat on earnings, $1.39 versus $1.34 expected, but some of the details were quite alarming, Oliver. And here's what it is: Power Solutions Group up 10%.
Hi, took alert plus 800.
Right, exactly.
All right, nice follow through.
Solutions Group down 50.
Can we get through this level? 41.75. Very strong price action.
And then we get the margins.
Nice. Okay, what is Bitcoin doing in the day? Bitcoin. All right, it's bouncing. Okay, just consolidating.
News on a popular sector of the U.S. economy. If they're falling behind, I mean, look at the chart. That is an ugly chart all day. Yes.
This is also kind of a little bit of the underappreciated hero in the sector. It was going up like NVIDIA, not necessarily because of all the AI stuff too, but because of more its
kind of dominance in the auto space, but a lot of the chips that we're putting into autos do meet some sort of definition of artificial intelligence and automation and stuff. So the fact that this is getting hammered as hard as it is seems like it might be sort of an early wake up that this could be a rough and tumble earnings season, especially in the sectors that have done so well over the last year.
Tom White and I talked about this on today's Fast Market Show. It's the earnings per share revenue divergence going on in some of these stocks. They're doing well in their earnings per share, and on semiconductor, beat on earnings by 5 cents. 139 versus 144 expected, but once you start looking at the overall picture, you're seeing a big divergence here, and some of these stocks starting to wilter under that lack of growth. Like the margins, oh boy, they don't like that, clearly.
Obviously, a lot of sensitivity here when you've got the market, looking at companies that have done so well. Now, Apple too, which has got its event and it's got earnings, and misspoke. Apple's earnings on Thursday, right? As they're moving to their own chips, that's kind of the focus of their event. All of this, I do think, kind of funnels up to them in a way because a lot of those chip makers on the hardware side really kind of
Stuck to the highs.
When you separate tech from software to hardware, I mean, ultimately this week.
Okay, Nike, nice follow through on Nike, by the way.
But if not, I mean, we're in a world of trouble.
Apple's a whale going through the water with a million little guppies following it, all the suppliers. So when Apple, that has, some people say that they don't have any new products, they don't have anything new sparkling, but what they're doing, they keep making each part of their, of how they make the iPhone more efficient, bringing it more and more in-house.
That's what I kind of wonder, because, the market seemed to love Meta because of their efficiencies.
Right.
And Apple hasn't quite targeted that way because they didn't have that kind of problems on the bottom line.
Right.
But keeping your supply chain and controlling it in-house ultimately should be better for the margins.
But by definition, you're doing it for the cheapest cost. If, Oliver, the question is, can they keep the quality high, right? Because you like when firms are competing for the best product to support you, to supply you. When you're doing it, not a lot of competition for that product. You're doing it, and you're kind of all in on whether you do it right or not.
By the way, the other thing that I have a little bit of trouble with, narrative-wise, is the narrative that there's going to be this big rebound in the chip cycle, the kind of macro.
3 years into that dip, everyone thinks they got to replace their PCs, and everything's going to swing back up, the big cycle.
Exactly. But then you've got a lot of competitive elements going on. I mean, look at Western Digital, for example. The trading in the stock over the last week is nuts because they had the Kyoshi deal, not going to happen. Then they're going to split it up instead. And then we also have the Apple in-house competitive move.
Yeah.
And there's just a little bit too much kind of intra-sector warfare, I feel like, to necessarily have this sunny narrative on the macro side right now.
Well, they lost. When we talk about Western Digital, they lost less than expected, and they're talking about spinning off the flash memory business. Well, that right there can create value in a company, right? When you break something up into pieces. So they have two parts of this company: traditional hard drives for computers and flash memory. And it sounds like their plans are to spin off the flash memory part. So the fact that the loss narrowed for this quarter and the projected loss for next quarter is narrower than expected, has Western Digital up right now about 7.6%. So nice data. And you're right.
US Treasury 2-year yields edged lower after fourth quarter funding projections. Still up on the day though at 5.033%.
We're basically back to where we were before the deal was cut.
Yeah, big round tripper.
Yeah. All right. There's a lot going here within the sector. We're going to have to keep a very close eye on everything to do with chips this coming week with Apple in focus, and a lot of these stock-specific stories kind of at odds in the market. Look, upside is being out there. NASDAQ 100%. I see bounce back.
Very surprising price action today.
All right, looks like we're going to go for it. Maybe we'll go for it.
Not 1.25% though on the S&P. That's a big move. There's something tweaked slightly. It feels like this isn't turning into as horrid an event as we thought.
All right, about to take out the high of the day here, at least testing it.
it's horrible, but at least the market isn't seeing any massive risk, or this market would not be here.
High tickler plus 800.
Yeah, the risk gone almost within itself when food's moving that much down. Unless you're worried about demand, unless you're worried about,
Or testing the highs.
it's not supply, right? Venezuela coming on slightly higher is not supply. It's got to be a demand issue. Okay, all right, thanks. Appreciate the thoughts. All right, can we soon text up to continue that conversation with Sarah Seth, the managing partner and portfolio manager at Douglas Seaman Associates. Sarah, good to have you here this afternoon. We've got a big week ahead of us. Fed, Treasury plans on how many bonds they're going to have to sell. Apple's report. What to you moves the needle the most here?
I think interest rates. The whole story seems to be interest rates. As soon as you get close to that 5% level, the market seems to level off and sell off. And you were just talking about the Monday move today, but we've had that happen the last couple of weeks as we get later into the week, and nobody wants to be long on the weekend, just given what's going on geopolitically. So it's interesting to get these jumps on the early part of the week, but I think the interest rates are going to be real. Important to see what the demand for the treasury is going to be, and I think Apple's going to be really big, and for a couple of reasons. One is what is the true demand, and obviously we're going to talk about what products they're seeing selling, but I think the demand of the consumer is going to be a tell from Apple.
Apple, of course, was heroic in its rise to new highs this past year. Does the valuation demand them to show perfection, or has the pullback we've gotten from the highs opened the doors maybe for this company to return, act as the pillar, and put this market up on its shoulders?
I think the expectations are going to be pretty high because they've had a hard issue increasing sales. So where do you get the most bang for your buck for Apple? It's going to be margins. And I think that's going to be interesting. People are going to be focused on how are they expanding margins now. If they take more products internally, which we know they're doing, that could be a true benefit. And the other part is what's happening in China, what's happening for their demand products. Are they actually getting substitution effect, or are people taking longer? And then the other part we were talking about is what's going on with streaming. I mean, you've seen all the companies in streaming get hurt because they're spending more money but not making money. And will Apple actually talk about that, or will that just be more of the Apple Store to show margins improving?
Okay. So let's say that we get something even on that report. Let's say Apple doesn't move the needle to the combo about bonds and yield right now. It's sitting roughly at that 5%. But everybody basically expects them to kind of do nothing. Then they got to unveil from the Treasury on how they're going to fund all of the deficit sales that they have. Volatility here, how do we gauge the potential of those two events versus each other?
So I think you have to really look to see what the auctions are going to look like, because if you don't have buyers.
All right, VIX continues to drop. VIX continuing lower.
Moving, and then at that point you get equities also trying to figure out where we're going with that.
Thanks, Timmy.
You're not going to see the Fed do anything. 11 rates has been quite a bit. We're seeing demand slow down the consumer side. We're seeing.
All right, so TLT on the move. All right, thank you, Timmy. TLT. Nice little pop. All right, so that's telling us to look at the 10-year and the 20-year. All right, that's dropping off. US 20-year. Okay, dropping off. All right, so that looks pretty good. Okay.
I think you'll see a big move in the bond market, which I think that will then give a signal to Congress and to the government to say, hey, we can't really do this funding. But until you get something like that, I think it's just, as it is. People will still keep on going and funding our federal deficit until the markets really signal, as the bond vigilantes come back.
What was that play right now, Mr. Rock? Because we're not staying higher for longer. Some of the banks are still cut. I mean, Europe had a brief moment where they stepped out of the COVID muck, and it feels like they're back kind of stuck, not due to the virus, but just and then when they got the jump start, it got inflation, but they can't hike anymore because they're like on the verge of recession. So I mean, who's to say we can't keep printing? I mean, who else has got a better game?
You're absolutely right. And one of the reasons that we like commodities in this area right now is because you have a strong dollar. And so you look at some of the commodities, they haven't done well. The stocks haven't really done well, whether it's copper, aluminum, steel. But I think the dollar's going to stay longer. It's going to stay higher for longer, just as we've got rates higher.
All right, 20-year dropping off, 10-year pushing higher. You know what? Let me take a look at the TLT because I want to sell some current calls.
Let's see what happens in the winter. People are scared because if they do get a bad winter, which they didn't have last year, that's really going to affect their exports. So, we are the best house in the bad neighborhood. Our dollar's going to be stronger. That helps a lot of our U.S. companies, especially, on the commodities.
Does gold play a role in the strategy right now? When we talk commodities, just kind of curious how that fits in. It's had a nice couple of weeks here.
It does for us, and we were putting it through a couple of different stocks there. The stocks haven't really reflected the price, but we do think it's going to be a good hedge because we also don't think
S&P.
come down as fast as people expect.
All right, nice follow through on S&P.
Inflation's slowly kind of there, but not really coming down as fast. And I think that has to do with a lot of what we're seeing in terms of wages, in terms of prices going up for almost anything. Economy does slow and you see spreads widening, you want to make sure that you're able to hold the right bonds and not really get destruction of your capital.
Got it. All right. Hey, Sarat, love the analysis. Very helpful for us and nice pathway of logic to follow.
Thank you. Great to have you. Great to be on.
Yeah, absolutely. Sarat Sethi, does with C. Lane and Associates. All right. A good macro conversation. Let's dive into some of the Apple details.
All right, nice little push to 41.75.
Chips.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network.
All right, 41.75.
Anywhere on any device for free. Schwab Network.
Nike continuation. Nike having a nice move here.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network.
Moody's says China's slowing economic growth will weaken asset performance for structured finance deals.
It's time to look forward.
Find the next trend.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
biggest earnings this season after setting record highs on the way up the past year. Apple's got a lot to live up to. I guess John has a pretty interesting perspective on it. Robert Cantwell is the founder and portfolio manager at Holdings Investment Management. Robert, the thing that stands out to me about your notes on Apple is that it centers around the payments category. So let's start there. How are you paying attention to that part of the business?
Well, it's telling us a lot about how people are using the devices and where transaction value is moving.
Oh man, this is pretty good at price action here, right? 323 on the East Coast.
Where you've got, it's not just suppliers.
37 minutes to go.
Issuers, you've got merchant acquirers, you've got all sorts of different counterparties that you got to work with through it. And in what we've been seeing so far, Visa and MasterCard obviously reported some pretty solid numbers. But that's because
Nice price action. All right.
but the amount of money that is being spent
Looking good.
is where we're seeing a lot of weakness out there. So McDonald's reported blowout numbers this morning. That's because people are trading down. And McDonald's is a beneficiary of something like that.
What about $1,300 phones?
Now we're getting into the real stuff here. This quarter for Apple, I think we're walking into a landmine. You are looking at
All right, breakout.
here.
Breakout.
More than half the revenue, all their progress in wearables and all their progress in services, more than half this company is still iPhones. And you're talking about phones that the replacement cycle.
Um,
All iPhone owners have iPhones that are more than 3 years old, and people are stretching.
Okay, we got 4,200 next level now. Just keep taking out levels. Wow. Wow.
McDonald's is raising prices, and Apple's holding you flat. That tells you a little bit of something about the demand plan that these companies are going through. Every channel check told us that component costs did go up on the iPhone 15.
Let's see what levels we have here. Let me just real quick. Let me just check here. Okay. 4,100, 4,150, 4,175. Really, the next level is 4,200. 4,200. All right.
The pricing sensitive brand kind of obsession that people have, and maybe it's even more about the investing community perhaps so far than the consumer themselves. I mean, consumers are definitely pretty brand obsessive with Apple too, but the market almost treats it like it's a staple, a safety stock. So I guess that might work when there's still liquidity flowing through the system, but when it's going out, I suppose those staple-like qualities might fade like anything else.
You got it. It's 7% of the S&P. It's one of the most discussed companies in the world, and yet their margins aren't really any better than they were 6 or 7 years ago. And this has always been the one thing that's plagued Apple. And in the past, they used to trade at a multiple that a hardware company deserves. And the market today has kind of said, we believe enough that Apple's going to steadily transition out of this hardware business and become a recurring services business long term. Those transitions are never smooth. And I think we're at a key turning point in that transition for Apple. There's going to be a lot of great opportunities to own Apple on the other side of this. But
all right.
iPhone sales for 25 years, and I think this is a dangerous thing to do. And you've been seeing all the reports about these Magnificent Seven and how expensive they are on a multiple basis. And man, we like owning everything else in the S&P 500 right now, except for Apple, Tesla, Nvidia, Amazon, these companies that have held on to these multiples because of this public reputation, not because of their actual activity.
And what do you think might be a more reasonable expectation then for top line? Because there's still an expectation for some growth on an annual basis. Be low single digit. You think it might actually flip to a negative again, like we got out of the COVID recovery?
Yeah, this one's. I'm going to be interested to see how people react to this one because there's a high. So expectations are for iPhone sales to be down about 2% this year. We think that could easily be down 5 to 6. And then the next piece is in the fourth calendar quarter here, which is Apple's first fiscal quarter. The market is saying we think they're going to be up 5%. And the only reason the market's saying that is because fourth calendar quarter of last year wasn't a great one for Apple. They were down about 8%. And that's the number that I think people are going to be really sensitive to. And I would frankly not be surprised to see Apple.
All right, so 41.75 resistance.
This is what we saw in previous hardware cycles for Apple. When they're fighting interest rates, when they're fighting declining feature improvements in every incremental phone that they're putting out, people talking about entire form factor for this iPhone right now. There's just not a ton of excitement or rabbits that Apple's going to attack right now to keep that level of these phones. So even though the market's saying, we think they're going to grow 4 or 5% in iPhones, we think there's a chance that number is negative. And better if the stocks are going to move.
All right, understood. Like the rundown here, and definitely a sobering reminder of some of the threats that might face this company coming over the next 6 months. Thanks, Robert. Appreciate the contribution. Yeah. Coming back. Yeah, good trade options going over into today's big decliner. Once again, on semi. Someone buying a dip there. Take a look at the style of trade Tom saw there. And then speaking of payments, Toast with the rest of the market. And on the commodity side, Toast down. Also having Tesla's down today too. It's not a great day for the EV trade or the resources behind it.
I remember when I first started and we were turbulence. I was watching the flight attendants. They're not going to be financially. I'm right in that situation. The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that position.
Wow, I can't believe it's Halloween already.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Brown.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise. Bell to bell and beyond. Available anytime, anywhere, on any device. Schwab Network.
Get each and every angle, the whole picture, every change comes total on Tuesday to Tuesday. Get this right here at the New York Stock Exchange. Trading 360. Only on Schwab Network.
Let's do some options. Tom's looking over the other half. Last market, trading on semi days. Bloodbath. Off a little bit off the low, but not worth counting that 20% down at the top of the trading season.
I'm really trying to buy the dip in here after 20% drop. EPS numbers, they weren't that
All right, we got 28 minutes to go.
all you had to look at was Q4 guidance moving forward. They did state, you got a couple downgrades this afternoon. Summit Insights and Playground, they both downgraded the stock based on these earnings. But they said that the firm believes that the customer stated on semi that one of its customers that's cutting orders is Tesla, and that others aren't far behind. Remember, Ford just said that they're pulling back on the $12 billion investment in the EV space.
Okay, we're up $5 on Amazon today. Nice. Like to see a follow through. S&P.
Exactly. We're going to talk about that in a little bit. But somebody's probably trying to buy the dip in here. We saw some
Amazon near the highs of the session, just off a couple of pennies.
and they bought deep into money calls. They bought the 60 strike calls in January. 7,500 of those for a debit of $10.50. So that takes the break even up to just above $70 a share over the next 81 days. So you're giving yourself really 3 months in this position. It's about 5.5% above the current share price, that break even. Call volume is 10 times normal daily average volume that we've seen over the last 5 trading sessions. And calls are still out trading puts today, Oliver. So there might be a few others in this name trying to buy the dip in here. But yeah, White Cloud is 20%. Stock's now only up about 7% on the year, hitting 10-month lows. It's in shares. It's up 50% on the year. Yes. Yes. The stock got, I believe, above $111 a share. Yeah. About 3 months ago. So yeah, this is a big slide. Somebody stick out there in the option market buying some higher delta in the money calls here for a bullish stance in the next 81 days.
So long-ish term, as far as like options go in this block, there's a lot of like different stuff. Monthly, so 3 months with the almost $7 buffer zone between the strike that they've got.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow of futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Give themselves some duration on it. That's why they're paying a hefty $10.50 premium for each one of these options to work on semi. I mean, you know, if you've got the capital, you're buying like maybe a 65-70 delta call that reacts more like the stock and any up moves. Not a bad way to do it, but it usually takes a lot more capital to buy those deeper like calls at the time.
How about for how the buyers go there? Because it is down quickly too as well. The
All right, 41.75, too much at the moment. A little profit taking. All right, we've got 25 minutes to go. 25 minutes to go. Check your positions if you're day trading. Don't know how much more we're going to get out of this. It's a pretty decent day, though. Amazon at the highs. Uber trying to push higher. Uber. Nike pushing higher. Nike had a good day today. Nike. If you caught Nike earlier, Nike did well. Let's see. Nike. Yeah, Nike up 4%. Nice move on Nike. If we get a follow through tomorrow, take out 105 would be great. Volume was pretty decent. Not enough time to surpass Friday's action, but building.
They were out in the December 180 strike calls. 180. These were over $50 out of the money to the upside. They bought 5,000 of those for a debit of only 60 cents, right? More aggressive than the on trade. Right. But I brought up those price levels to reflect that, hey, Albemarle was 180 a month ago, 250 3 months ago. So it does have that ability to, have big outsized move. But they bought 5,000 of the 180 strike calls in the December monthly cycle. in there. Stock's still down about 12% so far this year, even though it's been that choppy trade.
All right, can we push a bit higher?
The 7th of November. So that'll be a key event here, maybe for the stock. But the unusual option activity I saw out there was to the downside. Somebody buying puts. They're buying the November 10th weekly, so it's expire in 11 days. They'll capture that earnings event on the 7th. They bought 15,000 of the 15 strike puts. Average debit of 75 cents. So that break even of 14.25 over the next 11 days. It's about 10% below the current share price. Option market at this point, with about a week to go until earnings, pricing in about a 10% move. Put volume 15 times normal daily average volume, but I think somebody's setting up for some pain going into this earnings result and buying some puts ahead of it.
Right, it's the one that's actually up on the day. We've got the bear trade in.
Yeah.
So there's a lot of dip buying, a lot of fading of moves going on, and a little lack of hope, I guess, for Toast going into the report, which, they're going to report at pretty much the low end of the range. And it haven't spent a whole lot of time under $16, really.
Yeah, but they've shown pretty good growth on their last couple of quarters, taking market share away from competitors in the space.
Like Block.
Yeah.
But Block's also at lows, too. So, I don't know, man. Market just doesn't want I mean, that's what a lot of guys are talking about, though, which is the kind of carnage in some of the payments outside of the actual just swiping Visa MasterCard price. What else is that? Next time for trade. Coming up, let's talk some commodities. Crude oil. The letdown for bulls continues no matter what happens. WTI seems to be stuck, and now at the lower end of the range of recent, too. We'll take a look at it next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account. Yes, cash management solutions, all designed for investors like you. With no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features.
All right, so profit taking, pulling this back now.
Investor Checking account is linked to your Schwab One brokerage account. You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to a brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge
and shift the perspective into full view. Real-time example trades in 4 hours of trading.
I'm Tom White.
I'm Kevin Gates. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, so not closing above 41.75 at this rate.
No fear of missing out on next gen investment.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace Out's Coffee, I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics, no noise.
More fade. All right, so hopefully you've taken your profits off if you're day trading. Would like to see some progress, push above 41.75 tomorrow. That's, a long way off now. A lot of stocks looking good. Okay, let's go take a look at how the market's fared. Let's see the number of stocks trading above the 50-day. See if there's any progress there so we can look for a follow through tomorrow, perhaps. Okay. All right. So it did turn up marginally. So in order to achieve a move back above this support resistance level, we need to see stocks getting bought, moving back above their 50-day and 200-day. We need growth and value. We need to see both of these performing. There are a ways below their descending 21 EMA, so that's going to take some effort to get it back above the 21 EMA and get those to turn back up, like over here. When we were in similar condition back in February, March, we pulled back below the 21 EMA, it turned down. It took us a few days, but we did manage to follow through. That's what we're looking at right now. Similar to March, need to get back above the 20 EMA and get the 21 EMA to turn like it did back in March. Same here with growth. So that's looking better. Looking better. Let's look at advanced decline percent. This didn't pull back as much as I thought it was on Thursday, Friday. It actually held up very well. Big cap, mid cap, small cap, and NASDAQ all turned up. So that's good.
And that's interesting because I learned this a long time ago when I was just in my 20s. Guy told me if the market doesn't do what everybody thinks it's going to do, it's telling you something. So if it gets really bullish information, it doesn't.
Okay. Let's look at a different way of measuring advanced decline. Let's look at NYSE. New highs, new lows. Okay, so this has got a ways to go. Got to get back above the zero line. 176 more new highs than new lows today, but still below the zero line. That needs to turn. Advanced decline needs to make a higher high and a higher low. Get back above its 200 period moving average. You can see it's oscillating above and below. Above and below. Below over here last year. Looking for that to turn up. That would be a good indication of what we could expect going forward. What else? Let's look at bullish percent. This got down to a real low value. Only about 29% of stocks were on point and figure buy signals. That means that 71% were off. That makes sense. Let's look at composite volume. We need to see this turn up. So that'll turn up tomorrow, most likely, if this keeps up. Not bad. Not a bad day. It's not going to all happen in one day. Look at VIX. VIX needs to continue dropping. Okay, VIX need to continue dropping and turn green. Okay, we're just turning green after several days of downtrending price action. We're starting to see a change in direction. The lows aren't making new lows. This has got VIX flipped on its head. So let's go take a look at the spiders. Spiders on the 60-minute time frame. Okay. So we're making progress. We're above the 20 EMA. So last time we were above the 20 EMA was the beginning of October. That's when we had that run up to the upside. That's when the number of stocks trading above their 50-day was at a washout low like it is now. So there is a possibility we could trend back up into this channel. Many people are looking for that. Brian Shannon posting a chart very similar to this one I'm about to show you. So this is making progress. All right, so each time we pull back from the upper trend line and created a valley, we bounced. Upper trend line, create a valley. What happened then? Stochastics got oversold and turned. Now we're getting ready to turn. We're not there yet, but getting close. Look at MACD. So we've made the move lower. Do we get rejected overhead or do we follow through tomorrow? That's left to be seen. We're just above a 50% retracement, and the JP Morgan collar 4055 put long. JP Morgan is long this put. Very close. So maybe it's time to move in the opposite direction. We're not going to go straight down. Bears are going to have bad days too. Okay, so that looks good. Amazon, of course, Amazon having a good day. Okay, so this is performing a lot better than I anticipated. Amazon, okay. S&P hanging out near 41.75. Maybe we make it above 41.75 on the futures. That would be equivalent to 41.75. That would be equivalent to a move and a close above 93, 94, something like that. 41.93, 94 on the futures. You're looking at S&P cash. The futures are trading 41.88 right now. 41.90, 41.90. All right, so we're approximately 20 points off of what futures are printing. Futures are printing 41.90, and S&P cash is 41.70. So overnight, if we can manage a move above 4,200 futures, 4,200 overnight, that would be awesome. Tick cumulative has turned green, as Grover mentioned earlier. The cycle has shifted, turned more bullish. So we got a pretty good shot at a follow through tomorrow. So I'm your host, Cousin Minnie, coming to you from theclosingprint.com. We're nearing the closing bell. We got 10 minutes to go. It's 3:50 p.m. Monday, the 30th of October. Not a bad day. I would love to see Bitcoin move a bit higher. All right, I need to take this call. 1 second. Okay. All right. If we do close at the highs and above 41.75 cash, that would be impressive. I'm already impressed by the move above 41.65. So that would mean that institutions are buying this into the close, or at least shorts are covering into the close.
downside here this week. I guess let's talk FOMC first. Not expecting a hike, but what else could there be? I mean, it seems like folks and players are really missing the ball.
All right, we got 7 minutes to go.
Statement changes. So maybe there'll be some acknowledgement statement that the economy continues to kind of surprise to the upside, but we don't expect too much there. It's really going to come down to the press conference and comments from Chair Powell about what he sees going forward. But given the way the Fed's changed over the years and now, I'd say transparent they've been, we get so many speakers and interviews from various
Looking for. All right, so a little bit more profit taking. That's not so bad. A close up here wouldn't be so bad. I'm wishing for a move above 41.75 cash.
Reaccelerate anytime soon, which isn't our base case right now. But if we were to see that, the doors open for another rate hike. I think that's going to be the point that Powell's making, that they're not done yet. But I'm sure he'll highlight that they're probably close.
Okay. Just looking at some of your commentary in the recent writing, Colin, about corporate bonds, to go there for a sec as the stock market's gotten hit. I imagine there's been some fragmentation of the credit strength, but if you think the Fed is done, does that present an opportunity then?
We do, Oliver. It's one of our favorite parts of the market, right? Investment-grade corporate bonds. On average, if you look at the whole index of investment-grade corporates, you're getting a yield of around 6.3% or so. So that's just attractive from a kind of time series, long-term standpoint. These are levels we haven't seen since before the financial crisis. Another reason why we like them is the slope of the investment-grade curve is positive, meaning investors are earning more and more as they go to intermediate and longer-term bonds. I think that's important because there's sort of this investor psychology when you look at the treasury curve.
Fading a bit more.
Nature that we see that.
Oh, well, I was hoping that we'd close closer to 41.75. Nike at the highs of the day. Looking for a follow-through tomorrow on Nike, a follow-through day. Amazon having a good day. Nice follow-through on Amazon, closing near the highs of the session, Amazon. So that's really good. We got some big buyers of calls at the 115 strike. And looking very strong. A couple of block trades as well. Amazon. Google, we got a 300,000 share block on Google. Google at 124.51, right here, right at current price. That was a little earlier. Fubo, Nikola. All right, VIX spiking up now.
Or whatever, so you could argue that, well, maybe it's priced in at this point, and if yields can begin to kind of come in a little bit, then maybe that leads to perhaps some money flow to a sector like that. But of course, technology in this digital age and basically the market cap structure that we have with those top 10 holdings there, that's going to be very important. And Oliver, I'm sure you talked to a lot of guests that basically question whether the market can continue to rally if we don't have participation from mega cap tech. Now, the earnings were not that bad. It's just the investors are really sensitive to any suggestions that there was some slowing growth, that being in cloud primarily, and they took it out of them. So we're still kind of doing a little bit of price discovery and a little bit of near-term technical bounce here.
All right, so you saw Capital One Finance. All right, so Capital One, thank you, John. Capital One. Oh, that looks good. JP Morgan, Morgan Stanley.
valuations go to 1. But that Russell's been the one that's been kind of in the coal mine. Thanks for the contribution, guys. Great combo. Nate Peterson, Colin Martin, spot on stuff. Nice work, guys. Coming up, closing bell. Then we've got a risk getting Pinterest. Be right back.
All right, what's Visa doing? Visa back above the 200-day. Visa block SQ, nothing there. MasterCard, nice 3-candle reversal on MasterCard. Okay, MasterCard, nice 3-candle reversal. Conoco, I keep saying Conoco. Capital One Finance, nice remove back above the 50-day. Capital One, Visa. Okay, what's American Express look like? American Express, hammer at the low. Okay, so we're fading a bit more. S&P. Amazon, holding the highs pretty well. That's looking pretty good. With seconds to go for the closing bell. A close above 41.65, that'd be good. Okay, we're closing above 41.65. 41.65. All right, so a valiant effort to try to get above 41.75. We need to see more calls building it further out in time and higher in price. For now, we got some puts to monetize and price action drove a bit higher. Okay, folks, this is Because of Any coming to you from theclosingprint.com at the closing bell, 4 o'clock p.m. on the East Coast. It's Monday, the 30th of October, tomorrow, Halloween. Have a great evening, everyone. Take care, and we'll see you in the AM. Take care.